Welcome back to Talkbox. This week, CNBC is hitting the economic and money issues in three critical counties to the election. The road trip kicking off in Erie County, Pennsylvania. And that's where we find senior national correspondent Brian Sullivan. Brian, why Erie?
Why not? To quote Animal House. No, I'm kidding. I mean, this may be the most important county in the most important state, Andrew. Erie County really is amazing. Tucked apart, of course, against Lake Erie. Erie County has gone for every president since 1980 except for 1988. They were Republican. They went all in on Barack Obama. They swung huge back to Trump in 2016 and then did another U-turn and went for Biden in 2020, and the margins are razor thin. You've got a county with over 100,000 people, but the margin of victory in the votes was about 1,500 in 2020 and about 2,000 in 2016. It's literally a couple of people in this town, in this county, that may help decide the entire state of Pennsylvania. And if you win Pennsylvania, it's not a guarantee, as you know, but the math certainly is very helpful if you can pick up Pennsylvania's 20 electoral votes. So let's talk about where we are, right? We're going to separate the politics, focus more on the people and the economics. Erie, obviously, is a city that's been in transition for a while, manufacturing, a little more educational, a little more healthcare now. Let's take a look. So the unemployment rate pre-COVID, which is probably the best way to look at it, December 2019 was 4.5%. COVID spike, it's come back down. Now it's at 4.3%. So a slight improvement in the job situation there. You've got a median household income about $60,100 as well. But we talked about this transition idea, guys, not the energy transition, but a bigger multi-decade transition from manufacturing to more knowledge-based and small business economies. In fact, yesterday we met with a small business owner. It's Erie Woodworks, Armando Reyes, and he sort of explained to us how he sees the transition of this swing town.
We had paper mills, we've had all kinds of those typical large industry Rust Belt town things. And now it's really had to pivot. Small businesses are coming in, filling up all the empty warehouses, new restaurants, tech businesses, anything that we can sort of innovate in a new economy.
Yeah, so we've gone, guys, from, big factories. There still are some, Wabtec making locomotives, a new electric locomotive about a mile that way. But there's also a huge educational presence. You've got hospitals. Some people call it EDS to meds. It is a city and county in transition, but one that will also potentially transition the White House.
What is... I don't know if you've done any man-on-the-street interviews there yet, Brian, and when you got into town, but do you have a sense of which way this place is leaning? And I don't know, maybe if Elon Musk's petition plans are having an impact?
All right, so we got in about 10:30 yesterday morning. I've been here before, and I spent the weekend, by the way, in Wisconsin. So, yeah, we didn't get a whole lot of time, but we talked to Armando. We met with a number of people, just kind of randomly walked in. You know me. Most don't want to go on camera. You got to understand that. It's kind of highly sensitive, 15 days. All right, so what did I see? So we drove around. My producer and I drove around just literally block by block. And I would say that in the city of Erie, because remember, it's the county, and then you've got the city. In the city of Erie, I would say it was 7-1 Harris to Trump. Signs just on a number of different blocks, 20 or so we drove down. But if you go out of the city, driving into the city of Erie, it's 7-1 Trump to Harris. So it's really kind of the differentiation between Erie, the city. This is also the city. We talked to a plumber yesterday, head of his local union, great guy. He's basically saying we're a union Democrat. We're a jobs Democrat. So I think that the economy and inflation and immigration as it pertains to jobs going to be critical. Erie today, we're going to go all around the city today, and then tomorrow, poor Patrick Manning, my producer, has to ride with me in our minivan, 6 hours. We're going to drive from here, roll through Ohio, maybe stop in Cedar Fair, I don't know, ride a roller coaster, and then end up in what is arguably the most important county in Michigan, another key state, and that is Kent County, with the county seat of Grand Rapids, where that again could turn the entire. It's really only a couple of counties in a couple of states, guys, that are going to move this entire thing. It's really bonkers if you think about it.
I'm just really glad now I can see where Pennsylvania hits Lake Erie. That was eye-opening for me. Just there, Brian. So it's
said
right.
Sarcasm. It's too early.
No, I'm not kidding. But I must be horrible at, because I was like Lake Erie, Ohio. So it's basically the top northeast corner of Ohio kind of touches Erie County, right? Of Pennsylvania.
Yeah, and so it's a weird mix because we're 100 miles from Buffalo, 100 miles from Cleveland, and 100 miles from Pittsburgh. So you walk around yesterday, it's football Sunday, and about a third of the people are in Bills jerseys, a third in Steelers jerseys, and a third in Cleveland
weird.
Browns jerseys. I would ignore that third. And by the way, there was a former president by the name of Donald J. Trump who was actually down south in a place called Pittsburgh. Joe, I don't know if you saw that last night
see it.
at a Steelers game, and they were chanting. That was after his short-lived stint at a McDonald's.
I saw that, yeah. And instead of a streaker at the game running across the field, there was a young woman with a Trump sign, made it to the 50-yard line. I don't think she was actually tackled, but they ushered her off the field pretty quickly.
You had me at streaker, Joe. I mean, you never know what can happen later. Tune in all day long.
Streaking
we're already
is,
on TV on Worldwide
It's a
Exchange.
thing of the past, I think. Don't try it, Brian.
Nobody wants to see that. I
Nobody.
can assure you.
Nobody wants to see that. All right, my friend. So next, I saw you. We saw your next move. Be interesting to hear what's going on. Those are Pennsylvania and Michigan.
We're here today, though.
You are. But if you knew Michigan, if you knew Pennsylvania and Michigan, you could probably figure out what was going to happen. I think if you knew that.
And I spent the weekend all weekend in Wisconsin. I'm telling you, next week I'll know who's going to win this whole thing by the end of this week. I think.
Okay.
Cocky.
Very good. Thank you. See you.
Tell us when you figure it out. All right, when we come back, a key vote this week for Boeing workers that could end the month-old strike. We will talk about it. And later, Mark Cuban joins us. He hosted a town hall in Phoenix over the weekend with small business owners where he focused on Vice President Harris's economic plans. He will be our guest in just a little bit. Squawk Box will be right back.
Welcome back to Squawk Box. More than 80% of holiday travelers say they are changing their plans because of inflation. Bankrate survey finds nearly a third of people anticipate traveling fewer days than they would have otherwise, while 30% are picking less expensive accommodations and/or destinations. More than a quarter say they're driving instead of flying now, and another quarter are choosing cheaper activities. So an interesting sort of touch point on maybe how Americans feel about at least what's happened in the YOLO travel economy. Joe?
Coming up, Boeing shares rising this morning, finally, on hopes of a deal with workers. A vote expected midweek that could end that strike. We're going to talk about it after the break. As we head to the break, take a look at crypto, a little weaker this morning, but sitting around, Bitcoin anyway, sitting around a 6-month high at 68.3. Squawk Box will be right back.
November 26th.
Welcome back to Squawk Box. Boeing reaching a tentative deal which could end the strike after more than a month. Workers are set to vote on that strike, or I should say on that settlement, on Wednesday. It's the same day the company releases its third quarter results. And joining us right now for more on all this is Doug Harnedy. He's at Bernstein's Aerospace and Defense Senior Analyst. You look at this deal, you're looking at it from the perspective of investors. Is this a good deal? Up 35% across the board.
Well, look, I think what's important here, they've got to get this deal done. And I think this has been a real struggle. It's pretty much in line with what we were expecting on it. But I think you ultimately have to get it done. Kelly Ortberg's taken over. We've sort of looked at this situation at Boeing as in 3 stages. First, getting the strike resolved, the capital raise cleared. Second, we need to see a plan on how he really sees taking the company forward and getting it fully recovered. And finally, they have to execute. and you can't get to the plan unless you get this strike situation resolved. So, in our view, this had to get done. If this goes through, and it seems reasonable to us that it would, the 35% increase is not going to really change the dynamics or the financials of the company tremendously. They've got to get the deal done.
So does it change the margins though? No, not at all. It's got to.
Well, it will a little bit. So when you look at this, is all in Puget Sound. So it affects, it's the 737, it's 777, 767. And what it does do, you're looking at labor. Touch labor on an aircraft is on the order of 3 to 4%. So of total cost. So doing a raise like this over 4 years, yes, it will affect the margins, but I don't think it's going to be dramatic. And also, they are putting in place a cost reduction plan to reduce headcount overall by 10%. That will offset some of this, but I don't think it's a huge effect on margin.
Okay, Doug, we're looking at a stock that's, you can't see it, but on the screen next to you, this stock is down nearly 40% this year. It sits at about $160 right now. What do you think the fair value for this company is today?
Well, our target is 195, and that's a 12-month target. Now, the challenge they have is that you're looking at cash pressure here because they've got $45 billion in net debt. So that's going to be coming out. They're going to have to pay that down over the next few years. So that means very little cash back to shareholders. But when we look at this on an EV to EBITDA basis long term, and we get to 195 price target, but I want to just stress that I think the short term is very interesting. And by short term, I mean the next 6 to 9 months. It gets more difficult when you see, can they really execute? And by execute, I mean get production rates up on the MAX first, get production rates up on the 787. That's going to be a key thing here.
Hey, Doug, you keep saying they have to get this done. The stock is up 3.25% on the idea that this vote is coming Wednesday. What happens if the union votes it down?
Well, that's always possible. I think I would view that negatively. I think, what they've proposed here, I think it fits right in with the model that we've done. And at this stage, it would be an awfully long strike as well for the IAM if this went more than 6 weeks. So, I would say it's negative if they can't get it done.
Well, I figured that, but negative to the tune of how much in the stock?
Well, you're probably maybe going right back where you were before today. I mean, we're looking at some significant upside today. But again, by not getting it done, that doesn't, it's a question of timing. Will this take 1 more week? That's probably not a big deal. Historically, we've found when you have a strike situation like this, and there have been 4 of them, IAM strikes, it takes about 2 to 3 months to get production back up to somewhat of a planned level. So, whether it lasts 1 more week, 2 more weeks, you're still going to see that effect over 2 to 3 months. I think it's just being able to look ahead at the horizon, seeing that you're going to clear this. We'll see on Wednesday. I think the odds are this will go through, but it's hard. It's always hard to predict.
Doug, we will see what happens on Wednesday, and I'm sure we'll talk to you a lot more about it after that. Thank you. Appreciate it.
Thank you.
Coming up, Kevin Hassett and Jason Furman square off on the economy, the election, and more. That's next. And check out the futures, still in the red for the start of the week after what has been a very solid couple of months, but down today. Squawk Box will be right back.
Asana.com.
Watching the markets this morning, and as we continue to see pressure being put on the futures this morning, we're also continuing to watch the Treasury market. Right now, if you look at the 10-year, you're looking at 4.136%. That yield continues to climb. On Friday, it closed at its highest level since July, and those yields are pushing higher again this morning. Andrew?
Meantime, Cigna has now revived efforts to combine with smaller rival Humana. This after merger talks fell apart, you might remember, late last year. According to a Bloomberg report saying the companies have now held informal discussions recently about a potential deal. The price might actually make a little bit more sense than it used to. A potential Cigna deal would look to close the sale of the Medicare Advantage business in the coming weeks before committing to any other transactions, though. That would potentially remove overlap with Humana. Of course, all of this, though, likely to draw scrutiny from antitrust regulators, no matter who is the next president of the United States.
Berkshire Hathaway is increasing its stake in SiriusXM, buying 1.6 million more shares of the satellite operator. And the conglomerate now holds just over 110 million Sirius shares, roughly 32% of the company's stock. That makes it Berkshire's 15th largest position. Sirius stock, though, is down about 50% for the year. But still, it has its demise was greatly exaggerated. It's almost a $10 billion company, $9 billion company, and we were talking about it earlier. I don't know. There's so many other ways that for a while they weren't going to let those two merge, and it was like they're lucky. The future of SiriusXM looked in doubt with all these other services, but there it is. It reminds me of a cable bundle, and I'm surprised people don't cut the cord, because I don't. And as I said, I pay for four different cards, and when it goes out, I notice it. It's troubling.
For me, it's the news offerings that they have that you can't replicate anywhere.
Right, exactly. Third quarter earnings season is, as you know, underway. Many big tech companies still going to report. Joining us now for a check on the sector is Ray Wong, Constellation Research Principal Analyst, Founder, and Chairman. And there are some big themes, Ray, that you point out. AI may be one of the biggest. Wasn't always. It used to be cloud and ads and things like that. But it's AI. And is it long in the tooth or got a long way to go, do you think?
You know, Joe, this one is here for a while. It's not going to change, and it's really because we're just at the beginning of the AI build-out. And one of the big places to see where that build-out is happening is really in the NVIDIA earnings. On the back end, what you're actually seeing is NVIDIA is seeing about $106.2 billion in capital spending in the first half of the year, and they're expecting another $60 billion in Q3. Who's paying for this? Well, it's actually the big tech companies like Google and Microsoft that have massive CapEx on their books, and that's really what's driving a lot of this. And the other piece that's interesting is that Blackwell is sold out, which means all those orders are still not necessarily going to be fulfilled in time for these big tech companies to be able to build out their AI infrastructure.
For those companies that are the big customers of NVIDIA, they're spending a lot of money. When does that pay off? The big companies are doing great already, and they don't want to get behind other big companies. But all that money that they're spending, it seems initially it's just expenses with no payoff.
It feels that way. It's like at the beginning when Amazon was doing the build out to be able to deliver on commerce, everybody feels that there's a need to do that. I mean, take Google, for example, or Alphabet. They did $50 billion in revenue in a quarter, but they did spend $13 billion in CapEx, right? Microsoft had a similar kind of footprint where they're spending $19 billion in CapEx, right? That is some big numbers, and it has investors worried. But then again, in AI, it's different than the internet, right? The internet was open. It was decentralized. Lots of winners and things were cheaper. In AI, it is closed. It is not, it's centralized. It's more expensive, and only a few players are going to win.
Do you own all Mag 7? Do you own all of them? Or is there one you don't? What, you do?
I do own all Mag 7.
You own all of them. And do you have, could you rank them?
Yeah, I can rank them. Actually, for me right now, I think Amazon is probably the one. Well, Nvidia's sitting on top, then Amazon. Then, of course, looking at the opportunities, it's Microsoft and Google because of the AI play. Apple because they've got good services on the back end. Tesla's a wild card, mostly because of the robots on the Optimus side, as well as the mega packs. I think that energy piece is important, but the robot piece, I think, is bigger than the robo-taxi in terms of those robots in the field. And, of course, if you're looking at Meta, actually, the reason I put Meta further down is because we're going to see how long it takes them to get the LLMs and the open source portions to actually pick up, but they're doing really well as well.
Some of the other themes that you mentioned, obviously ad tech, and then I think, well, ad tech is dependent on AI. Even the cloud, which we've talked about for a decade, even longer, and that's an important business. That's informed, and how it does is informed by AI as well. So you can't really take it out of any of those. But on their own, what about ad tech? You have to know how the economy is going to do globally to be able to make some determinations about that business.
You know, Joe, that is one part of it and one aspect. Google and Meta benefit because they're the top two players. But you got to remember, this is really interesting. Google won on search, Meta won on social, and Amazon won on commerce, but they all have digital ads. And that's the interesting piece. So Google is twice as big as Meta, and Meta at this point is twice as big as Amazon. But the next player to compete is nowhere close. Right? They're not even at the same level in terms of the amount of revenue. And so with the political season in place, Google and Meta are going to benefit a lot more than Amazon, but Amazon has been growing their ad business fairly consistently, about 19 to 23% every quarter. And that's really where we're going to see some massive shifts in the marketplace, because now you got commerce, you got ads, and of course they have subscriptions and membership. So Amazon has the complete digital monetization models.
We don't have time to talk about regulatory headwinds, but since no one is ever going to be able to merge again, and since everybody's going to be broken up, it could be the MAG 20 or MAG 30 eventually.
I think it's going to be around for a while, but the challenge is we just need regulatory relief. We need regulatory relief, and it might happen in the next imminent. Well, IPOs are stuck. And of course, we can't do mergers, and that's why everything is.
We're going to break up everyone. How many would there be? So we're going to MAG MAG 21? Would each one get broken into 3?
Let's go with MAG 50.
I couldn't break them all into 3. Some would be broken into 2. Some probably broken into 4 or 5.
So MAG 20 is probably not a bad guess. MAG 30.
MAG 20 it is.
Yeah, MAG 20. Hey, at least give us more to talk about. That'd be expanding breadth for the advance.
Diversification.
It's good for the market. Good for the market, right? All right, Ray, thank you.
Hey, thanks a lot.
All right, very well.
Okay, coming up on the other side of this, Kevin Hassett and Jason Furman are going to join us. We're going to talk the Fed, the economy, and so much more. And then later in the show, Mark Cuban will be with us. Got a lot to talk to him about. Squawk Box coming back right after this.
Welcome back, everybody. Former President Trump and Vice President Harris continue to push their economic agendas on the campaign trail as the election quickly approaches. Joining us right now is Jason Furman. He served as the chairman of the Council of Economic Advisors under President Obama. He is now a professor at Harvard's Kennedy School of Government. And Kevin Hassett, who served as chairman of the Council of Economic Advisors under President Trump, who is now a distinguished visiting fellow at Stanford's Hoover Institution. And gentlemen, welcome to both of you. We are just a couple of weeks away from the election. The economy is front and center. It's listed as one of the top issues for just about every voter out there. The perception between what people in the economics world look at the economy versus what the voters think has been pretty wide. So let me ask you each what you think of the economy right now, how you would grade it. And Jason, I'll start with you.
It's pretty amazing. You don't see another advanced economy like this. We'll probably get something like a 3% growth rate in the data for the last quarter. That follows 3% the quarter before. Inflation's come down, the unemployment rate's come down the last 2 months. So it's hard not to be enthusiastic about this macroeconomy. Now, as a lot of causes, I'm not saying this is all Biden by any stretch, but it's quite good.
Kevin, how would you grade the economy?
Yeah, I've been very much surprised on the upside since the middle of last summer. It was Jason and I were emailing back and forth that he was sort of better about the beginning of the fall than I was. He thought that the Fed moved too much, and I didn't. But I think that Jason's right, that the economy is showing strength. And I think that the previous segment with Joe highlighted one of the key contributing factors. The last GDP release we had equipment investment up about 10%. If you look at cyclical indicators, equipment investment is one of the main ones. It tends to go up a lot of booms and down a lot of busts. And for it to be going up 10%, a lot of that is all this NVIDIA stuff and AI investment. But with capital spending going up that much and GDP now running in the threes, we're looking at a relatively strong economy, at least in the business sector.
And yet the voters seem to disagree. Polling at CBS done earlier this month showed that 6 out of 10 Americans actually rated this economy as either fairly bad or very bad. Only 1 in 10 said that it was very good. Why do you think that is? And we'll go ahead and start with Jason again.
Yeah, look, we had a lot of inflation. That inflation was quite bad. It got households into a deep hole in terms of prices outstripping wages. Now it's the opposite. Wages are outstripping prices. People are digging themselves out of that hole. But I get why they feel that way. And it's compounded by the fact that you always get, when there's inflation, people credit themselves for their wage gains. They blame the government for the price increases. And they don't see the two as lit, something that economists call money illusion. So it's some combination of reality, money illusion, and then things that probably have nothing to do with the economy that people are reacting to.
Well, how does this play out in the economy? And Kevin, maybe you can tackle, in the election, maybe you could tackle that side of things. If people aren't feeling like they have done well under this economy, what happens in 2 weeks?
Sure. Well, the history of it is there's a fellow named Ray Fair at Yale that's written a lot of papers on this. And I think they're actually pretty good papers, Jason. I've never talked to you about them, but I find his stuff pretty reliable. And generally, his evidence is that when the economy's strong, it's good for incumbents. And so I would say that if the strong top-line data that we're seeing overwhelm the negative effects of inflation and feeling like you're paying too much for gas and so on, then that on net would be a positive for Democrats. The one thing I can say, however, is that it not only matters like what's happening to prices, but which prices. And one of the things about this cycle is that, the things that people have to buy, especially if you're a family with kids, those are some of the things that have gone up the most in price. And that makes it so that the inflation is a good deal more painful because you can't substitute to something else. And so I think that the negative from inflation and the consumption shock associated with it is probably going to neutralize the positive from the 3% growth that we're seeing.
Jason, how about you? Does this reflect negatively on Kamala Harris? What does she do?
Look, the truth is, no matter how good the economy is, I wouldn't say you should base your vote on how good the economy is. As Kevin said, this has to do with things like developments in artificial intelligence. It has to do with the Fed, has to do with luck. The important questions are, what do things look like going forward? And what are the plans of the two? And, I have argued that I think that Donald Trump's plans are riskier. They're riskier in terms of what could happen on trade, what could happen on immigration, what could happen to the Fed, and fiscal policy, where just about every analysis I've seen has shown larger deficits under his plan. So I think it's this contrast going forward that is the most important, not looking at what's happened to growth or inflation in the past.
You guys tend to agree on a lot of things, but I know you disagree on which candidate you're supporting. So, Kevin, if Jason is convinced that it's better on trade, immigration, Fed, and fiscal analysis, what do you say back?
Right. Well, I disagree, of course, but I think that the risk analysis for Vice President Harris really depends on whether she really has changed her mind about banning fracking and offshore drilling and all the rest. That I think that she had those positions just a few months ago and has now sort of run towards the middle for the general election. And the point, I think, is that if she wins, then probably the Democrats control Congress. And if that's true, then what's she going to do when AOC leads a charge to ban fracking or to have the Green New Deal or to stack the Supreme Court, some of the things she supported in the past? And so I think that the risk analysis doesn't break as clearly as Jason might suggest.
Jason, how do you respond to that? Just ideas that if Kamala Harris has a Democratic Congress backing her, because there are breakdowns. Is this going to be a red wave, a blue wave? Is it going to be Kamala Harris with a Republican Congress? Is it going to be Donald Trump with a Democratic Congress? Risking out all of that, when we talk to people on Wall Street, most of them say, as long as it's not a red wave or a blue wave, they'd be okay with that. How do you feel about those things?
Yeah, first of all, I think divided government, either which way, can actually be deficit increasing, where each party trades their priorities for the other priorities. Republicans get defense increases, Democrats get non-defense increases, Republicans get business tax cuts, Democrats get tax cuts for children. So I'm not sure that Wall Street is right about divided government when it comes to our fiscal situation. But to go back to what Kevin said on, let's say fracking, for example, I'm not worried about that in the slightest. That was a position she took 4 years ago. She hasn't taken it at all when she's in the White House. If she wins, she's going to be running for re-election in 4 years and going to need to win Pennsylvania. If she has 50 votes in the Senate, at least one of them is going to dissent from fracking. I'm not, she's talked about in all the Gulf energy strategy of all the risks I'm worried about with her. Some of the more extreme statements she made 4 or 5 years ago. I don't know if she meant them then. I don't know what's in her heart now. I know what her incentives and constraints are. No way that will happen.
One thing, Judd Gregg, the former senator and governor, has pointed out that he thinks one of the biggest issues is retaining the filibuster as it stands. He thinks if that falls, that is a significantly important thing that actually changes our entire frame of government and how we work. What would you think about that?
But I would say, just in response to what Jason just said, that for me is the biggest risk. If you go back and look, like if we didn't have Joe Manchin and Christian Sinema, then we would have lost the filibuster, and now we don't have them. And so the question is that if the Democrats control the Senate, is there somebody after that that's going to step up and take care of it or not? And I think it's a serious risk, because I think if you had the filibuster start to stack the Supreme Court, then you've seen what's happened in Mexico, and I think it could be something like that happens here as well.
Jason, quick last word?
Yes, I'm just not that worried about that. I'm a little bit more worried that no one's taking our fiscal situation seriously enough, but one of these candidates is taking it much, much less seriously than the other. And that, to me, is a real likely thing to happen.
All right, Jason, Kevin, thank you both for joining us today.
Thank you.
Thank you.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, China's central bank is cutting its benchmark lending rate in a further bid to revive the country's economy. China has seen a troubled property sector lately. The one-year loan prime rate was lowered by 25 basis points to 3.1%. The 5-year rate was cut by that same margin. Hedge fund Starboard Value taking a stake in Band-Aid and Tylenol maker Kenvue. That's according to people familiar with the matter who spoke to CNBC. Kenvue was spun out of Johnson & Johnson last year. The Wall Street Journal says Starboard wants Kenvue to make changes to increase its stock price. Don't miss an interview with Starboard CEO Jeff Smith. That's tomorrow at 9:30 a.m. Eastern Time on Squawk on the Street. And AI search engine startup Perplexity AI looking to more than double its valuation to about $9 billion in its next funding round. We're told the company is looking to raise about $500 million in new funding, although that could change that amount. AI startups are notorious for burning through cash. Perplexity was last valued at $3 billion in June. It started the year valued at 1/6 of that amount.
Meantime, take a look at futures right now. On this Monday morning, we're going to open down on the Dow, off about 116, 117 points. The NASDAQ down about 130 points. The S&P 500 off about 22 points. I'll show you treasuries as well. The 10-year note sitting just at about 4.132. The 2-year at 3.985, just hovering under 4 there. I want to get down to the New York Stock Exchange, where our good friend Mike Santoli is standing by. What are you looking at, Mike?
Yeah, Andrew, backing off from record highs just a little bit this morning, although take a look at the S&P 500 year to date. It's obviously a bull market, a pretty persistent one, up 6 weeks in a row, up 10 months out of 11. It's become a little bit more hard fought since mid-July. I keep pointing out we're only up a few percent since that mid-July peak. But you see this angle recently has become a little more of a pretty steady grind higher. A couple things to keep in mind. Cyclical leadership confirms that it's a pretty good economic message being sent by the S&P 500. Last week on a short-term tactical basis, a lot of short squeezes, a lot of the more speculative stuff starting to run. That sometimes happens when a rally matures. Corporate insiders have picked up their selling, so maybe time for a rest. Also, Friday was an options expiration, and often the market can kind of move a little bit more freely and get a little bit jumpier after that happens, at least in the ensuing week. Take a look here at the equal-weighted S&P 500 compared to the Russell 2000 small cap index. So much talk about the broadening out of the market from that concentrated leadership we had in the first half of the year. It has happened, but it's not synonymous with small cap stocks leading the way. The equal weight S&P, as you can see, is really pulled away from small caps. Russell 2000 total market cap is like 6 or 7% maybe of overall U.S. market value, so it's not necessarily decisive, although it has started to run here. It is going to do well if cyclicals and financials do well and the Fed cuts rates and yields stay low, but I don't think it's really got veto power over whether this is a healthy bull market or not. Finally, S&P 500 over 5 years relative to gold. Gold keeps clicking to new highs. You can kind of name your narrative on why that is. Obviously, it's a lot of central bank buying, and maybe people are concerned about deficits or geopolitical stuff. But what you see interesting to me is this angle is exactly the same pretty much as the S&P 500 in the last few months. So a lot of assets are going up in value in a similar fashion right now, no matter their underlying character, Andrew.
Okay. Mike, thank you. Appreciate it. We got a lot more coming up in just a moment. Boeing's more than month-long strike now could come to an end this week, but even if machinists vote yes on the latest deal, the jetmaker doesn't have an easy road back to business as usual. We're going to talk about what that road could look like ahead. And a little later this hour, billionaire investor Mark Cuban is going to join us on the race for the White House. Stay tuned. You're watching Squawk, and this is CNBC.
Tens of thousands of striking Boeing machinists are set to vote on a new contract proposal on Wednesday, which is the same day the company is going to report third quarter results. The Boeing workers walked off the job last month. The latest deal would see employee wages rise 35% over 4 years, and it also includes thousands of dollars for bonuses and 401k contributions. Joining us now on the corporate fallout from the strike, Eric Desenhall, Resources Chair, and you've watched a lot of these crises at different companies over the years. Eric, are we at a moment of clarity? And a lot of times, that comes from a different type of crisis, but when something hits bottom, there are some telltale signs. There's a new CEO. There's an acknowledgement that money's going to have to be raised through some new offerings and maybe some asset dispositions. Not hearing quite as much from the media. That's usually a good sign if the media loses interest in a story. So are all those things indicative of a bottom?
I think that what we're seeing is really a step in the right direction. I mean, when we talked a few minutes ago, one of the things we talked about is the need to sell assets and resolve the strike. These seem to be going in the right direction. These things are part of the cocktail. And generally, when the media lose interest in play-by-play, things are very good. I mean, look, the solution to crises are usually very boring. They are things like selling assets, raising money, government intervention, getting new contracts. They're the things that are not particularly sexy. And I think that these two pending situations seem to be very good steps in the right direction.
The company sort of stabilizing and reaching a bottom is different than whether the stock hits a bottom or is actually ready to recover. And after all, there are going to be more shares outstanding, so that's dilutive. I don't know how the public perception is going to change. I would think if wages go up, that margins could be adversely impacted. Although I don't know if labor is the biggest expense at Boeing at this point, but a stable company doesn't mean the stock's headed back to $250.
No, those are two very, very different things. I mean, I can tell you one thing, that public confidence is not encouraged by constant coverage and this kind of orgy of head rolling that seems to accompany modern crises, that the solution seems to be firing CEOs. I mean, at some point, you have to let somebody do their job, succeed or fail. And generally, I think when the public starts to become a bit bored, you have a chance to recover, as opposed for this expectation that someone's going to come along and pull a magic rabbit out of a hat.
So, and it's a constant concern for Boeing. And they didn't just make a product; they make something where we need safety across the board. All U.S. companies, whatever, if you make drugs, automobiles, whatever it is. But few companies are at such a risk for a major event where there's a huge loss of human life if there's a safety issue, and you're still trying to have the most profitable company that you can safely have. So it's a constant fine line that Boeing has to walk.
Well, we always divide crises, at least when we teach MBA students, between the chronic and the catastrophic. The problem you have with the airline industry is the attention it gets tends to be triggered by something catastrophic. We memorialize in our brains catastrophic incidents or the potential of catastrophic incidents, whereas a drug company that makes a drug that occasionally has side effects that you anticipate, this is more episodic and chronic than it is catastrophic. But I think when you have an airplane, I think we all know what people fear, and that's what drove this into the news at the forefront at the beginning.
So it's going to be if the strike is settled, then we go back to what you're hoping for, or what you think the company is hoping for, and that's a boring maybe singles and doubles, get
That's right.
production levels up a little bit
And don't
more.
have accidents.
No accidents, no more software issues for pilots, no more, doors popping off, or what was, I guess they said it wasn't a door, but none of those issues are acceptable at this point. Can Ortberg accomplish that?
Well, I mean, I certainly think that by not allowing Ortberg to accomplish it, that's not good. So at some point, you have to let a CEO give it a shot. And any safety-related crises I've ever been involved with tend to be resolved by not having those bad things happen and not having attention being driven to the company. Safety-related incidents tend to be the catalyst for further examinations of culture, of how the company is structured, and I think that'll go a long way. The only question mark I have, and I can't answer it, is whether or not the resolution of the strike will be financially doable. But that's something people who know more about finance than I do will have to answer.
But also, there were the two catastrophic events with Boeing, but then it was just a drip, 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 drip. Some things didn't even result in any actual occurrences. It was just reported, oh no, we found another, structural weakness in the fuselage. It's, how do you stop that? And how does Ortberg, I can't imagine it'd have to be a whole new culture. You'd have to.
Yeah, but new cultures take time. I mean, it's not like a new CEO comes in and says, a bad culture, go away. I think it takes time, and so the lack of cinematic episodes, plus these boring sort of managerial operational steps. I mean, these are things that are part of the cocktail that get you closer to boring your way out of the news.
Very good. All right, Eric. Thank you.
Thank you.
Do you send your comments to Boeing? If you get paid for helping, I guess. You don't just write a letter.
I have no involvement with Boeing whatsoever, or I couldn't be able to talk to. But if they'd like to, if they think anything I have to say is profound, I imagine they can Google it.
You're in the book, okay.
In the book.
Yeah.
That's what you'd say 25 years ago.
In the yellow pages.
Yeah.
They can look you up in the if you get your reading glasses and find you.
Go find the 9X yellow pages.
Exactly. They don't even come. I used to be so
That existed
excited.
25 years ago.
When the new phone books would come, I was so excited.
All right, when we come back, we'll get you up to speed on the latest developments in the Middle East. Then investor and entrepreneur Mark Cuban will join us fresh from the presidential campaign trail. Stay tuned, you're watching Squawk Box, and this is CNBC.
Welcome back to Squawk Box. Beautiful shot live there of the Capitol right now. The future's looking lower this morning on this Monday morning. Dow off about 100 points, 103 points. NASDAQ looking to open down about 107 points. The S&P 500 off, call it 20 points.
Some of the latest headlines out of the Middle East: Israel bombing branches of a Hezbollah-run financial institution in Lebanon that Israel says is used to fund attacks. Though many ordinary people also keep their savings there, there were no reports of casualties. Meantime, Palestinian health officials said 18 people were killed in fighting in the northern Gaza Strip and 8 elsewhere in the territory. Israel intensifying its campaigns in Gaza and Lebanon in the days after it killed Hamas's leader, and many are still expecting retaliation on Iran for a missile barrage that it fired at Israel on October 1st. Joining us right now on the conflicts is former Trump administration Deputy National Security Advisor Victoria Coates. She's now National Security and Foreign Policy Vice President at the Heritage Foundation. And Victoria, I guess one of the things we left out was this attack on Bibi Netanyahu's Caesarea home over the weekend as well. He wasn't injured, but that was a pretty close call, I think, by most people watching.
Yeah, Becky, it's good to be with you. This really shows how personal this war has become, and, it is a direct tit for tat. As you just mentioned, the Israelis caught Yahya Sinwar, the head of Hamas, last week in a huge blow to Hamas. And obviously, they've taken out the leadership of Hezbollah as well. So this is, as I said, personal. Everyone, I think, is pleased that the prime minister wasn't hurt, but it's a very, very dicey situation.
What does Sinwar's death mean, just in terms of what might come next with this? What are the potential possibilities?
Well, it really undermines Hamas's ability to function as a fighting force, but also as a political force, because that was part of what he was responsible for. And so there's discussion that the leadership of Hamas will be moved out of Gaza altogether, probably to Doha, where a number of their senior surviving people are living at this point. But that makes it very, very difficult to control the situation on the ground. So Hamas is really decapitated. It's sort of time for decision for the people, Palestinians living in Gaza, about what kind of life they want to lead. Prime Minister Netanyahu kind of laid out terms last week. Lay down your arms, surrender, you will be spared, release the hostages. That's how we can bring this thing to an end.
If that were to happen, if they laid down arms, the hostages were released, would you still expect and anticipate a retaliatory strike on Iran?
Well, I think that's something the Israelis have to weigh out, because both the strike from Iran in April and then the one, as you said, on October 1st, that's a huge escalation. Iran had not attacked Israel directly before, so they're going to have to do something. And the question is what they want to hit, whether they want to wait until the American election. These things can go on for a couple of months before a direct action is taken. That's what happened in January of 2020 with the Soleimani strike. That was a good 6-7 weeks after the attack that inspired it. So I think for Israel, it really is going to be a sort of an opportunity again for them, whether they see a strike that would be advantageous for them, or if they think that it would be too escalatory and that they don't want to risk a wider regional war.
I think that's what the difficulty is. I mean, the idea of wanting to be able to make progress on peace talks and returning the hostages, but then also wanting to retaliate. They don't seem like they necessarily could commingle.
No, and that's really their dilemma. I mean, it's been over a year now that we've had this kind of slow motion grinding hostage situation that is so cruel. And there are 101 of them, some 50 may still be alive, including some Americans. And so, getting that situation resolved has to be a top priority. But at the same time, as I said, you can't allow the Iranians to normalize firing 181 ballistic missiles at Israel. There has to be some kind of response. The question is when.
The election here in the United States 2 weeks away, you hinted at the idea that there could be something where we wait to see response after that election. Does it matter who wins in that election in terms of what Israel might or how it might respond?
I think it does. I mean, there is certainly a very strong perception that the Trump administration was more aggressively supportive of Israel. We had the leak of the intelligence documents over the weekend, you know, and I don't have a crystal ball, Becky. I can't tell you what's going to happen in the future, but I can tell you that never happened in the first Trump term. And that, I think, is, you know, something that will shape Israeli calculus if they think they're more likely to get a more robust support from a future Trump administration. That might well behoove them to wait for that and not sort of upset the apple cart politically in the United States in the interim.
Victoria, thank you.
Thank you.
Okay. Coming up in just a moment, billionaire investor Mark Cuban. He's been out stumping for Vice President Kamala Harris. He's going to join us live right after the break. Stay tuned. You're watching Squawk, and this is CNBC.
Welcome back to Squawk Box, everybody. We've been watching the futures this morning. We've been in the red all morning, at times more than 100 points down for both the Dow and the NASDAQ. Now just below that, for the Dow at least, it's off by about 88 points. NASDAQ's down by 100. The S&P is down by about 20 points. Treasuries, we have seen higher yields. In fact, on Friday, the 10-year, the 20-year and the 30-year both closed at the highest level since July. See the 10-year this morning at 4.12, and the 2 years higher as well. Oil prices right now, looks like WTI is up by about 1.6%, just above $70 a barrel. Gold prices we've been watching as well. You can see right now that COMEX gold is up by about $23.40 to $2,753 an ounce. Over the year, that's up by 38%. And then finally, let's take a quick look at Bitcoin this morning. Above 68,248.
Cuba's electrical grid collapsed again yesterday, causing a fourth blackout in the last 48 hours. The national grid crashed around midday on Friday after the island's largest power plant shut down, leaving around 10 million people in the dark. It has collapsed repeatedly since then. The blackouts sparked several protests, which said were dispersed by security forces. And we have some, I think, some breaking news on Disney. Alex Sherman joins us now. There's more. Hey, Alex.
Joe, so two pieces of Disney breaking news right now. The first, that Mark Parker will be stepping off the board after 9 years, and he will be replaced as chairman of the board by James Gorman, the former CEO of Morgan Stanley. That's piece of news number one. Piece of news number two, Disney formally saying that it will announce Bob Iger's successor for CEO in early 2026. Now that is later than what I had previously reported. Disney had targeted a date of where they were looking at 2025. This will give the board even more time to make a robust selection of a new CEO for Bob Iger. Of course, this was a big issue. You can remember when Nelson Peltz took the stake, he pushed this idea of succession very hard. Disney has struggled with it. I apologize for the dog in the background. But this gives even more time for the company to make a new CEO. So early 2026 will be the new CEO candidate. January 2nd, 2025 is when Mark Parker will depart the board. He says in a release that has just been issued by the company that he's going to focus on other areas. I'm told that is Nike related. Of course, there's been a lot of struggles with Nike just naming a new CEO by itself.
Hey there, Alex. One question for you is, given the James Gorman moving into this chairman role, does that indicate that when Bob Iger steps down and the replacement is stepping up, that it would be unlikely for Bob Iger to move into a chairman-like role?
Yeah, so I don't think we know that yet. So another thing that I'm told is that no decision has been made with Bob Iger in terms of what happens when his contract runs out. Remember, his contract as CEO does not run out until December 31st, 2026. So if the new CEO is named in early 2026, that gives a series of months of runway there where Iger can sort of transition that new CEO. But it's possible that Bob Iger would then stick around on the board and maybe then be elevated to the chairman of the board. So we don't know that yet.
And James Gorman, just so everybody is aware, has been heading up the succession planning for Bob Iger, that committee, looking for his replacement too. Because of course James Gorman did such a good job at Morgan Stanley of setting up his succession planning too.
You know, one other thing that I'm told is that all four internal candidates, the leading internal candidates, so that's Disney Co-Entertainment Chairman Dana Waldman and Alan Bergman, that's ESPN President Jimmy Pitaro, and then the head of the Parks and Resorts, Josh D'Amaro. They've all recently met with the succession committee headed by James Gorman. Now, the board is looking at both internal and external candidates, but all along here, Disney insiders have thought the most likely candidates would be one of those internal candidates. They've all met recently with the board, and it's not the first time they've met with the board to talk about succession, but it is an indication that we are full on go here for the board to look for a new succession candidate. But I will say that when you push the date back to early 2026, this issue now is going to hover over the company for at least a year. I know I had talked to people that hoped a candidate would be named in early 2025 just to have some clarity on the issue.
This feels a little bit, and I wouldn't compare them necessarily, but if you remember, and both of you would remember, General Electric, when there was the succession sort of bake-off that was going on for, 2 years, year and a half, where everybody was racing to figure out who was going to take
the three?
Who was going to take the job. Immelt obviously got it. You had Nardelli,
McNerney,
and McNerney,
yeah.
And then they of course went everywhere. Alex, who in your mind right now is tipped at who would you handicap at the top of the list? I know you just gave a couple of names, but is it directionally? Do you have any sense? You know what? We are out of time, and we got Mark Cuban on the other side of this, so we are going to say goodbye to Alex for now. I'm sure we'll get back to him throughout the day as more news emerges on this very subject. But right now, we are just over 2 weeks until Election Day, and our next guest was out on the trail this weekend supporting Vice President Harris, and he found himself the online target of former President Trump. Joining us right now is billionaire investor and entrepreneur Mark Cuban. He's, of course, a minority owner of the Dallas Mavericks, co-founder of CostPlusDrugs.com. Mark, it's great to see you this morning.
Thanks for having me on.
A couple of things. I want to get to some of the things that Elon Musk, who's on the other side of you, the sort of dueling billionaires, if you will. But I want to start just with the polls and where this election stands. Clearly, your candidate was, at least it seemed, doing better than she was doing better a couple of weeks ago than she looks like she's doing today. If that's true, why do you think that's true?
Who knows? I mean, that was the regular season. This is the playoffs. It doesn't really matter. It's what happens going forward. And, you know, like every candidate always says, you got to play like you're 1 point behind. So that's what we're doing.
What do you think of the polls? And from your conversations inside the campaign, what do they think of the polls?
Just what I said. I mean, different polls have different results. Different people claim different weightings. You know, there's conversations. Are they weighting women enough? You know, is it the reverse of 2016 where the Harris voters are the shy voters and aren't communicating to polls or publicly? No, nobody really knows. And so really it comes down to get out the vote. And the crazy thing is it's the Harris campaign versus Elon, not even versus Trump.
You're a markets guy. What do you think of Polymarket? What do you think of some of the other marketplaces where people are effectively taking bets on this election? And again, what looks like a big move for former President Trump.
Well, let me first say I'm an indirect investor in Polymarket through a fund that I'm in, a crypto fund that I'm in. And I know that you're not supposed to be an American and bet on Polymarket. And so it's not really an indication, I think, of anything. And I don't really know what hedges are out there, so it's possible to, you know, bet on one side and not bet on the other. And from all indications, most of the money coming into Polymarket is foreign money, so I don't think it's an indication of anything.
Let's talk about Elon Musk. He's been critical of you. You've been critical of him. What do you make in particular of this weekend's new effort to get people to the polls, that he is using $1 million a day? He's offering up for those who effectively sign his petition and register to vote.
I mean, it's innovative and it's desperate. You know, you only do that because you think you have to, but, you know, using the sweepstakes is not a bad idea. Whether or not it'll work is a whole nother thing. It just as easily could backfire, but you don't know until you try.
Do you think it's legal?
I mean, I actually looked into it. I initially thought it might not have been, but as a sweepstakes, it looks like it may be. But from a FEC perspective, I have no idea.
Hey, Mark, I'm looking at an NBC article from our corporate parent that just said, I guess, at an Arizona town hall meeting, when you were asked about the possibility of taxing unrealized capital gains, you said if you really thought that the vice president would do that you'd campaign against her. So I guess that was a true comment you made. And then my follow-up
so what
question.
I said was, you know, I said it's not going to happen, absolutely not going to happen. If for some reason she lied about it, I would campaign against her so there wouldn't be a second term.
Okay. Then what I was going to ask you is, and I'm not going to go through, these are like, there's like 20 things, but I'll just pick out a couple that I think would be really scary. If she were to try to abolish the filibuster, if you knew she was going to do...
Yeah, I don't agree with that. Next.
And then how about free health care for all?
She doesn't talk about that. So here's exactly what she's talking about.
But there were some things she has said. I can pick out probably 10 things where
Joe, I go back to an interview.
You would say, yeah, I'd campaign against her. So what do you like if all these other things would cause you to... Okay.
I saw an interview with you with Donald Trump where he said he would tax the oil industry out of existence. You know, does he still support that? Doesn't feel like people change their mind.
But yeah.
Oh no, I'll send it to you if you want. But in any event, let's talk about healthcare. Particularly when I was in Phoenix, I was talking about the difference between Harris and Trump for small businesses. And I can go down through the list of things I love about her. First of all, 99.5% of businesses are small businesses. They're pass-through businesses. And she's been very, very clear that anybody making $400K or less, which is almost every pass-through business, their taxes are either going to stay the same or go down. And so that's one area where she has an advantage there. We don't have clarity from Trump. Number two is healthcare, right? She has been very, very specific that the PBMs, the pharmacy middlemen, are jacking up prices and having a negative impact on the cost of healthcare. And she's going to do something about it. And that's a conversation I've had directly with her. I know the impact it could have. It could turn into an immediate 20 to 30% savings for small businesses and for their employees, particularly the ones with high deductible plans. That's more than an offset for inflation, for households and for small businesses, because the reality is those the big pharmacy benefit managers aren't passing through the rebates on brands, are using specialty generics to jack up the price of generic medications. So all pricing for healthcare is distorted for small business. She has come out and talked about it. Donald Trump hasn't said a word. Number three, we've all talked about immigration. Both have said that any non-citizens that are illegal, they're both going to deport them. What they haven't talked about is how they're going to deal with deportation of law-abiding non-citizens. Donald Trump has got Stephen Miller, who said he wants mass deportations. I sat in front of restaurant owners and I asked them, what would it be like if all of a sudden you got a knock on your door and there was somebody from Stephen Miller's squad asking you for the names and addresses and immigration status of everybody that works for you? That's not how you can run a country. And so Kamala Harris has said she's going to have very specific procedures for law-abiding non-citizens for the processes they'll have to follow to either stay or leave. Yeah. You want that to be sane. You want that to be transparent. You want there to be a specific process for everybody to follow. You don't want Elian Gonzalez type scenarios. That is horrible for business. The other thing I said, and this isn't really as much small business as bigger business, is his Taiwan policy. He just came out a few days ago saying that if China went into Taiwan, he would tariff China 150 to 200%. Now, you know the most important company in the world is Taiwan Semiconductor. They literally control the destiny of NVIDIA, of Apple, the Mag 7, trillions of dollars of market cap. He literally turned that decision into a financial decision. That's insane. You cannot put at risk our entire technological advancement, our entire technological economy and the future of AI in this country as a tariff decision. That just doesn't work.
Mark, it was just an example of how both sides, I can never remember an election where both sides fall back on either, oh yeah, they don't really mean that, or, well, you know, it's going to be gridlock, so none of that stuff's really going to happen.
Joe, what did I say that had to do with either of those things? I told you specifically.
This is an election where both sides have to constantly distance themselves from they still support the candidate, but they distance themselves from certain parts of the candidate's platform.
Well, yeah, you don't have to agree with everything from any candidate.
It's just, I've never seen an election where both sides.
But Joe, what I'm talking, let's go back to what I was talking about. Well, let's go back to what I was talking about. You didn't address that at all.
You took my filibuster question to healthcare, so I don't. You know, that's your own.
Well, thing. No, you asked me specifically. What are the things about her that I agree with, that I support? I told you I didn't support the filibuster. I was asking what other things that she's proposed in the past would cause you to campaign against her if she went through with it. Yeah, I mean, look, what she did 4 years ago, just like Donald Trump and the oil thing. I mean, there's lots of things. You know, the candidates change over a period of years. That's one of the great things about Kamala Harris. She's not an ideologue. Okay. She is open-minded. That's why she's changed. Donald Trump thinks he knows everything. He doesn't change.
Well, let me ask you, Mark, do you think that she should be doing more interviews? And more importantly, do you think that she should be talking about how she has changed, what she has learned? Because in truth, oftentimes she's asked about how different she'll say, I'm going to be different than Biden, but she won't really explain what the difference is. Or she'll be asked about what she would have done differently in the past, and she won't give you actual, real examples. Or she'll be asked about things before, and she won't say, well, actually, I learned from this or that, and maybe we made mistakes, and actually that makes me a better candidate because of that. For whatever reason, inexplicably, at least to me, she doesn't, that is not the answer you hear. Oftentimes it's actually an answer about how consistent she believes that her perspective has been the entire time.
Yeah, I mean, I would handle some things differently, but there's still 2 weeks left, you know, and different stages of a campaign require different arguments. You know, she went from being at a favorability deficit, an awareness deficit, and, 12, 13 weeks ago, whatever it was, and being way behind Donald Trump, and now they're in a dead heat. So whatever she's doing, she's caught up. And now for these last couple of weeks, she'll make the determination how best to communicate. But I think it really comes down to get out the vote. Whatever she's doing to get out the vote, that's what matters. And I think that's why she's been going where she's been going and doing what she's doing.
Well, let me ask you about that. So she did an interview last week with Bret Baier. It was parodied actually over the weekend. I'm sure you saw it on SNL.
Yeah.
And the question is what she should be doing for these next 2 weeks. She's going to be doing an interview on NBC, I believe on Tuesday from Washington, D.C. Where do you believe she needs to be over the next, call it, 12 or 14 days?
The swing states, period, end of story. You get out the vote in the swing states, because if it's a difference of 5,000 people in any given state, you can bring 5,000 people in a rally or go out and be where there's undecideds and try to get them in the door and talk to them. That's where I would be. And that's what she's doing. And that's why she's had me and others going out to, Phoenix and Grand Rapids and La Crosse and Milwaukee, going out and talking, in my case, to small businesses.
Hey, Mark, what do you think happens if this is as close as the polls are suggesting that it will be? I don't know if we believe the polls or not, but if it does come down to a matter of a few thousand or maybe 10,000 votes over those very key districts that you just talked about in some very key swing states, what happens?
I think what happened in 2020.
Yeah,
same thing that happened in 2020.
And how does that play out?
I don't know. I mean, obviously there's a greater than zero chance that something crazy happens, but I hope not. And, if Donald Trump is going to claim it's not a fair election and, do whatever he does, at least he's not in office with the power to, try to force a January 6th-like situation.
If it's a close vote and it goes to Donald Trump, will Democrats behave the same?
Yeah, I'm not a Democrat. I mean, I won't be happy, but I'll accept it. I really don't care what Democrats do. I don't care what independent or Republicans do. I just want what's best for the country.
Hey, Mark, I have a question for you. It's a bit of a counterfactual, and it's something that I've always hypothesized about. But let me preface this by saying over the weekend, Nate Silver came out with a list of reasons he believes that former President Trump may win now. And one of the reasons he says explicitly as one of his 22 reasons, or 24 reasons, is Elon and Silicon Valley have created a permission structure for other wealthy elites to advocate for Trump explicitly and provided a new base of money and cultural influence. And my hypothetical counterfactual is, do you believe that the Biden administration could have changed all of this? I have a suspicion
the answer is
that
yes.
There was a massive mistake made about 3.5 years ago on behalf, partially, I imagine, of the unions, and that moment did a tremendous disservice to them, and that they have never not only recovered from that, but they've never even tried to recover from it.
Yeah, I agree. I mean, I think between Elizabeth Warren and Bernie Sanders and Joe Biden, the three of them really worked together very closely, and they believed in, the progressive approach. And I think that hurt them with Silicon Valley. I think the fact that Joe didn't talk to those folks either was a negative, but those days are behind us, and Kamala Harris is not Joe Biden. And, she shows it, her tax rates are different, her approach to healthcare is different. There's just so many differences. I think the biggest challenge that they've had, and to a certain extent continue to have, they're not great salespeople. And they're more about policy, where Trump is the exact opposite. He'll sell, sell, sell. He's the salesperson that'll say anything to try to close the deal, whether it's true or not. And, when I talk to the Harris campaign, they have a policy group that's going to drill down on everything. And that's just night and day different from what you're seeing from the Trump side.
Do you think if she wins, that she could actually have a relationship and embrace Elon Musk?
100% yes. I've had that conversation.
By the way, I'm a news guy. We all want the interview. I'd actually like to see her do. No, I'd actually like to see her do
literally, I've had the conversation. I've had the conversation with
I'd
their
like to
team.
see her do X and have a conversation with Elon Musk. I actually think that would actually be a fascinating.
No, I'll tell you exactly what not Kamala specifically, but her team. I'm like, I can try to facilitate a meeting with Elon, and they didn't trust the fact that he wouldn't go on X and just say something to distort the purpose of the meeting.
But you've advocated for it.
Yeah, for sure. Why not? Look, she's been very clear. She's going to put a Republican on in our where I'm spacing the word, but she's going to work with Republicans. She's going to be open-minded. She's not an ideologue, and so that's the key. She talks about it all the time. She wants to be a problem solver, and that is exactly what happens when I talk to her. We've talked about cutting the deficit. We've talked about using technology to increase efficiency. We've talked about machine learning and applications with data. She's not saying, no, that's not how we do things. Never has she said that. She's like, Mark, what is the best way to solve this problem? What do you have in mind? She may not always agree with me, but she's open to it.
Why do you think, one of the critiques, obviously, of former President Trump is around tariffs. And yet it's not clear that unto itself is landing, if you will.
No, it's not.
I wonder why. I asked because, by the way, if you remember, even last week, President Trump was out there saying that he had killed deer from going to Mexico, which was just not even true. It was just
he lied.
like factually untrue.
But that's who he is.
And yet that does. The question is, why doesn't that land?
Because they're so used to it. He's Pinocchio and his nose is so long it looks like a robe. It doesn't matter. No one pays attention to what he actually says. What actually happens, Andrew, he says something and then Joe comes in and explains what he really means. He never says what he really means, and it's unfortunate with the tariffs. That's part of what I was doing in Phoenix.
You're talking about me again. You're out on the campaign trail. I'm not. I mean,
no, I know.
I have to be here because we book you and let you talk for a half hour without anyone, opposed to you.
So
Joe,
come on, oppose me. Joe, oppose me all you want. I will hit you with facts every day.
I'm not out campaigning. I'm not a surrogate. I don't know who I'm voting for, Mark. So
Good. No, Joe, you know what? If you don't know who you're voting for, that's a great thing. I think that's beautiful.
There you go. Good. Thanks. I mean, Mark, we let you go on for a half hour. You're not. Maybe you will change someone's mind. I don't know. I've heard it all.
Joe,
before.
I've sat there in meetings, and I know I have. I sat in a meeting in Phoenix, and I said, I don't want to talk. I tell the campaign, I don't want to talk to people who already are voting for Kamala. I want to talk to people who are thinking they're voting for Trump or undecided.
Well, maybe you're changing some minds today. I don't know. You look at Twitter. I mean,
But the question
I'll be respectful and kind to you, but people think.
Don't be, Joe. I don't need you to be respectful and kind to me. Be rude. I don't care. I'll take any question you throw at me.
To that point, I'm actually one last thing.
Sure.
On Twitter, or X, what do you make of what comes up in the algo? I asked because Joe is right insofar as if I go to my For You page or what have you, yeah, there's a lot of critique. But the question is that because the site is an echo chamber? Is it not an echo chamber? What do you think?
Of course it is.
And you used to use it a lot. And you still do?
Of course. I use it a lot because people don't agree with me there. I used to be more on Threads, but everybody agrees with me there. There's no point on being there. So that's why I go to X. And yes, the algorithm reinforces it's an echo chamber. But also realize it wasn't all that long ago that Elon said he was going to republish the latest version of the algorithm. Guess what? He has not done that. His choice, his company. So, he gets to do whatever he wants on X. But yeah, I'm on X all the time, so I can argue with people and try to convince 1, 2, 3, 4, 5,000 voters over the course of the next 2 weeks, because that could be the difference in the election. I don't care if people are yelling at me, screaming at me, calling me names. Elon calls me a racist, a turd.
I think you must like it.
It's not that I like it. I know it's at stake.
Well, you must eat it up. If Trump's got a nose that's as long as a road, your skin, from what I see people say to you on Twitter, must be as thick as, from Boston to LA, Mark. And that's fine.
Yeah,
but you obviously enjoy what you're doing, and God bless you. You got $1 billion. You're still going to have a G650 after this election, so what the hell?
Yeah, it's what's best for the country. That's what I care about. And look, let me just add, if Trump wins, last time when he won, he asked me to help on healthcare, on PPE. I sat with Peter Navarro and helped him come up with a mask company and help them grow, and that was all domestic production. I'll do the same thing. I'm America first. first, that's the wrong way to put it. I am what's best for this country, country over party, country over all. I just think Kamala Harris, without any question in my mind, is the better candidate and the better president for this country.
Okay. Mark Cuban, thank you for joining us this morning. Appreciate it.
Thanks, guys.
Squawk Box is coming right back after this.
NBC.
All we have time for. Thanks for watching Squawk Box. Squawk on the Street. It's coming up after a break. See you tomorrow.
Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Coming off some all-time highs, 6 straight weekly wins for the S&P. That's the longest streak of the year. We go into a week of some heavy hitter industrial earnings. Futures are soft. Our roadmap begins with rally mode, those 6 weeks and counting. Why Goldman strategists say the era of big stock market gains might be nearing an end.
Plus shares of the J&J spinoff. It's a while now, but remember that Kenvue? It is Starboard Value amassing a significant stake in the company, or so we're told, and Disney's succession plans for Morgan Stanley CEO James Gorman, who's been on the board, going to become chairman of that company next year.
Let's begin with the markets in the midst of this 6-week win streak, as we said, Jim, and now we have some 21% of the S&P having reported so far.
Okay, I'm coming with a new thesis. I communicated that with the Investing Club members. We have this bizarre situation where going into earnings season, we've got this massive $200 billion in money that went to index funds. That is far ahead of what happened last year, and we're already there. So what's happening, you have the index funds sopping up the additional supply, and you just don't have a lot of sellers. Between the buybacks of the companies and the S&P, the buybacks obviously crunch, but the S&P's like crunching. You don't have a lot of stock trading. So you have like a Procter & Gamble, which could have been disappointing, ended up doing nothing. I just find that when you disappoint, you don't go down a lot.
You don't go down.
And when you do well, you soar.
So
that's an asymmetrical relationship.
That's a nice market to be an investor in.
Well, that's exactly what I'm talking. It's halcyon time, David.
Not taking as much risk as you think you are.
Right, because you're crunching so much stock with the S&P. And you're
when you say crunching, will you explain what you mean?
All right, so when you crunch stock, what that means is it's the float's smaller. Okay, that's actually company buying back stock. But when you have S&P, that money doesn't trade. That's static money. So it's not hedge fund money. So you have that stock, it sits there. Remember, we don't have withdrawals. We have money coming in. And so the next thing you know, there's just a smaller group of shares that trade. And the smaller group of shares that trade will favor the buyer.
So how about this cost to note, looking at 3% annual returns for the next decade versus 13 in the last decade?
Disappointing note, and I like Costin.
Yeah.
Thought it was surprisingly negative for David.
He also added that in eras of Fed cuts, you don't get a lot of assets coming out of money market funds or assets. In fact, you see capital flow going the other way.
Well, I mean, we actually have it. Now, look, we have a situation right now where there are a lot of people saying, why did we even have to cut? The economy's so strong. I think this is an aberrant Fed rate cut cycle. I don't see a lot of money come in, but you don't need it, particularly because of the thesis I just propounded.
Right. Well, that is somewhat counterintuitive as rates drop, and conceivably your money in the money market rate drops, that you're not taking money out of it.
Although you would argue that in an era of cuts, that's signs of macro weakness, and that's when you go to safety, right?
Right, but I think that what we're going to have is the weakness is going to be select.
Yeah, and this is right. This is not that though, Carl. This period doesn't feel like one where people are like particularly concerned.
We have no crisis.
Which is why we're probably going to start debating whether the Fed goes 25 or nothing for the next meeting.
Right. Right, and I think that we typically have a rate cut cycle when something's really wrong. You know, a 1998 rate cut cycle, by any means.
Well, 98 was just 50 basis points, if I remember, from
right,
Greenspan after long-term capital. And
there's no hurry.
Yeah.
If I were Jay Powell, I'd take my time, because the economy's pretty good. We'd have to have a couple really weak unemployment numbers. I don't think we're going to get this.
Yeah, some numbers on Friday. Helene might take 50, 60K out of October.
And the strike.
That's true.
Which we'll get to talking about, but for a while
it was
in the data
asterisking that.
Okay.
All right?
Yeah.
There was Morgan Stanley.
The Fed will too.
Morgan Stanley Friday night. Could our call for a string of 25s get derailed? A couple more months of undiminished spending might cause us to reconsider.
I don't care. We're in a rate cut cycle. It just doesn't have to be aggressive. In the meantime, the earnings have been unbelievable. Let's wait to see what quarter is really bad. And American Express was not bad, by the way. That was nonsense. American Express ran into the quarter. I find that last week's the bank earnings were so extraordinary, including Bank of America, by the way. I think that they were extraordinary numbers. And what that set, it set us up for a very good period. I like banks doing well.
Nice note out of Mike Mayo today at Wells. The era of 3-year EPS inflection is happening now.
No, this is a good moment. And we haven't had any, obviously, Mag 7, but we did have that Taiwan semi number, which was extraordinary, and put the rest of the fact that ASML,
Correct.
which, by the way, ASML, on Tuesday, nobody ever heard of. Then Wednesday, they reported bad numbers. Suddenly, ASML is the most important semiconductor equipment company in the world, of which they wouldn't even know that it's Netherlands. It's Dutch.
It is Dutch.
They don't know that it's Dutch. They could be Belgian to these
It's all
people.
based on U.S. technology.
Yes.
All of it.
Right.
But yes, it is a Dutch company, and that's why we still have a lot of power in terms of not allowing them to sell their equipment to certain regions of the world.
Even
so to
Royal
speak.
Dutch left Dutchland.
No, ASML, to be fair, and we made this point last week, said it wasn't AI related, it was other parts of the business.
Right, but I'm saying that, remember he said that semiconductors away from AI were sad? He used the word sad.
Who used the word sad?
The CEO used the term sad.
He did.
Well, I thought that was sad.
And then
Sad.
TSMC blowing everything away.
Sad.
And making
Sad is a Mets loss. Sad is not a way to view semiconductors. Oh, I'm sorry. I'm going to take you out of the equation.
No, it's okay.
Oh, look at
come
this.
on, guys.
Holy
really?
cow.
Come on.
Hey, Saquon had 170. Could we get
That's not.
Cue up Saquon. Cue up Saquon right
Is
now.
there a Dodgers fan here? I don't think so. Get it off. Thank you.
What was that? What was that all about? Did you see Saquon have a lot of yards? Were you at that game?
Which one?
The Eagles?
Yes, and Saquon had more yards than the entire Giants offense.
There we go.
It's a great time for New York football. At least New York baseball. If you're listen, you're a New Yorker, you got another
let's go
team
back to
in town
what.
that's in the World Series.
Do you mind if we go back to business?
With a role reversal day.
Yes, Boeing.
When you crush it on Sunday.
Boeing. No, we got a lot to talk about, but I just think that Boeing. The reason I wanted to go to Boeing is because here's the worst story ever, right? Probably the least managed, most incompetent group of people ever to assemble in one place, or two places, or three places, wherever the heck the CEO. Where are they now? Where's the headquarters now? I don't know. Des Moines? I mean, they move the headquarters every few years, right?
Where is Phil Condit these days? No, I don't
Phil,
know.
I don't know. God love him. But what matters is, Carl, that the Boeing stock does nothing but go up. It is the worst company in the S&P 500, and it goes up big. So what does that say about the best?
Well, they're gonna sell a lot of stock too at some point very soon.
Yeah,
now that
people
they've
are
set up the
excited.
strike, as I sort of reported, they were more likely to wait and try and do it then.
I bumped into some people when I was at the Eagles win, and they all wanted to be in on the Boeing secondary.
I don't believe that.
Okay, a couple.
Well, we talked on Friday about how folks wanted to get in on the other side of resolutions regarding capital raises and the strike. Let's get to Phil LeBeau, can tell us a little bit more about this tentative with the IAM. Hey, Phil.
Hey, it's a far-reacher contract, Carl. That's for sure that the machinists will be voting on Wednesday. Here are the details of that contract. Remember, they rejected an offer last month for a 25% raise over 4 years. Well, that's not what they're being offered now. The tentative agreement calls for a 35% raise over the next 4 years. They sweetened the ratification bonus by another grand, bumped it up to $7,000. They're also adding a one-time $5,000 deposit in every employee's 401k plan. And then there is the annual bonus, which originally was not there. Now it's in this offer. And not only is it in there, but it will be at least 4%. Question is whether or not they can get this over the finish line. The machinist leadership, which recommended the previous contract, which was roundly rejected by the rank and file, it is not recommending this deal. It's not telling the workers they shouldn't vote for it. They're sort of taking a step back and saying, here are the details, you make the decision. These are the hurdles that Boeing needs to clear here. You've got this contract, we'll find out on Wednesday when they vote. There's the capital raise, which is widely expected to kick in after the contract is ratified. If it's Wednesday, then it might happen this week. And then you've got them cutting costs and staffing. They've already said they're going to cut 10% of the company's workforce. They've got a lot of other things that they need to make decisions on, whether it's defense, space, what else happens within the commercial airplane business. Lots that will come out likely, or at least we'll get some indication of what they're thinking on Wednesday when the company reports its Q3 results. Yes, they already warned about what the expected loss is going to be, but we're going to get greater clarity regarding the financials, the liquidity of the company, and we'll hear from Kelly Ortberg for the first time. Analyst, they haven't heard from him. This will be his first analyst call on Wednesday, and we'll get a sense at that point where he sees the company.
Be sure, two things. One, the Spirit deal And two, what is the SEC really saying that is holding this deal up? The equity deal.
Let's start first off with the Spirit deal. That's still the plan, to get the Spirit deal done. I wouldn't say back burner, but they clearly have more pressing issues in terms of getting this machinist contract done and then doing the equity raise, the capital raise. And then with regard to the SEC, look, Jim, they've already done the shelf registration, the universal shelf registration. It's just now a matter of, do we pull it off, and how much of this is going to be equity, in terms of, many believe it's going to be about $10 billion. Is there a convertible in there for another $5 billion? Do they do $15 billion, or do they say, you know what, we're comfortable with $12 billion? I think they still haven't completely locked in on a final amount at this point.
Okay, so the way I look at it, this is my take, is that you get the earnings already pre-announced. Phil, the demand for this thing is insane. I mean, this thing's going from 148 to 160 with nothing good. Now that we have something good, I shouldn't say it with the union. I mean, to me, I'm trying to understand the demand. Why does everyone love this situation?
Well, in terms of the look, we've talked about this. It's going to be dilutive in terms of how many more shares are going to be out there. But if you look at Boeing, separate from how many more shares will be coming into the market if they do the equity offering, if you look at Boeing, there's nowhere to go but up. It can't get much worse from here. And Kelly Ortberg has already said, we will restructure this business. There is the possibility, if they can execute, and that's a big if, but if they can execute over the next couple of years, boy, they can really start to get the cash flow going. Now, admittedly, they've got a lot of things that they need to take care of before you can say, yeah, we see that happening. But they believe that they can get the production rate on the MAX increased starting early next year, potentially. It's still capped at 38 per month. You start getting that going, you start doing a better job in terms of controlling your costs, and you're going to cut 10% of the staff. I mean, there's some real potential here.
Yeah, that's a hopeful note, given this line in the Journal this morning, Jim. Industry insiders are beginning to ponder something previously unthinkable, whether a breakup or bankruptcy is in Boeing's future.
I'm with Phil, not that story. There's excitement.
Carl, I know that note is out there. You got to go a long ways to think about them going towards bankruptcy. Now, look, if this vote comes out and they reject it again, and this thing drags on for several more weeks, anything is possible. But given where this company is, and given the moves that Kelly Ortberg has made, I don't know. I think that might be it's very premature at this point to talk about bankruptcy.
Phil, we'll get to Southwest in a little bit with your help, maybe. Phil LeBeau this morning, busy day, joining us today. When we come back, we'll get some more on the activism front. J&J spinoff Kenvue jumping this morning. We'll get to Disney, got some news on Apple, Starbucks, and others. Got an upgrade of RH and some others as well. When Squawk on the Street comes back.
Man, activism is active. Latest news confirmed by us at CNBC as well. Kenvue, a new position over at Starboard. That adds to, of course, Pfizer, where they had been engaged in terms of trying to get the company to make changes, particularly on the cost side. You can see Kenvue shares are up on this news as well. Tomorrow I'm going to have a chance to discuss it all because Jeff Smith's going to be my guest. My annual appearance at the Active Passive Investment Conference, and Jeff does it every year, and we're going to have plenty to talk about. Man, they are busy over at Starboard between Pfizer and potentially Kenvue.
If you want me to go.
I don't need your help, thank you though. Yeah. I always appreciate it. It's nice to know that you're there for me.
Yeah, I'm always there for you.
And we're going to have a few others as well. But guys, it's not just potentially Kenvue and Pfizer. I've been reporting on Air Products, another large cap activist situation where you've got Mantle Ridge and D.E. Shaw both pressuring management, and they want that CEO out there. And then you've got CVS, which I know you guys covered on Friday with the unexpected departure of the company's CEO, replaced by, frankly, somebody nobody's ever heard of. Not that you necessarily need to have heard of them, and the presence of Glenview there that I've reported on in the past and what will happen there. The window at CVS, the nominating window doesn't open until January, but it does feel as though they're potentially setting up for a proxy fight there as well. Whatever it will be, it'll have to be long-term in nature, guys, because it's not like there's a short-term fix here, and this is not about, at least in terms of the ask from this activist, not about a split of the company, but just about getting a hold of their healthcare business and improving it in a dramatic fashion over time. They do want board evolution and/or refresh, and they want it sooner rather than later. They want management and the ranks of management to be improved sooner rather than later. And of course, there's the hope the industry will get better, Jim. But none of that adds up to a quick turn there.
Oh, that's a tough industry. And
Yeah.
And Karen Lynch had just gotten it to the point where every CVS store that was left was profitable. David,
that's not where the issue is.
No, David, Humana was bad. United Health was bad. The Blue Cross at Elvis, bad.
Right.
But
one was Medicaid, one was Medicare, or the Medicare Advantage. Now, I mean, CVS, Aetna mispriced.
Yeah, they mispriced.
Last year, in 22 and 23, they've been aggressively on Medicare Advantage. There were 1.1 million members added overall. They added all of them and mispriced the whole thing.
No, that's true, and that was the major reason what was given. But I would say this industry is horrible. So I mean, like she gets trashed. This industry's horrible. Now I want to know: do you think both acquisitions were bad?
Well,
the Signify was bad, the Oak Street was bad, because
they certainly overpaid for them,
and the labor costs are hard.
And obviously, we know there's a history of overpayment everywhere. Look at what happened. Look at that right down at Walgreens. That was insane. Yeah. In terms of what they had to do.
And he's still at the balance
Village. Yeah.
Interesting if he makes a comment.
And then, guys, we've also got reports of talks yet again between Humana and Cigna.
They float that on Friday afternoon. Who floats that?
I don't buy it.
What is that?
If you're Humana, you've just lost your 4 stars, right?
Yeah.
So you've lost literally almost all your margin because you get a 5% bonus. It's binary, right? 5% if you get 4 stars, otherwise no. And you're talking about a low margin business. You're looking at 2025. What are your earnings going to be? You're going to get your stars back in 26?
No.
You don't know?
Doesn't happen that
How do you negotiate a deal?
It's like Michelin.
How do you negotiate a deal and know what your ass is going to be in terms of price, let alone on the Cigna side, know what you really should be paying when it's so in question? By the way, they are suing.
Consolidation would help.
They would, but they're also suing CMS. Cigna's the one name that stayed out of it. They don't have any of these business.
The problems. They're very well.
So I have a hard time seeing how you can possibly negotiate a deal there, given how uncertain earnings are for Humana, not just next year, but obviously in 2026.
But Karen Lynch clearly didn't see it coming. They communicate well with her. And frankly, this is an industry that everyone misses. The Medicaid phenomenon is new. That came out of nowhere. That's something Medicaid. And
the elephant.
Right. And then you have this you get a rebate on that.
Right. That's the point I made on the elements, that you will make it up. It's just not this year. It'll be the next year. The states will give you a rebate on how you misprice or the missing margins.
All I'm saying is that Lynch was knocked for her pricing, but have everybody else should be knocked too. But you're right. She got it wrong 2 years in a row, and she's from that
Do
division.
you want to own the stock? I guess, Jim, is really the question.
No,
Like,
no, but I'm technically Walgreen. Only now turnarounds take forever. But Tim Wentworth is a very seasoned guy, and he bit the bullet quickly, and yet he's still got a decent balance sheet. I didn't expect.
There, you're playing on the retail, on boots and on.
Well, he
Walgreens,
wants to
not
have
on
that
healthcare.
No, he wants to have that system where you get all the junk food out and you just make it into like a kind of a doctor's office instead of mini clinic, that kind of thing. But we have to get back on Kenvue because I know you have a lot to say on it. Can we come back and talk Kenvue after the 17 minutes of commercials that we did?
No, I'm going to talk Kenvue tomorrow with Jeff Smith.
No, I want to talk Kenvue today.
No, I think I'm going to talk tomorrow.
I just spent time with Kenvue, and he's like knocking me.
All right, I want to hear what you have to say about Kenvue.
Thank you. That's all I want. That's all I
After
care
the
about.
17 minutes of ads.
Yeah, we gotta go. We gotta go.
Kramer's Man Dash and the opening bell in 8 minutes.
Jim.
Keep your eye on futures here, as we mentioned at the top. Longest win streak of the year with 6 straight gains weekly for the S&P. About a fifth of the way through earnings season, and we'll keep an eye for some big names this week, including GM, Boeing, Tesla, Raytheon, and others. Opening bell coming up in a couple of minutes. And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
the first mad dash of the week.
I don't want to be critical on the first day. I feel it's a giving day. The Eagles won. But Jefferies, Loop Capital, and JP Morgan, they're all playing this game. They're playing this, how good are Apple sales using trackers? David, I've got to tell you, this is what I regard. I have to tell you what I think about this. All right? And you can't do, because the 3 sticks, remember the 3 sticks thing? That group that was like they were phony crypto guys. You can't break free, you couldn't rip it. But this is pretty much what I have to say about the tracker.
Yeah, you've made that point.
Yeah, even though Loop says it's good. I mean,
by the way, it does get incredibly confusing, I think, for our viewers as well, because we come on every other day and we got this one says this and that one says that, and you can't really keep track of, is it strong, is it weak, China, not, yes, no,
nice piece
my mother,
Tim
my
Cook.
sister,
I know,
who knows?
yes, it's totally Chinatown, David. But meanwhile, very good article about Tim Cook, who's obviously a cool guy.
The Wall Street Journal,
People don't think he's cool, but it's a pretty good article. But that was worth more to me than this, because, David, we have to end the tracker game. Let this be the official burying of the tracker game, okay? No more tracker.
Okay.
All right? No more tracker.
Yeah, we'll talk a bit more about this piece in the Journal. Let's get the opening bell here in the CNBC Real-Time Exchange. At the big board, it's the winner of the annual 3M Young Scientist Challenge. And at the NASDAQ Retail Opportunity Investments, it's a REIT celebrating its 15th listing anniversary. I do love this line by Cook in the Journal, Jim. We're perfectly fine with not being first. As it turns out, it takes a while to get it really great.
Yeah, and I think that was great. I remember him talking about Apple Plus to me, and I was anxious for them to do unbelievable stuff right out of the gate. I at one point proposed that they buy Netflix, because I wanted everybody to buy. I wanted Pfizer to buy Netflix for whatever. But he was just adamant. He's, listen, we'll do great stuff for Apple Plus when Apple Plus is great. I mean, basically, and he didn't mean to be circular reasoning, but that was just very typical. I think some of the things that they're doing are revolutionary in health, but they didn't want to do health until they made health perfect. And this is one of the reasons why I hate the analysts who say, trade it, trade it, trade it. Because there's little things that they do that makes it so that it's far more instrumental in our life every single year. And that's what he cares about. Like Vision Pro, like someone's questioning Vision Pro. Well, Vision Pro, they have to start somewhere, and then they're going to make it great. They will make it great. You know, I remain, Apple and NVIDIA are two stocks that you should own, not trade. Period.
Kind of leads us to a couple personnel changes. They are losing their head of recruiting and their chief people officer. Starbucks is bringing in a chief brand officer who worked with Nickel at Chipotle and Taco.
Oh my God, Sid, what a great hire. I mean, and Chipotle was just a great proving ground for Starbucks. The Apple turnover, I don't know. Look, it's a great company, and I think that there are people who, they rise to it, and then they want to go do something else, but the coaching tree's big, the bench is long. I'm not worried about Apple. I am worried about the analysts who continue to try to think, well, it's this quarter and then it's the abyss. There is no abyss. Not when you have an operating system like that. And by the way, Latin America, I happen to have Banco Santander on today. I've got Anabutine. Latin America's on fire. Latin America is a big Apple place. When you add Apple to Latin America and other emerging nations, you'll see they're bigger than China. By the way, Nick Epperstein, this guy who went to my class at Harvard, he wrote something which says that for every one person born in China, 6 die. Aging out. I mean, the Chinese demographic is so shocking to me.
A lot of that is a self-own, given their policies.
What he was saying was policy. By the way, demographics figure prominently into a lot of countries'
they do.
future. Ours is obviously different because of immigration.
Right.
But South Korea, Japan, now China, of course, Italy. I mean, you go on, Jim.
It does say, I mean, you could argue that when you have a country that has
nobody's a
negative birth rate,
yeah.
that's a sign of a country's failure.
I mean, Africa, I believe, is the only real continent that is still well above in terms of.
You know, the immigration story.
So there may not be as many people to buy iPhones one day.
Do you read Timothy Snyder at all from Yale?
I have.
Well, he's saying you don't even realize how tough Biden's been on immigration. Just does it a different way. Doesn't do it on deportation of people. The 12 million people have been here. But I'm reacting to the fact that I completely kicked the can down the road when David asked me about immigration. So
I did. I was asking you from a specifically economic perspective, and it's a key issue in the election as to whether or not the deportation of 11 million
12 million.
people will have an impact on the labor force in a negative way. You completely chose to ignore the question.
Well, it's because I'm an ambassador of goodwill.
Would you like to entertain the question now, Jim?
Yes, I do think that when you look at what Biden has done, I mean, his interdiction is right at the border. There's been tremendous.
Well, now the border is quieter.
Border's more closed than Trump.
But it was obviously not for quite some time.
No, but the current story is a very tough border. But the deportation of 12 million would raise that, and tariffs would substantially raise the price of everything. But then again, Harris wants to raise the minimum wage, so it's kind of a push. A lot of this is a push.
Minimum wage versus 11 million people.
Well, there are 12 million. I don't know. I don't know how effective you.
I don't know, Carl. It's hard to imagine it actually occurring, but I suppose we may get an opportunity to see.
Mark Cuban was on Squawk this morning saying, how would a small business owner react if Stephen Miller's team of deportation officials came and asked for immigration records from everyone in your office or your business?
Well, it is very, look, when I ran my restaurants, I went through automatic data and was really scrupulous about this, because you go to jail if you hire someone in New York. You go to jail if you hire an illegal, if they find out.
Well, there's a lot of people building a lot of stuff in this country, I would think, that are probably going to be concerned.
Right. No, but I think that we, on election night, have to be aware that there's the big economic story is the cost of labor in this country. That would be where I intersect. And the cost of labor goes up dramatically under Trump. Because of the immigration.
Yeah, we're getting close. Of course, you can see we're going to be covering it as well. It's not going to be, it's an election week, most likely, guys, as we've said, not a night. Given how close it would seem, it seems unclear that you're going to know a winner the night you're broadcasting.
I don't think anyone's going to know unless it's a 50-state sweep, because I think that former President Trump has already said that he's going to challenge it. So it's either a long night or a long month or a long year.
Right. Or a long national nightmare. All right, let's move on to...
Who said that?
Ford.
He's good, man.
The Daily Double.
When he pardoned.
Oh, that's right. I forgot that he won Jeopardy when he
pardoned Nixon.
Did you beat Spangin, whatever his name was?
No, I beat Kareem.
You did?
Yeah. He was great on geography, though. Crushed me.
Smart. So what should we wait to see? He skipped fifth grade. He skipped fifth grade.
Skipped first grade. All right.
Did you skip first?
I did.
Did you really? You skipped first grade?
Yeah.
That was boring.
Yeah. It's a long time ago.
I had bad handwriting. That's how I got put in the dumb track. That's what they used to call it, the dumb track. That's a great thing.
I find that hard.
I was in the dumb track till 8th grade. I told you my father was ashamed of me, and that's the way I came.
And again, back to his psyche, that explains so much.
Paging Dr. Freud.
So much. All right, let's talk about Disney, shall we, guys? Because we did get some news this morning. James Gorman, who we know well here, of course, at CNBC, the former CEO of Morgan Stanley, been a board member at Disney for a bit of time, is going to step up to the chairman role. That will be at the beginning of next year. He will replace Mark Parker, who will depart the board. Now, Mr. Parker, former CEO of Nike, as you might imagine, given the changes at that company, is going to be more involved again, from what I hear.
Yeah,
and I think that's an expectation.
Yeah, that's what I hear too.
That he's going to have more of his time taken up with
Which is great, because he was so great.
Pitching in at Nike as they have gone through their own leadership change there. And then early 26 is when you're going to hear who Bob Iger's replacement will be. Remember, Iger's staying in the role until the end of 26. So 2 years from now is really when we're going to be talking about the coming transition at Disney in terms of leadership. But conceivably, we're going to know who is going to be that person in early 2026. We don't cover this stuff as closely, but in Hollywood, I guess there's just endless rumors and discussion about who it's going to be, and they're trying to tamp that down by saying it's going to be a little while.
Well, and why rush his replacement? I mean, I'm telling you, I think that Hugh Johnson led a level of stability.
As the CFO of the company, yes.
Right. I do think that we have to, streaming turned.
Yes, it became profitable.
Studios turned.
Studios have been very strong this summer.
Parks, no turn yet.
Parks are tough.
That's the
tougher.
And you know my solution for parks, but that's been already overruled.
We all know your solution, yes.
It's been laughed at. It's been laughed at.
New Mexico.
New Mexico turns out to be where the Permian is.
And, you know, the expectation is that it's going to be filled by an internal candidate. That is the way
And that's what you're
Disney
thinking?
has gone. I do continue to believe that. They conduct a search. You'd expect that they will at least entertain perhaps some people from outside, and there are obviously some former executives out there in the world from Disney, but it does feel like it's going to be internal, more likely than not. But it's a long way away.
Yeah, but look, no need to rush this. I will say that I've been a Gorman fan for a long time, and it is interesting that Ted Pick, I think, has reaped some of the great success of Gorman. Ted Pick quarter was amazing.
Yeah, well, you started the show by talking about how strong the earnings were. Obviously, Morgan Stanley had a great reaction to its numbers when it reported late last week. And overall, I mean, I'm just looking at a group. It's interesting of the big cap big cap bank names I keep an eye on. 36.5% is the gain for Goldman Sachs. It is now the biggest gainer of the group.
But Wells Fargo, David, come on, give Charlie Sharp his due.
I will.
That was an amazing
30%.
quarter. Amazing quarter.
And it's been a great year to own all of these. Citi is now the laggard of, again, the biggest cap names at 21.5% gain this year, but that's in line with the S&P roughly. But almost all the others have outperformed the S&P.
What this says to me again is that when you look at the mosaic of how they outperformed, it's because there's no defaults to speak of, which is really incredible. I mean, we had a tightening cycle that was supposed to wipe out so much business, but employment trumped tightening. As long as employment is strong, you don't have defaults. As long as you don't have defaults, people were surprised at how good these quarters were.
Yeah, not a surprise that given all that what Jim just said, Wedbush takes RL to outperform 430 today, and Baird ups Mohawk.
People love these stocks. I got to tell you, there's so many different sectors that are strong that I understand why people, David, might want to go after the drug sector, where that's where there hasn't been a lot of.
No, there hasn't been a lot of gain.
No. Now, the Borla thing was not. We got to go back to. I hope you ask Jeff about that, because it's not like Pfizer has done well, even though I think that the Seagen acquisition is good and Borla will in the end pay off.
Yes.
It is interesting that that's the segment that people are disappointed.
No, I'm going to hopefully talk to Jeff Smith about all of it tomorrow. I'm happy to take your questions.
What, you mean like when I submit the question?
No, if you can write them down for me.
Does it have to be in the form of a question?
Well, it can be. But man, that guy's got a lot on his plate. He's got a big staff.
Well, why don't we give you the whole 10 o'clock?
I'll take it. We talk about the financials, guys, and then I always like to come to the alternative asset managers. As we get towards the end of the year here, it's worth pointing out that even though the banks have performed extraordinarily well, you'd be better off owning Blackstone, Apollo, and KKR, not to mention Blue Owl or Ares. They have all had incredible years in the stock market. I mean, I have been talking about the alternative asset managers for quite some time in private credit, as you know, and this has been a year of extraordinarily strong gains for all of the stocks of these companies that are involved in that.
I'm so glad you brought this up, because I think David Solomon in the end can run laps around all these companies.
What does that mean?
Well, I think that their private equity division is going to be buried within Goldman.
Yes.
When you talk to David...
The old Blackstone, Barrett, and Goldman?
Yes,
Yeah, they got you on that one?
exactly.
Yeah, you've been talking about that one for a long time.
Well,
and one day we're going to get credit for it.
Well, one day, David Solomon, I said...
Goldman stock's up 36.5%, all right? Maybe they're getting some credit already.
But I told him, I said, David, if I had started, I would not have started at Goldman. I would have started in private credit.
But you never would have left private credit.
No, I never would have. I'd never be your partner. What can I say?
I mean, these kids who start at Goldman 2 years, they're already year one of that. They're getting offers from private equity right away. A lot of them know where they're going.
It's amazing. And they hire people without business school, law school. They just hire them.
I know. So I don't
hire out of college.
The question then becomes, so who's Goldman keeping? And who's everybody else keeping when you've got Blackstone taking...
good talent, don't say. They have good
Well, I'm just asking the question.
I wanted Blackstone and BlackRock to be in my charitable trust. Blackstone ran away. But Larry Fink, he sat right here, David. I think crushed it.
I do remember.
And he's a giant Dodger fan, which is probably really galling to you.
That is galling to me, yes.
Just want to point that out.
Yeah. It's going to be a crazy series. Nice piece in the Journal, though, about Jefferies spending millions of dollars to lure top bankers from competitors. Kind of
Jefferies. For some time. Rich Handler been taking advantage.
Good morning, retail traders.
I mean, whether it was Credit Suisse, obviously, when they went down, and the opportunity that provided, or whether it's issues at Barclays, if there were any, or anywhere else, he's been aggressive in building their teams. And by the way, look at that thing.
Wow.
Look at that.
Well, Handler's a killer.
That's the 5 minute.
I mean, yeah. Wow.
He's a killer.
And by Tillman's boat, which he did. See, now I'm saying something you have no idea what I'm talking about.
Are you talking about the Krupp, are you?
No, I'm talking about Tillman Fertitta had a nice boat.
Oh, I thought you meant Tillman, the great election, but I love Tillman Fertitta.
But that's what you can do when you're stuck up 100%.
Fertitta is a total heavyweight who acts as a normal. He is the most normal billionaire I've ever met.
Who's that?
Really? Yeah, the most normal.
Yeah, he's the most normal billionaire I've ever met. Who's your most normal billionaire?
Cuban has always to me been a pretty normal billionaire.
Normal.
Yeah. Cuban is a goat chip.
Yeah, but you know what? There are a lot of quiet billionaires out there who are so normal you don't even know who they are. That's really where it's at.
And Jensen Long
and I know
is a wonderful billionaire. Just smart, no acting.
You didn't describe him as a billionaire. He's a centabillionaire. Isn't he 100? Is he 100 though?
Where's Elon Musk?
He's wearing the same one. There's been no upgrade.
I'm glad you mentioned him because it's been 44 minutes.
David, it's the greatest stock of all time. If I want to mention it, I'd let you mention, I don't know, what is it you talk about? I don't know, like, whatever.
No, I'm just saying, there are guys at fraternities who watch us in the morning who have a drinking game going, and if you don't mention them, they're not having a drink until 9:40.
They don't even get to class, Jim.
I mean, come on.
Is it they drink pumpkin beer with IPA?
I don't know what they're
They
drinking.
drink the IPA, it's like cereal.
But now they
I
can.
was with Leo Peters this weekend because they had pumpkin beer. What is that? Pumpkin beer. And no thank you. I like Bud Light.
Ah!
I do. I like.
Really?
I like Corona Light.
Is that a political statement?
No, I've always liked it. Before it all happened. And my wife
Things were normal.
Isn't it crazy you can say what beer you like? I'm just kidding.
Unfair.
Say
I
what
like Bud
beer
Light
you
long before there was a Bud
beer
Light.
you like, and suddenly he's like, oh, what do you think?
How did I know that was
What a
an idea?
world.
Kramer likes a Bud Light. He must be gay.
Jim, where it's hard to avoid. Take McDonald's, for example. Such a topic of discussion
Oh my God,
over the
350's
weekend
going to
as the
400.
president does this event.
I
And
know.
it
He
closed
finally admits he's
McDonald's,
gay.
Where the customers were screened ahead of time for Secret Service
Our
purposes.
executive producer has actually been to that McDonald's apparently. Todd Bonin, he's been to that. Now I go to Costco in Allentown.
He's been to every
I crushed-
McDonald's.
I crushed it.
Okay,
at Costco.
Spy's trying to make a noise here.
Jill Stein. I forgot. Her 60,000 votes cost what? Hillary,
So
Pennsylvania.
wait, Carl, this was not actually open to the public?
Well, they screened it for Secret Service,
Oh,
but the customers were selected by, I think, the campaign and maybe the McDonald's itself, but they were rehearsed and prepared. And
He didn't get the fried burn that that Karen Kramer got. When she was at McDonald's, she got the basket.
Oh, wow.
Dinner, she got the fried check.
That's horrible.
No, it's just fine. It's what you do. It's for troopers. That's what you do when you're behind it. You want to own that McDonald's.
Sure. Southwest shares, guys, are down about 2%. Yeah, what is some news that, I mean, obviously you'd expect that there would be potentially some talks of settlement between Elliott, their 11%
How many
shareholder.
board members you thinking?
Well, they down from 10 to 8 is their ask, right? But what do you think they would take?
Well, how many people resigned from it, Southwest?
6 resigned, and then we got Kelly stepping off as well.
Take 6.
Six would be a huge win for them.
Pick 6 would be a huge win.
Even 4 is a lot.
They need help, Southwest. They turned out to be a little more genteel than I thought. They're genteel people. They're nice people. The Southwest people. They're not. Oh, jeez. Yeah. World is nice to him.
I mean, the other big AV story, of course, is Save with this debt extension, but the long-term chart, Jim, it's not much, even with a 40% gain.
Thank you, Justice Department, for raising our tickets to West Palm by killing that deal. But that's all right. When Justice Department breaks up Google and dismantles Google, it'll be fine. We all want that dismantled.
In outright deflation.
Yeah, they want to go after every company that has made our lives better because it's unfair. They made our lives equally better, and it's time for that to end. Justice Department mantra, right? Let's go after everybody we love. Not, right? Come on, you love Google. You love Amazon. You love Apple. You love Facebook. No, you probably like
I don't love anything.
Spy hit the 200.
Kids, wife, that's about it. A few
We got
others.
the edge on me.
I'm gonna go get my coffee going, and I'll be right back.
You're still working on those.
Gotta get comfortable. I did not sleep last night.
No, I love every
I'm a occasion.
My cat, my stepson, they're my real.
I mean, I want to name everybody. I love you. I love Carl. I love Todd. I love Lamp. No, I love Jesus. It was Anchorman. He didn't know
I love you. You love me. What is what are you? What cartoon character are you?
I don't love Apple. All right, or I don't love companies.
He loves what?
I enjoy talking about them, though. Yeah. I find them fascinating.
You like Scooby-Doo?
Look, it's never my favorite.
As we go to break, watch bonds today. We'll get LEI in a few minutes. A lot of Fed speak. Daly, Logan, Kashkari, and Schmidt.
Kashkari.
Today, we did get the 10-year revisiting 413. That's going to take you back to the end of July. Be right back.
So the SPY's definitely at a resistance right now. It'll tell us if these others are going to move. Then I'll be looking at the IWM. Here we go. Are we going to pull back? Are we going to pull back? Magnificent. IWM just hit the 200 SMA on the 1 minute. And on the 5 minute, we hit the SPY hit the 200 SMA. Good morning, Randy. Good morning, Ricky, Yoko. Stop watching porn. Is that the answer? Magnificent. It'll be peace. La 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 la. Bob's watches. What is today? Today's the 21st? Jeez.
It peaks out as far as profitability goes, strike, right?
Nope.
But even above 205, because I made it unbalanced, it's still going to be a double as far as profitability goes. So this is that measured approach to gaining some upside. Now, if you're more bearish on it, buying a downside put butterfly might work for you if you think this thing's going to fall post earnings. But a lot of times, look at the duration on these trades. Where it gives you an idea like, hey, I've got a directional bias. Make sure you're putting the right duration when this thing expires.
There might be a settlement with Boeing.
For a specific period of time.
Okay, all right, fair enough. I like that trade ahead of the earnings. You've got a little bit of time, so you've got some optionality there, quite literally. All right, hey, Kevin, let's go outside the realm of the mega caps for a sec, as I know you're looking at the defense sector as a major theme. Walk me through the logic and the best way to play it.
The one area that I think coming out of this election season
Today is Monday.
Republicans and Democrats agree upon, perhaps there'll be more, but at least one that I'm aware of
Are you sure?
is the need to increase defense spending as our country really desperately needs to upgrade, replenish, and modernize our military warfare capabilities. So we would naturally go to a large cap name like Lockheed Martin, the
You think
largest
so,
defense
huh?
contractor in the world. But where I like to do, Oliver, is peel back the onion and look at some of those smaller cap plays, not necessarily small cap, but smaller cap plays that might also benefit from an increase in defense spending, such as suppliers to companies like Lockheed Martin. One company that comes to mind, Howmet Aerospace. They actually supply the critical parts that help make Lockheed Martin F-35 fighter jet soar. They got a forward PE right now of around 35. Stock's up over 92% year to date, and there could be more upside ahead. So I like the aerospace and defense area of the market right now, and I look to find those ancillary opportunities for some of these suppliers to the larger defense contractors that are out there, like Howmet Aerospace.
That's a pretty beast chart there. How do you know when the trade is fulfilled? Like, when do you get out of it? I mean, this thing's been ripping.
It's on a tremendous run, but I still look at valuations. Yes, they have a high current PE, but looking at their earnings guidance going forward, a forward-looking PE of 35, it's a little rich, but not too rich. And I anticipate more defense spending coming down the road, and companies such as Howmet benefiting from that. So I don't think this trade is done just yet, but I also don't recommend to your viewers that they load up in any one defense stock, but rather build a diversified portfolio of 10 to 20 to 30 different defense stocks like we have in our North American Aerospace and Defense Trust at Smart Trust.
Okay. So it sounds like the sector
Nobody can be like you, buddy.
ETF or something to kind of get you the broad basket. Kevin, is there a Boeing trade in there anywhere? Like, does that get included, or is it too risky?
Too risky.
Boeing is part of our portfolio at Smart Trust, equally weighted with these other opportunities such as Howmet Aerospace and Lockheed Martin, but there are others out there as well.
I think you're full of crap.
Where we need to go from a defense standpoint, we need to look even beyond Lockheed Martin and Boeing to some of those innovative areas of military capabilities, such as drones. And the drones.
Nice little bouncy poo on Tesla and
tremendous amount of
NVIDIA.
We see out there. But again, build a diversified portfolio. Don't just try and pick one or two names.
All right. Appreciate that. Good to catch up. Thanks, Kevin.
Thank you, Albert.
All right, Tom. You got a trade for us in a more imminent defense earnings play. Lockheed Martin, which has got earnings coming out tomorrow, right?
Yeah, shares hitting all-time highs. They got earnings tomorrow morning. Option market's pricing in about plus or minus 3.5% move, so not like an outsized move in the stock, but plus or minus $20 either way. And the shares, as it's hitting those all-time highs, up about 36% so far this year. So, like this, and RTX, NOC, Northrop Grumman, General Dynamics, these things are all doing pretty well. So,
well, they're doing real well.
Strategy that takes advantage of the higher implied volatility. The IV percentile ranks over 75% right now, so that means it's in the upper quartile as far as implied volatility levels over the last 52 weeks. So option premium expands in that type of environment. What strategy takes advantage of that? Well, I looked at a neutral strategy, but giving myself maybe a little less risk to the downside because I skewed it a little bit in case this thing does come off of those all-time highs and you start seeing some profit taking, even though it's a good report. We've seen that a couple times this earnings season where it's a good report, guidance is okay, but they'll hit the stock because of the size moves it's already made. So looked at a short iron condor here where it takes advantage of a neutral type of move where it doesn't move that much. Buy one of the 590 puts, sell one of the 590 2.5 strike puts. So I'm selling a $2.5 wide short put vertical. Then on the call side, above the current share price, sell the 635 call, buy the 640 strike call. So a short $5 wide call vertical to the upside. You're selling an out of the money put vertical, out of the money call vertical. Allows you to collect that credit of about $1.60. So what does that mean? That takes your break evens where you start losing money below, just below 591 on the downside. About 636.60 on the upside over the next 4 days. This is in the October 25th weekly cycle. You'll capture that earning, really short-term positioning, but what you're looking for is some consolidation. And what does this give you? It gives you a higher probability of success because you got about an 80% probability that it'll be above the short put vertical at expiration, which is what you want, and then about a 75% probability that it'll be below that 635 strike that you sold on the upside. So neutral strategy, but you can see here a little more risk to the upside. Unbalanced condor. So you can give it a little bit of attitude here. Where if we fall out of bed, you're still going to lose about $140 if it falls below 590 at expiration. But at the same time, you've got more risk on the upside. So skewed it just a little bit, but still neutral.
Okay, so worst case scenario is it rips huge.
Either way.
Right, but worse if it
goes to new, fresh.
I see the
all-time
support.
640. That's where you don't want it to go.
Right, so you're kind of fading it a little bit in some ways, but not necessarily betting against it. All right, interesting. All right, thanks for the approach. Tom Wyatt with the trade. Kevin Ma with the analysis. Coming up, hour 2, we're going to talk some Disney. Fresh new succession plan laid out from the former Morgan Stanley CEO, who's chairman right now, Bob Iger. Still looking for a successor. Then we're going to trade Teladoc as well as we go into a beaten down medical device stock that's possibly back on the up.
We're getting close to a support. And I'm watching the call. It's a
Election season, stay out of the
BX.
muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be
How does it do it?
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself,
5875.
how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading.
I ain't telling you my secrets.
Formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your
Like
skills
that Asian
will
chick.
become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
She thinks so. She has it. I'm very impressed. I'm here to make money and find a husband.
Morning Trade Live. I'm Oliver Rennick. We're hour 2. We showed you 30 minutes into the session. And stocks are picking up the pace a little bit. We got a nice bounce in NVIDIA. If you need a hero, look to the chips, as that's kind of the first mover that I'm noticing. NVIDIA ramping up. NASDAQ.
The
looks positive there.
5875s
Not too far away from the baseline.
calls.
Green. Semiconductors about 30 bips. Not too shabby. NVIDIA at 141. Keep in mind that really any gain for NVIDIA is an all-time high here.
Yeah, it is.
Last week we struggled to really break free from the $140 level, so to
I'm gonna go
give
get
a
my
nice
coffee,
bounce this
and we'll
morning
be right
was
back.
A pretty good move to get things going.
Oh,
perhaps. A little
there's the drop.
Catalyst, maybe a little fuel for some bullish
5875s.
momentum. And also so close to records, obviously.
We got the 5875s right here that we're watching here at 235. $58.75s at 235. I look at your brain scan, and it looks to me like you have no emotional reaction when you jumped into the SPX. It's like you don't have a heart, you savage. Randy, I got into the call here. I didn't go in big. I just got one. The 58.75 at 235. Right now, we could drop. I'm going to go get my coffee and my phone so I can trade. I bought us all, the ones that are listening right now, Powerball ticket for tonight's win. We're at 265 from 235. I could make a business decision. I smell 58.64.55 coming down here. I could get out at 280 if I wanted to. Richard. $295. Oh. What's Jimmy do? $3.
Jim, I jumped in that trade. You had double top. I went ahead and got out of the trade at $295. I want to know if I can take you out tonight for a shot of moonshine.
Yeah, it did. We're at 285. The crowd's going wild here at the sports arena. In other words, when you get an engulfing candle and you get down there and you're at 235, you take profits. Break it. It's 290. Oh, I got these things still in my ears. Haha. Uh-oh. 295, $3. It's time to make a business decision. That's how you do it. Randy, I'm out. I'm going to the beach. Oh, where's 235 on here? Yeah, baby. Ooh. Hey, Jim, you did it again. Can you imagine the mental why ain't the 235 on here? My God. Gorilla Pie, Randy. Gorilla Pie. Gorilla Pie. You can do it. You can do it. I guarantee it, you can do it. We're at 310 now. I'm dreaming. Whew. I'm gonna go see what I got for lunch today. Oh, I know what I have. I was able to do good with the SPX. So my beach trade is done for the day. I'll be right back. And we're going to get this show on the road. Mr. Spit on his face is on here.
All gambling. So what do they do with that? Do they spin that off? What do they do with something that they were originally very uncomfortable with? Now it takes over that network.
Yeah.
I don't know. It's just if there's one company that seems to have way more faith in their leader than the market does. I can't think of a better example than Bob Iger. You know, a couple months.
Bob Iger sucks.
I might have said the Boeing chief, but now it's what is the stock's done nothing. And again, it's just no matter what you do with the way you present content is what matters the most. And I'm a bit of a zealot on that front, and it just seems like the content hasn't hit for a while now, so it's
yeah.
But, all right, maybe James Gorman will get a I don't know what They've got also a bunch of people on the on the board. They've got Mary Barra, they got Calvin McDonald, Jim and Lulu CEOs. So there's a lot of great minds there that you would think would be able to figure it out. But all right, shares down a little bit. Again, it's like for all the also for the amount that people talk about this stock, it's gone nowhere for almost 10 years, with the exception of basically the COVID streaming bubble. Thanks, Kev. All right, appreciate the update. Let's do some trading. Let's talk markets with Alan Nuckman joining me here this morning for Bullseye Options. What's up, Alan? Good morning, sir. How are you?
Doing well. Markets are doing well now. It's just a matter of time. It's not a matter of if anymore. When's the NASDAQ going to make its new all-time highs? You can see NVIDIA leading the way, and I was listening to your previous guests lamenting about NVIDIA leading the way. So, you know, you can't have it both ways. You can't be concerned when NVIDIA is down. You can't be concerned when NVIDIA is up. And if Google can start to play ball, the whole NASDAQ is going to really make a move.
All right. I don't know who's concerned when NVIDIA's up. NVIDIA's doing great. It seems like, to me, that's almost like, as long as that's up, it's like the it's like the Fed put used to be, you know? It's like we don't need the Fed put, we got the NVIDIA put.
Right, it's about risk reward. No one liked it when it was trading at 100, 105, 110, but now people are looking, and technically it could easily get to 180, 190 based on that V recovery. And that also means that the NASDAQ itself, you know, we talked about this before, that full V recovery on the NASDAQ sends us to 24,000, which is nearly 20% above. So we could see a market melt up across the board here. So I love how things are sitting right now with these technical price patterns.
All right, well, my Friday closing monologue was setting the stage for an everything rally, so we might be overlapping in that analysis. Yes. So then, all right, but then I wonder, you know, this is kind of I was like, all right, then you're going for Teladoc. You know I was about to say that.
I know where you're going before you even go there, my friend. So,
well, that's because that's our trade for the morning.
First off, we talked about Riot last week. We were looking at Bitcoin.
Yeah,
we were looking
the blockchain play. That was good.
Exactly. You know, if Bitcoin breaks up above 70,000, we've been doing 50 and 70. We're going to 90. So, you know, and there's nothing up above. You know, when you look at some of these charts, you just have to have some price projections. But one of the themes today is we've got to talk about selling too soon. And we've done every time we come on the show, we talk about buying an option, but we don't get into the specifics about selling. You've got to sell too soon. And that's what I did on a lot of these plays, the Cisco, the BEKE, the Zim. You know, a lot of these plays along the way, you've got to pitch out. And if they keep going, they keep going. All right, let's get to TDOC. Pull up a chart, my friend, right now. Zoom info, ZM.
Okay.
The long forgotten Zoom, the biggest boom in Zoom that we saw.
You think that's going to happen to Teladoc?
Yeah, and look at that chart and compare it. They're almost the exact same as Teladoc. Zoom peaked at 600. Teladoc peaked at 300. They are the exact same chart. You know, it's kind of the same mentality. They had the boom because of COVID, and they've fallen off a cliff. The risk reward is extreme on both of these. Obviously, the Zoom the Zoom play is going to be more expensive because it's a higher dollar stock with more volatility. So this is a poor man's trip into that same genre, into that same play. Look
COVID winner turned loser, basically, right? COVID winner turned loser. The 3-year chart basically is the one that's going to give you what you're looking for, because both those went from heroes to zeros. Right?
I'm trying to help you produce your show as well.
We appreciate that.
Look at that chart.
Yeah.
So it's bottomed out, and that's what we've been waiting for. You wait for a sign of a sentiment shift. And I've talked about this on your show over and over again. It's bullish divergence. We made new lows, but not new highs implied volatility. The shorts are running out of strength. You're seeing some short covering. You're seeing some basing. We've been between 7 and 10 for 3 months. A breakout of that range target is 13. There's a gap up above at 16. And I'm not asking for a whole lot. I'm not asking for it to go back to 300. But a small move in the underlying stock produces big gains in the options. 5% move in the underlying stock is a 50% gain in the in-the-money option. A 10% move in the underlying stock, which is not that much. We're at $10. You know, what's 10% on $10? Not a whole lot. So, you know, that's what it's all about, math and probability. The way to play here is an April option. April has 6 months of time. It's trading for about $3, $3.10, something like that. It's deep in the money, obviously. It's $2.50 in the money, and it's only like 25 cents more expensive than the January option. So you're buying the time, a bottom base. Short covers could get, short covering could cause a squeeze. I love this chart because of the smart money indicator that I follow as well.
All right. Okay, case well made for the comeback story for Teladoc. I mean, look, booms like Zoom, then you're onto something.
And if it doesn't, you're still long from 7.5. You're still deep in the money on a stock that, has a limited downside, let's say. Obviously, anything can happen, but it's also important to note that there's earnings October 30th, which is only 10 days away. This is not an earnings play. This is an April option. Earnings can be binary, even if you know what the earnings numbers are going to be. Not that anyone ever knows, but you don't know how the market's going to react. So this earnings could be a catalyst. It's a possibility, but there are so many things that could be a catalyst over the next 6 months on a $9.75 stock.
True. I like it. I will say, though, that earnings, that's your risk point, because this thing can go crazy on earnings sometimes.
I will sleep well. I'm long from 7.5.
Right.
I've got limited risk as a $300 option, limited risk, and 6 months of time.
All right. Love it. Boom like Zoom is the idea.
Boom like Zoom. That's the theme for today.
All right. Earlier this morning, we heard bigger in base, higher in space, so got a lot of good rhymes going. Thanks, Alan. Appreciate the energy, as always, on a Monday morning. And man, Chief Market Strategist at bullseyeoption.com. Coming up, let's talk some commodities with Robert Minter. Good name for commodity analyst. Speaking of silver, had a pretty big ramp last week, trying to follow in gold's footsteps. We'll talk some crude oil as well.
La-ti-da. We're still in that upward trend. We got a 1-2 free bits. Doo-doo. I could listen to that all day if I was making money. I know that guy. His name is Steve Forbes. One of the ugliest men in the world, but also one of the richest. Do-do-do-do-do-do-do-do-do. Come take my wife.
Number one broker here for the number one hit maker.
Thanks for swinging
Extend
by,
to
Carl.
the left.
So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah.
Schwab.
I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Oh.
Have a choice in how you invest with Schwab.
Okie dokie.
No noise, from bell to bell and beyond. Available anytime, anywhere.
Oh, what do we got here? SPX. Randy.
All right, let's talk some commodities.
Okay.
Here. Crude oil trying to catch a little bit of a bid this morning, but it's been all but a dead trade. Meanwhile, gold's been consistent and silver ramped up big last week. Robert Minter joins us from Aberdeen, Director of ETF Investment Strategy. Robert, welcome back to the show. Thanks for being here this morning.
Thanks for having me.
Let's knock out oil first here in our conversation, as it just seems to fail every attempted rally. Is that telling us things might actually cool off in the Middle East, or does the Middle East not matter with the U.S. pumping so much?
Actually, so there's almost no geopolitical risk premium priced into the price of oil at this point, and part of the reason is that OPEC has a decent supply that they're not that they're not producing and sending out in exports. So there's a little buffer, but I think people are looking past some of the risk. And maybe one of the biggest tells is we took the CFTC lists the number of contracts that money managers own. So I added together the Brent and WTI contracts together to see the total number of contracts.
Once you get the hang of the
That's the
MNQ, you can do the NQ,
money managers have been long,
which is minis for NASDAQ.
And that really stands out to us because contrarian commodity trades tend to work really well because, frankly, once everyone is sold, there's no one left to sell. And so I looked at the next
here we go.
most negative sentiment instances over those since 2011, and on average, oil prices were 46% higher within the following 6 months. In none of the instances off of that very low sentiment did it actually go lower. Did oil prices actually go lower? So it's very clear that very, very few people have normal levels of oil ownership in their portfolios to hedge against any potential rise in oil or inflation.
Very fun stat analysis. Let's just go through some of the key parts again real quick. So you've got the number of times it's been this low is less than 10, right? So you're working with a sample size that's somewhat limited, but the implication of the average oil price 6 months 46% higher. I mean, that's pretty, even though you've got a low sample size, that's a pretty big magnitude move. So like if we get anything like that, it's pretty bullish.
Yeah, and it's actually a big data set.
5875s
to 2011.
Got it. Okay. But the instance
in
contracts were this skewed. How many times did that happen?
Yeah, so it's never been more skewed.
Okay, it's never been more skewed.
But the next closest level of being this skewed, I picked the 8 next closest.
Got it. Okay.
And in none of those was oil prices lower in 6 months. So,
wow.
Some element of this is momentum trading. The price is lower, so people sell, and eventually you get to a bottom.
I gotta say, that's probably like the most bullish thing I've heard on crude in a long time. Because to your point about OPEC, U.S. production at records, outproducing the world, it's been hard to take the whole geopolitical thing and spin it up into a bull case for oil, especially because, literally the price action
would be real tough.
The whole Israel-Palestine thing really escalated and never went up. So there just hasn't really been the evidence either at any point there that this has been a major crude event, even though people really, it seems a lot of bulls have really wanted it to be. Because this thing is still downtrending technically off the highs, so it seems like positioning is like as good as a bull case as you can get right now.
Boy, this would be the place I'd want to buy it right now. If I knew we were going to go up.
From contrarian investors all the time, the one asset class that contrarian investing really has a nice risk-return trade-off is in commodities. They are very liquid markets. However,
5870s.
Decision makers than in some of the other asset classes, so you get a little clearer of a signal from the contrarian data.
Fair enough. Really good stuff. Love that stat. Nice work bringing that to us. Appreciate that. Let's talk some metals. I'm looking at your notes. You've got platinum, palladium on the mind. What about silver? Good old classic silver seems like it's working pretty hard right now.
75s are at 175.
We like to simplify things to a point to get our so that we bring people up education-wise, and we view silver as sort of half gold, half copper, based on the demand drivers. So it does sort of act like gold junior maybe, with the major difference that central banks don't buy silver, and that's really been what's been behind the gold price rise. But the secondary thing, and about half of the demand for silver comes from industrial uses. That's really a China story. A huge portion of that, as much as half of that, comes from solar panel use.
I think we're getting close.
And the energy transition, despite it not working terrifically well in the U.S. or Europe, despite all the talking, it is working well in China, and that's really the place that it needs to work for silver.
160.
So we are positive on
For the
on
5875s.
There's I'm starting to get a little PTSD from the lack of thrill from the Chinese stimulus, but I think in the last month or so we really have seen meaningful efforts to stimulate the Chinese economy, rate drops, indications of future rate drops, specific fixes for the housing market, lowering down payments, lowering mortgage rates, incentivizing local banks to get out and lend more money. So we're starting to see the things that do matter.
I like the description of silver as the hybrid, the kind of copper and gold sort of thematic hybrid. Obviously,
I almost want to bring him up now.
Hybrid. But to that point, if China does then really start to pick up, then copper, you would think that side of it would start to kick in.
Oh, look there.
So to the point about
150.
being a little bit more by the gold side of that equation for now.
Oh, 130. There's a late. Oh, yeah.
Excited for copper in particular. How about platinum, palladium? I know that a lot of folks think about this as sort of a knock-on auto or EV trade. Do you think about it that way, Robert?
I do, and maybe it's a good contrast with silver.
215.
The do anything metal. It's a
5870s.
Over 10,000 end uses. Platinum and palladium significantly more focused. It's used in glass coverings for energy efficiency and everything, but the major use is in catalytic converters for any kind of vehicle that has to have emission controls with a fossil fuel engine. So importantly, that's of course gasoline and diesel engines, but it's also any hybrid engine that has a gasoline powered battery. And so a couple years ago, investors turned very, very negative on these two metals on the assumption that consumers were going to immediately switch to preferring electric vehicles to other vehicles with fossil fuel. And platinum's down 25% since February 2021, and palladium is down 66% since March 2022. But consumer sentiment
We've had
hasn't changed along with that investing view.
10 minutes.
Assumption. Deloitte released a global auto consumer survey earlier this year, and it showed that 88% of potential U.S. buyers want a gasoline.
We had 3 black crows
hybrid vehicle, both of which need
on the 5 minute.
So demand is going to be stickier than originally was assumed. At these prices for the metals, platinum and palladium, the mining companies
5870s.
most of the mining companies aren't making money off of platinum and palladium, and so they're laying off miners and canceling projects, and so we like that as a contrarian view also.
That's a fun one. The combination maybe of a little less production and the suggestion from the Deloitte survey that people are pretty eager to get a new ride. Thanks, Robert. Great stuff.
Thank you.
Appreciate that analysis. Robert Minter, Director of ETF Investment Strategy at Aberdeen. Okay, making a case in particular there for the crude positioning. I think pretty compelling, as well as maybe the palladium side too. Cool stuff. All right, coming up, let's talk some charts. Taking a look at earnings coming up this week. General Electric is the big winner of our next group. 3M is the big
210, 205.
The Mend, after a real good year here, 3M making a comeback story for real.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends. All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Okay, we got tweezer bottom.
Customizable themes up to 25 stocks.
This should reverse to the upside. I mean, it should, but
And join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
it's a tweezer bottom.
Interesting charts here ahead of earnings. Mr. Ducat on the technicals, Jenny on the fundamentals. Jenny, let's start with Pulte Group PHN. Kind of seems like the most normal chart. The other ones are kind of wild.
I would say also one of the strongest charts. I mean, objectively, the home builders have been one of the points of resilience.
It's not 3 crows now.
The good duration of this year. Now,
I gotta use the restroom.
We saw last quarter when they reported, they did see a pretty healthy beat by about 11.5% as far as their earnings were concerned. Their overall, we saw a pretty nice increase in their average sales price as well as gross margin improvement. This collectively led to, again, a 19% jump in their profitability. Now, as far as their track record, they've been able to deliver an average
We're at 185.
10% in the last 10 quarters. So, again, a nice track record there. Now, for this upcoming quarter, we are expecting around a 7% increase from their earnings per share reported a year ago. Also expecting about 6.5% growth as far as their revenue to $4.26 billion. Now, what has been a major tailwind for this company is overall they're continuing, low existing homes for sale have been driving massive demand in the market. So along with that tailwind, they've been cyclically reliant on their operating model, effective pricing strategy, and mortgage rate buydown program, which are expecting to be positive catalysts for this upcoming third quarter. Given their pipeline, they are expecting their overall count to grow by about 3 to 5%. On also, average selling prices are still pretty favorable. They've come down ever so slightly.
Man, this looks so famous. This looks so yummy. This is on the 5 minute. See, I don't trade with a 5 minute very often.
The range, but as far as overall supply demand goes, this is still very much a seller's market, and this name has only benefited from that, and only benefited from the fact that while home prices starting to moderate, hopefully again with lowered interest rates, we've seen this company.
I want to buy one so bad.
Even though all these CEOs have said so many consumers are deferring a lot of their major home purchases until interest rates continue to lower, so they've somehow been able to work through what has been, I think, more muted commentary from all of these leaders pretty well.
Yeah, well said. Good stuff. Nice recap there. The housing situation. Rick, technically, it seems solid. I think it's going to be a little bit more choppy than our other two charts, which are abnormally explosive. But
Jimmy says boom.
Yeah, a strong movement up from those lows that were almost a full year ago, up 113% here. Inched above our previous highs to make new 52-week highs this morning, but rather quickly backed off here. And now we are actually down on the day so far. But, the day is young. We've still got plenty of time left. It's looking like perhaps we could be retreating back to our previous highs here, this green line near about 146, 145 and some change or so. So that would be one area to watch as we continue our trading day here. When we look at our moving averages, our 21-day EMA has been supportive numerous times recently here. We are comfortably above our moving averages.
Jimmy wants to buy.
This short period of somewhat range-bound trading.
175. Ooh.
Formed here, so we have
more drama.
Made some progress to the upside from this point. Now, when we look at RSI, though, things are a little more concerning somewhat here. You can see our green trend line going across these lows has been broken. It looked like perhaps we were going to recapture it, but it was not to be. Now we do have a downward sloping trend line in place on the RSI, which gives us a little bit of bearish divergence as we head into this earnings event here. So,
Man, I don't know.
A lot to unpack there, but generally speaking, momentum does
58.70s at 150. 150.
or any other kind of known event risk situation here. So I don't know if I would make too much of it. If we do move to the upside, +1 standard deviation channel, blue line, linear regression line, line of best fit. We've got the top of our channel as potential resistance, then our +1 channel, so like 150 and then 156.
Now we're getting dirty.
Downside. 21-day EMA trend line
Whoops.
and blue linear regression line between like 139 to 142, so quite a bit to choose from in that area.
Rising wedge, bearish divergence. It's like, for as bullish of a chart as it is, some of those kind of, second derivative kind of indicators, maybe a little bit on the bearish side, but the good news is there's support very close by in all those moving averages, so it doesn't seem like one to be particularly concerned about. But I guess if you do put, some importance on some of those
135, 130.
Upside type of situation, but it just feels hard to still bet against the
That's
stock.
too chicken shit to
So good perspective, I like that.
grab 125.
GE, kind of two very similar stories in a way, kind of coming back.
I mean, it's like a
from various problems. Let's talk 3M first, Jenny.
So, okay, I will say there's a lot more to like, actually, or not dislike when it comes to 3M. I think that the story is a little bit more compelling or more bullish when it comes to GE, but 3M, we are expecting some.
These are the 58.70s.
% also declining. Adjusted earnings expected to come in around $1.90 a share. That would mark a 28% contraction as far as growth annually. So that's not exactly great. We've also seen a pretty nice, actually, history of beating, though. Last report we saw back in July, a really stellar day, one of their best on record following their second quarter update. So it's worth noting that in April 2024, they completed the spinoff of their healthcare business into a separate public company. So notably, that spinoff is expected to weigh on their year-over-year now top-line comparisons as a result. Also have seen some unfavorable impacts as a result of this healthcare spinoff, as well as like channel inventory normalization, solid operating performance execution, but they've been really trying to undergo a lot of these cost-saving initiatives, so that's been beneficial, as well as some strength in their electronics, automotive, aerospace, and commercial branding and transportation market, which is expected to have boosted their results in the third quarter. However, weakness across various industrial specialties is where they break out that revenue. That's expected to be weak and continue to see contraction as far as growth. All things considered, there's nothing really to be concerned about, because I do think this operates in a more staple type environment where all their products are typically products you need, not want. However, there's just, if you break down all their components, you can see there's just not a lot of growth to be excited about. It's not like a concerning story, it's just not a compelling story either.
Yeah, it seems like this has still been a lot about eliminating the worst of the downside risks that their legal situations were going to blow up even further. So, all right, if the worst is past, I mean, this is getting to be a pretty frothy trade. Rick, what's going on technically?
Well, once
trying to flag.
It's enjoyed a nice appreciation from its 52-week lows. We're up about 85% here, but kind of for our purposes,
We haven't really seen much drama at all.
because it was a distinct new phase in our price action here. We had a significant gap up and indeed a very large green candle here. So it makes sense to kind of start your looking at this stock from this point here. So now we've got a situation where we've got, once again, kind of a rising wedge type shape here that was forming here. Two trend lines converging toward each other. Bottom one much more steep than the top one here. But we kind of moved beyond that to the downside here, kind of bouncing around our yellow 21-day exponential moving average, still hanging on to this volume node area. But now we have a downward sloping trend line in white to consider here, starting with those 52-week highs near 140.72. We also had bearish divergence on our last chart. This is a much more severe example of that type of divergence here. But
Getting ready
it
to
was
squeeze.
also complicated because we kept moving into the overbought area, which is a sign of strength here. So
We'll know any second.
some nuance and some judgment when you're kind of looking at these seemingly contradictory pieces of information from the RSI here. But what it does show us,
I'm not in, but I want to
momentum
be.
was slowing down. The highs were getting less of a jump between each progressive high here, and now we have transitioned into more sideways type of price action here. So red downward trend line in play on RSI. We are below our green trend line here. We are above the 50 midline still though. So hope is not lost yet, but once again, getting into earnings, a slowdown. If we were to move back to the upside here, our old high lines up with our bottom boundary of our wedge near 147.
There's the 125 again.
Our wedge, and then +1 standard deviation channel.
We might get 110, $1, 105.
Line, orange 63-day EMA, and a recent low near about 120 to 130.
Okay. Seems like
120 to 131.
Okay. Seems like there's quite a bit of range you could expect for 3M, especially given last time the maniacal gap on earnings. Pretty fun trade. I feel like this is going to be
There's 105.
More of an interesting stock for a lot of people now, just because, one, it's not careening off the road anymore. It's obviously got this huge run behind it, but also just because it's pretty volatile. So I mean, you've got a lot of outcomes, and I have no idea which way it's going to go. So for those that like to speculate and trade high beta stuff, 3M seems like a pretty fun way to do it. Okay, General Electric, generally pretty great. Jenny, up and to the right.
I mean, yeah, this is the best performer of our R3 by a lot. It's up over 88% on the year. This will be now its third report. Excuse me, 89% on the year, almost 90%. This will be its third report after breaking apart, of course, from the overall GE company. GE Aerospace, I will say, is actually, I think, the more interesting story, as, I mean, it's continued to not only outperform, but get a lot of love from the analysts that continue to favor this name. We are expecting, I mean, continual growth.
We got gap down on that.
As far as like the growth story goes, this is the only one that feels like that jumps out to me, because I do think the other two spaces in which the stock we looked at.
Somebody dropped the loop there.
Some contractions, some headwinds. GE Aerospace's biggest problem is actually
What the hell?
it's done, because right now it trades at a 43 roughly PE in terms of its forward earnings. So that's a pretty lofty now valuation relative to the aerospace industry, the industrial sector. I mean, even the S&P 500 trading at 28 times its forward earnings. So the only risk to this name, I think, is how expensive it's gotten. But as far as like overall street expectations, they really like this name. There's only 19 analysts that cover it. However, there are 18 buys, 1 hold, and there's no bears in this name. So that gives you any conviction on how the street is thinking of this name into earnings. We just see, I mean, another analyst raised their price target by upwards of 30% from where we're trading. So it only sees more and more of this pile-on effect. But obviously, as we know, with a higher bar set into earnings, then they have obviously bigger shoes to fill when they deliver.
Okay.
They better deliver.
125% up on the year. How granular can we get on this, Rick? It seems like maybe the best one.
Yeah, probably the best one. It's up the most, from its low point here. And really kind of similar charts in a lot of ways here, in that we are both trending upward. We're both close to those 52-week highs overall. But we are also seeing, once again, a situation of bearish divergence here on the RSI. You can see that we made higher closing prices, but RSI is trending down. And, this one looks maybe perhaps a little bit of a worse situation in terms of momentum specifically, because we are starting to breach our green trend line here as we form this bearish divergence as well. But once again, we kind of have this sideways price action. We've got a bit of a volume node here. We're still kind of maintaining above all our moving averages and above our
volume
indicators for the most part here. We had a pronounced sideways period right here. This volume profile point of control, our thick red line, 161. That is a key price level that we have managed to overcome as well. So now, once again, when we look to the upside, we're pretty much at our linear regression line, our idea of fair value. So the next boundary would be the upper part of our white channel there, maybe near like 197 or so. Plus one channel comes in at 228, quite a stretch at this point. To the downside, yellow 21-day EMA near about then our recent set of lows near 183. Make some points to keep an eye on.
What's going on here?
Quite a good chart.
Oh.
Quite a good run. Love the perspective on the technicals, the difference between three
A
good
little nervous.
charts, right? Pretty clear difference, all very tradable though. All right, thanks. Rick, thanks, Jenny. Coming back, look at the market, which is turning south. Russell under some pressure. Nvidia higher, but pretty much all the market's got going for it right now.
Not much after that, they'll sell off. What's going on here? Oh, really?
In New York, Caroline getting started here. We definitely got hit a little bit, but you know, basically the Russell, S&P's, and Nasdaq down less than 0.5%.
Yeah, the Nasdaq was modestly higher, but reversed back into negative territory. But I mean, it's been a 6-week winning streak. So given that, the Russell, yes, down about 1.2%, but S&P only down about 0.3%. Nasdaq down a little bit less than that, and the Dow down, only about 0.5% right now. So I think it's important to put it into perspective. We did see Nvidia bust through to a new all-time high, moving above the 140 level, but even that has come off those earlier highs. So still positive. In terms of some of the other winners, we do see Alphabet higher as well, and Apple. But the rest of the Mag 7 lower. Tesla notably lower ahead of its earnings later this week, down about 16% just this month alone, heading into that report. I know you were talking about some of the other earnings on tap this week, but if you take a look, for the most part, we're going to hear from a lot of defense names, telecom names. I had mentioned Tesla as well, Boeing. A lot of Boeing is a big winner today. Of course, there's a potential agreement, so a potential end in sight for that labor strike. So one thing potentially that could go right for Boeing. But, it seems like all the names that we're going to be hearing from under a bit of pressure today, even IBM, which is a kind of a quiet winner, up more than 40% year to date. I was actually surprised when I was looking at that chart. It's not a name we talk about, but that's one we'll hear from this week as well. So that's under some pressure as well. So not a lot of huge notable moves, but we are seeing some weakness outside of tech and energy, with real estate, healthcare doing the worst. And then
Jimmy wants to break the 9 now.
I saw that Target, Deckers,
the SPX,
TJX, all losers today as well. But we are seeing winners in terms of Uber.
I don't know if we're going to do it.
So not an overall, bearishness on the consumer today.
Yeah, good point. Good.
Bearish in the market, though.
Still a good bit working here today. The small caps bearing the brunt of it. I wonder if it's rate related. Joe, bonds are selling off pretty hard, and we are inching now towards some levels we haven't been to since the summer. And
yeah.
Yeah, no, I think you can easily make that connection between small caps and what's happening, with the 10-year yield up at 4.15, 4.16% right now. That has a negative effect on the small cap companies that need to borrow at lower rates. You saw their outperformance when the 10-year was down around 3.7. So some of that is giving back what we saw earlier in the fall here. So Yeah, that makes sense. I think if you look at
AMD had a little knife.
So far, I'd probably give it a B plus. You know, we got about 79% of companies are beating their EPS estimates. You know, this week's a big week. We got 112 of the S&P 500 companies, not the big names from the mega caps outside of maybe Tesla. Coca-Cola will give you a little bit of an idea on the consumer. But I think one thing that's kind of sticking out to me a little bit, and this comes from Bloomberg, is this idea that both beats and misses are seeing a little bit of a bigger move than what we normally would expect from companies. So if you beat, right, if you beat on the EPS right now, the one-day excess
Not looking too good.
that you're seeing on the stock is about 2.1% relative to the S&P 500. So they're getting about a 2.1% beats to the S&P 500 move on the day that they beat earnings. If you miss, you got about a 3.8% downward move relative to the S&P 500. So these are outsized moves that are kind of showing that you know, when you got a market that's priced at 21 times PE, forward PE, things are kind of priced for perfection. So you better beat and you better raise.
You think just right now it's sort of a high beta market, Joe, with the big moves regardless? Is that kind of the point?
Yeah, no, I think that's a fair assessment, Oliver. I think that, you know, what we've seen is we've seen some strengthening from the breadth kind of underneath the surface, which is good, right? Because that way the mega caps themselves don't have as much of a outsized performance relative to the S&P when you're looking at earnings. It takes some of the importance of those names maybe out of this earnings cycle. Not much, but I mean, to a certain extent, it does help when you see that breadth expanding. We're at a point now where I think about 75% of the S&P 500 is trading above the 50-day moving average, so that helps. I mean, we've seen the breadth expand in real estate, in utilities, and industrials. So in financials, you know, kind of given the earnings that we've seen.
SPY had a nasty sell-off too.
Even some of the smaller banks, some of the regional banks have done pretty well. I think that's helping, but you know, we're still kind of set up.
That's on the 5 minute.
The market expectations are pretty high. And if that's the case, then, you know, look, if we can continue to beat at that 79-80% rate that we're at right now,
it's a double bottom.
I think if they come in a little bit lower than that, markets might take a little bit of a pullback here.
Okay. Good thoughts, guys. Thanks, appreciate it. The analysis and the look at what's working, what's not.
Okay.
Joe, thank you for joining Morning Trade Live. Trading 360 with Nicole Petaliz is coming up next. We'll see you at 2 p.m. Central Time.
Baiting on getting out of this.
Have a great day. This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Good idea.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. So if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
Get them drunk.
Find opportunities in the marketplace.
That's how you exploit them.
Enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen
Blake.
have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales.
You might want to, never mind. I was going to make a joke. Better not.
Do you think that this is potentially a human superpower?
I don't think it's going to go our way here on the breakout.
Welcome to Market Overtime on the Schwab Network.
Got one more minute.
pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
No, I have not.
The old guard is saying,
She keeps asking me that.
It's controversial and it's going crazy right now.
it is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you
Fat
are
cat
with us.
time.
Big show for you today. By the way, yields higher, stocks under pressure. A lot to discuss. In our 360 spotlight, we'll take a look at Disney. Now we have some timeline on the company and the successor, of course, to CEO Bob Iger. Our disruptor today, GitLab, after Needham upgrades the stock to a buy rating. And our 360 round will dive into the mag 7 stocks. We're looking at that group as well. In the meantime, let's take a look at the market. So after 6 weeks of gains, you're seeing a pullback here. 5844 is where the S&P 500 is standing right now. It is down 1/3 of 1%. The Nasdaq down for 1/4 of 1%. The Dow down 1/2 of 1%. The Russell, that's the small caps down the biggest. The VIX is sitting at 1892. Oil and gold are gaining. Gold is up about $10 right now, 27.39. We've seen record highs on gold. Oil back down as it's below the $70 mark, 69.90. So that is down fractionally as well. So we're watching UPS this morning. Let's bring in Jenny Horn, markets correspondent here on Schwab Network, taking a look this morning at UPS, a Barclays downgrade. Tell us more about the story. Good morning, Jenny.
Good morning, Nicole, and unfortunately not some positive news for UPS, which frankly needs it, as Barclays downgraded shares to underweight, which is of course equal to sell from, or to underweight, from equal weight, with an unchanged price target of $120 a share. Now, the analysts that covered this name, they're about 32.
Right now we're having a big market sell-off.
Right now is 145, so the low is $100 a share. This definitely puts then Barclays 120 at the lower end of the range. But they said the company's near-term earnings could be pressured by a still weak parcel demand backdrop. But long-term pressure is also from Amazon, as well as
SPY dropping big,
and limited dividend growth paint a relatively tough outlook, they believe, for UPS shares. And of course, this is just the latest black eye on the year for UPS. Shares have fallen about 15.5% year to date, lagging FedEx's almost 8% gain, as the company does struggle with a surge in lower margin e-commerce volumes. And investor sentiment has also been somewhat damaged by overall surprise earnings misses we saw back in July, as well as a pretty deep cut to full year sales guidance. And third quarter results are expected on October 24th. That will be this Thursday. But the street is bracing for another round of bad news, with more and more contraction as far as their growth story is concerned. So as we know, comparatively, FedEx underwent a massive cost restructuring and cost initiative savings plan. UPS has somewhat been more of the disappointment, but facing relatively deep-pocketed Amazon is also not a great, right now, headwind either as we go into this new year. So it will be interesting once we finally get some updates on their fundamentals this week, but definitely not starting off the week strong here, as we're modestly down about 2.3% on the session, and more of this analyst pile-in effect. Although I will say there are still 14 buys and 16 holds, so they definitely skew at least more neutral to optimistic as far as overall analyst coverage is concerned.
Okay, thank you for that. So 132 today, and that price target 120. All right, Jenny Horn, thank you, markets correspondent. Let's to get some insights on the news shaping the markets. Stephen Eeyore is with us, CEO of Quasar Markets. Good morning to you. So we had weeks and weeks of gains, 6 weeks of gains, pulling back here as the yields are on the rise. What do you surmise is happening between now and the end of the year?
Yeah, Nicole, good morning. Yeah, you know what? I am actually turning bearish. The Case-Shiller PE ratio right now is sitting at over 37. Put that into perspective, on the average it's been 17, and the dot-com bubble, I mean, that was at 44. So yeah, I'm expecting a healthy pullback, maybe even a market rug pull in a way. Look, I'm not liking what's going on. Warren Buffett's not liking what's going on. He's raising cash. And you're seeing people buying gold and silver and platinum and Costco. So people aren't feeling as good as they were. And you're starting to see rates go back up. The 10-year now back at 4.15%. That's putting a little bit of harshness on smaller caps. And that's hard on the broader market. So right now, I think that we need to see a pullback. Yes, maybe 10, 20% here.
All right, 10, 20%. At that point, would you be buying?
Yeah, I think I would have to almost take I'd almost have to take a pass at that. You know, because looking at 10, 20% going into the end of the year, I think one of the things we have to look at is just how much breadth does the market have at that point. I mean, even saw David Rosenberg for the first time of Rosenberg Research say, hey, look, he's the guy in 2008 said that the market was going to crash, and he's calling for that again. So for me, look, there's a couple of pieces of data that I'm looking at also as well. You just saw the American Association of Individual Investors. Their new sentiment survey is now saying 48%.
They don't sound too
says that stocks
hippity
are
hoppity,
overvalued, and only 2.6% say they're undervalued. Even the average investor now is saying, wait a minute, I think the market's a little too high right here.
Yeah, understood. You know, so this cautionary tone that you have, are you also buying gold? I mean, how are you hedging?
Yeah, you know what's interesting, Nicole?
Damn, look at that.
$19 an ounce. I was buying silver. We talked about that in your show about 3 or 4 times ago. And now we're here at $34 an ounce. I still think we go to about $50 an ounce on silver as it becomes that hedge. You're seeing Bitcoin at 69,000.
Well, we hit
over the weekend, pulled back a little bit here.
581.43.
Another hedge against the market. I think we're going to 100,000. And look, you're starting to see places that normally don't get money going into it are now getting money as a hedge. One of the things that I saw also over the weekend was Germany. I mean, when you look at Europe, the biggest manufacturing country in Europe is in contraction 2 months in a row now. So it looks like they're probably going to stay in recession, and probably why the Fed did that 50 basis points. And there's a good chance they might have to do it again.
Yeah, you know, it's interesting because you have this cautionary tone.
You got 581.02.
Why would they be buying Bitcoin? I mean, are there some people who say Bitcoin is risky?
Yeah, I mean, I remember when they told me Bitcoin was risky at 2,000 and 5,000 and 19,000 all the way here. Look, I get it. I understand that the new asset class is harsh for some people, but when you're looking at an asset class that's the future and digital currency and where I can take that anywhere I want around the world, quite frankly, that's why you're seeing it. You're seeing more of a mass adoption of Bitcoin. You saw it over the weekend, possibly saying that Tesla's going to start accepting Bitcoin again for their cars. And of course, I think also Bitcoin is also a referendum on the election. I think more people think that Trump might be winning the election, and that might be a referendum on that as well. I would not be buying any crypto based on political, but I would say this much. I think people are becoming mass adopters of Bitcoin. We're now at $1.4 trillion in asset class. So, hey, that's a lot bigger than it was a year and 2 years ago. So the adoption of it is actually making Bitcoin more palpable to everyone now.
Understood. What did you think of the Netflix earnings last week?
Hey, you know, that's a good question. I said 2 things I wanted to look at for Netflix. The first thing I said I wanted to see was the subscribers. I don't care about the addition of subscribers, but I think that the question in my mind was, are the subscribers upping their tiers? Are they getting away from the ad-based tiers, and are they going to one, I don't want to watch ads anymore, so are they going to that tier? The answer was yes. And I think also they're raising their margins, by going to maybe cheaper foreign films, live sports, foreign movies, and this big one with the Menendez brothers and true crime has really been a hit there at Netflix. So people are actually staying at Netflix, and I think that was a good. And we heard that. From Netflix that people are actually staying longer, they're watching it longer, and they're really kind of into the true crime series. So Netflix has really pushed it to that level. And look, I think it's Netflix and chill, and I think Netflix goes to $1,000 a share next year.
Wow. All right, $1,000 a share from 760. So you would buy it here, or would you wait for a pullback?
No, I'm still buying Netflix. I think it's one of the few precious stocks right now that you can actually buy that really isn't affected by the overall market. I think people, whether good times or bad times, are still watching movies. And I think Netflix really is in that area now that's helping. The other place that's actually, interestingly enough, has done very well, you talked about it earlier, was Disney. I think that they've really pushed up their level of movies as well, and so people are watching, with the ABC, and you've got Nat Geo as well in there. So they really have done a good job too as well, and I think Bob Iger sticking around for another year is also good. So Disney and Netflix are looking pretty good right now.
Yeah. Yeah, as I think about this big picture overall, we are hearing different things about the consumer, the holiday season. You're seeing yields higher. We're expecting the Fed to do a rate cut, maybe, right? November, December. What
Absolutely.
is your, outlook for what the Fed may do and how the consumer may be feeling?
I think Dow Theory is a good example of that. You're just talking about it from FedEx and UPS not coming in the better earnings, and we'll see that too as well. Look, it's very simple with FedEx. They told you that in the holiday season that they were going to hire for the holiday season, but they weren't going to hire more people than last year, probably about the same, if not a little bit less than last year. That tells me a lot that they're not really seeing a big sales season. And I'll tell you, for me, the Dow Theory tells me everything that I want to know right now, and it's not a good outlook. And if that's really bad, then here comes January, and that rug pull could be coming end of December, early January as we see it. One of the things that I think the Fed is looking at too is the FDIC. I mean, they put 60 banks on the problem bank list with over $500 billion in unrealized losses. So if the banks aren't doing well and the people that are delivering the presents aren't doing well, and everybody's staying home watching movies, and Warren Buffett himself is still raising cash, I had to put the warning signals up.
Yeah, understood. Stephen Eeyore, great to see you. Quasar Markets, thank you for being here. Good to see you, Stephen, thanks. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Kenny Bulgari is standing by, and he will have the trades for ASML, Palantir, IBM. He has a tech theme. Trading 360, Schwab Network. We'll be right back.
Double bottom on the QQQ. All right, well, I'm gonna go get my lunch going. And I will be right back.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides. It's time for the Big Three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts here to take us through the trades. Kenny Polcari is here live in person, senior market strategist at Slate-Stone Wealth. Welcome back to New York City and your old home here at the New York Stock Exchange. Kenny Polcari, how you feeling?
It is a pleasure to be here. Yes, I feel great. Life is good. You know, missed those tornadoes in this hurricane, so that's good. But I always enjoy coming home, right, to the next
you
stock
watched the
exchange.
market running up for 6 weeks, pulling back today.
Right.
I know you have a tech theme today. Just a big picture thought?
It's a, well, so I'm not surprised that the market's pulling back today. I actually thought it should have pulled back. Seasonal weakness in September, October, which we apparently didn't have any of. I think part of that is because the presidential election and the Fed's trying to kind of protect the markets a little bit. So I'm not necessarily surprised to see it back off today. I think it should back. I'd like to see it back off more, quite honestly. Just as a long-term investor, I want the opportunity. But today, let's talk about tech because it is going to be all about the tech earnings. You can feel the excitement. We've seen how tech is traded. It's certainly not going away. The whole AI theme is certainly not going away. And it's interesting because we had a little bit of a confused market last week between ASML and then TSMC. But I think there's a disconnect, and I think ASML, like we'll talk about, is the first name.
That because here's the thing, you know, last week I saw it down 18%. You were saying it was down more than 20. I could give you, let's say, folks, a 3-month performance. It's down 23%. You think that this is a buying opportunity?
I think it's a huge buying opportunity. Actually, if you look at it, from the high to the lows last week, it was down 35%. Right now, they came out with their earnings earlier in the week. They missed, and their guidance was a little bit less than robust. They crushed the stock because the thing is, investors don't want to be surprised, right?
Yeah.
If ASML had come out and pre-announced or forewarned the way companies do, they would take some out of the stock, but they wouldn't crush them the way they crushed it. And so I think now it's just so overdone that it's just a screaming butt. Look, it is the largest European tech name, and they have a monopoly on the lithography business.
Yeah.
So it is by far, I think, one of the greatest things, and this provides a huge opportunity.
Yeah. Good morning, Rick Ducat. We want to know what you think about the charts. If you can show us some technicals, please.
Yes, good morning. And when we look at this chart, you know, obviously what Kenny was referring to was a very severe drawdown that we had about a week or so ago here. And, you know, what was interesting to me is that for the most part, though, when we look at our chart here, you can see that we stopped at a key area all the way back here, this green line here matching up with these lows that we had after this small gap up. That's just about where we dropped and recovered recently here. So near about 674 looks like an important area to me. We can also see that we formed a downward sloping trend line in white here. And then if we were to duplicate it, put across our lows, wound up matching pretty closely with where we bottomed out here. So this could provide you with some potential guidelines to watch in your own trading here. But, you know, for now, the trend does seem to be more geared toward the downside. We're below our moving averages. The moving averages are trending downward here. You can see that RSI was looking like we were going to get a bit of a breakout above that downward sloping red trend line here, but it has been pretty much shattered convincingly at this point. We are below the 50 midline, but we did manage to stay out of the oversold area, so perhaps a bit of a bright point there. If we were to keep moving to the upside, this red line right here, we've got some resistance fairly close at hand. Previous lows here near about 734, that would be one mark to beat. Then the next area would be our 21-day EMA, currently near 787. If we were to move to the downside, 674, that same area I mentioned before, but also right here where there was another small gap up, and that was the low point as well, that light green line. So 674, then 627 would be some downside areas to keep an eye on.
Oh yeah, well you got to watch the downside, but you're saying the buying. Wait, let me say one thing.
Yeah.
So we think about the high that was 1100, but the not so recent high was 800, 900. Where do you think this is headed?
So I actually thought when it broke down that we were going to test that 624-ish range. That's kind of where I had my eyes on. But then TSMC came out and announced on Friday, and they blew it out of the water.
Right.
And guess what? TSMC is ASML's largest client. So there's a disconnect to me in the story, which is why I think the ASML thing is overdone.
So you see the rebound.
Anywhere in here, we would be a buyer. We own it. We would be a buyer, and we're certainly looking for this story to. This is a long-term story.
All right. What about Palantir, a name that has been running up? It's a great performer.
My question is, how long is it?
This year, recent highs.
It is, and it's just one of those great names that has acted really, really well. And if you look at it on the chart, and we'll talk about it, it's got this very significant stair-step pattern. It goes up and then it levels out, then it goes up again, and it just took one more step up. I think it's just building another foundation right here. Trades in the 44-ish area. And then I think it's getting ready to take off again. Look, it's the same story. It's all about AI. We're going to have these AI earnings coming out. I think, like Dan Ives says, we're in this second derivative of the AI trade, and names like Palantir are going to benefit.
All right. So, when I look at the prices, and I should have gotten a price from you. I mean, when I said on the first one, ASML, which was at 714, do you see the 800 and the 900?
Absolutely. We see it going right back to over 1,000. Where was it? 1,100. Sure, but again, remember, I'm not a trader, right? I'm more of an investor. So if somebody's looking to day trade it, they'll day trade it as they want.
And so for Palantir, which is at 44, you see the upside. I'll get your upside in a minute.
Yep.
Let's hear what Rick Jacat says about the charts. Please, Rick.
Yeah, that stair-step type of price activity is something that you see commonly in stocks if you're kind of know what to look for. When we look at our chart here, you can see kind of there was a long kind of horizontal period here. You can see it was our volume profile point of control, thick red line, area of heaviest trading. That comes in at about 24, then a big gap up, or excuse me, not a gap up, a big rally here, another sideways movement, rally, sideways movement here. So actually using your volume profile study can help you identify these important price levels that are kind of forming the stairs, so to speak. So right now you can see volume filling out at these elevated levels, potentially forming another stair that could prove to be the base ground for another leg to the upside here. And when we do look at that, we can see that, although we have not eclipsed those previous highs near 44.39, we've got earnings coming up here. We are seeing a bit of a slowdown in momentum. You can see we had our green line trending upwards that has been breached now, and we also have slipped out of that overbought area. That would be a little bit more of a bearish signal here, kind of a bit of bearish divergence as well here too. You can see that RSI did not make a significant new high, even though price did, but really quite common for momentum to slow down as we head into an earnings event that's coming up fairly soon here. If we do keep moving upward, first step, 44.39, that would be the previous highs. That'd be one area to watch. Plus 2 standard deviation channel, then our orange line, 2 standard deviations above our line of best fit, our linear regression line. That comes in near 48.42. If we were to move to the downside, we've got our +1 linear regression line lining up with our white trend line there near about 41.60, and then a low point and our 21-day EMA line up at our green line here near about 40.30. So a couple more areas to keep in mind.
Yeah, understood. It's interesting because Dan Ives, who we have on all the time, and he's always sort of been bullish.
Yeah.
He talked about Palantir, he talked about the AI revolution, and he had a lot of names in there. Of course, NVIDIA and Microsoft are the core drivers, but he said Oracle, SAP, ServiceNow, Palantir, Salesforce, Dell, IBM. I'm looking for Cisco. I don't see it in this note, but that's the point. IBM, Apple, and Advanced Micro. So do you think the AI revolution is here as well?
I think it's here to stay. I think it will be here for a while. It's not a story that's going away by any stretch of the imagination.
Yeah.
And like to Dan's point, we're moving beyond Google and Apple now. The second derivative is going to include all these stocks. So it is all the ones you said: AMD, Palantir, IBM, Cisco, SAP. Right.
All right. Next up, IBM.
IBM.
Where does that fit into this?
It's first of all, it's a favorite of mine. I own it, right? It's the Big Blue, as you know, as its old name was.
Yeah.
But it also is in this space, this AI and cloud space that I think is underappreciated. Their earnings are coming out, I think, tomorrow afternoon or Wednesday afternoon. It's either tomorrow or Wednesday, but it's this week for sure. And it's just another one of those names. It's a great dividend payer, pays about 2.8%. But again, for me, it's about long-term investing. It's not. I'm not day trading it, so it's just about getting in on a solid name. I think we could see it pull back a little bit because it's had a nice move. But I'm not on any pullback. I'd be a buyer.
Yeah, Morgan Stanley yesterday put equal weight on the 17th.
Yeah.
Has a price target of 217. Today it's at 230.
Right.
But you see opportunity. Stifel has a 246 and a buy. So you see opportunity, particularly on a pullback.
Yeah,
Let's take a
for
look
sure.
at the charts, please, Rick.
Yeah, kind of similar to our last chart in that we've had a strong rally recently, and also the volume profile study kind of exhibits these key price levels that we've been looking at here. Once again, far above our point of control here, our thick red line. We have long ago surpassed that here, but another node here and another node here showing these are the important price levels around 215 and 230 or so. So now we are finding ourselves once again using our standard deviation channels. We're pretty much right on the money at our +1 channel here, which comes in near 231.45. We are a tiny bit below it right now, so this will be a key point to see if the bulls can hold as we progress through our trading day here. RSI, kind of a curious situation. Once again, here you can see we did break through our green trend line, and we have pushed below our 70 threshold that represents the overbought area, but really very strikingly large amount of time spent in that overbought area typically is a sign of strength. And once again, not to keep saying the same thing here, we have earnings coming up, so momentum is going to slow down, it's a typical situation here. So I wouldn't make a ton of noise about that trailing off a little bit here, but I would be curious if we were to get a more severe downward move, a break below that 50 midline would be a little more bearish. In terms of support and resistance, recent highs 237.37, that's the mark to beat. +2 channel comes in at 252.77 here. To the downside, we've got our 21-day EMA lining up with our trend line and some old highs here. Our green line just a little bit below that, so between like 224 to 227 could be a supportive zone.
All right, so you think the same, right?
Yeah. Agreed.
All right, final thought?
I think it's going to be interesting. We've got, a week and a half till the election.
Right.
I think that after the election, we could see the Fed pull back a little bit. I think the Fed's been holding the market calm going into the election. It's been chaotic. I wouldn't be surprised to see us hit some volatility soon after the election. But then I think the market settles in once we know. And then we're off to the races again, especially in these tech names.
Right. All right. All about tech. I mean, we have our last guest who's getting very bearish and nervous about some big pullbacks.
Yeah.
And you're feeling good about tech.
Very good about tech.
Good to see you.
And
Penny
used.
Carey, Sleep Stone Wealth, and Rick Ducat there on the charts for the big three. Thank you both. Coming up next, we'll spotlight Disney. The company has announced when they will reveal the successor to CEO Bob Iger, what it means for the company going forward. More next here at Trading 360. We'll be right back.
You go.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. #1 broker here for the #1 hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Apple up 38 cents.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for a spotlight on Disney. The company has announced James Gorman will be the chairman, and that will be a big deal there in that role. But who will replace Bob Iger? So let's go through some of the details here. Jay Woods is with us, Chief Global Strategist, Freedom Capital Markets. James Gorman, a great name here to move into that big role, executive chairman at Morgan Stanley, and he'll move into the Disney slot. That's a big deal. And then there's Bob Iger, who's going to take over for Bob Iger. What do you think is going on over there?
Well, this is playing out like a real movie itself as to what the succession plan is going to be. Let's focus on James Gorman first of all. He comes from Morgan Stanley, where he went through his own succession plan, where he was replaced by, I believe it was Ted Pick, a few years back. So he's been down this road. He came to the board of Disney. Why? Because the Nelson Peltz, what do you call it, the ruckus that he caused by his activist investor stake, and he was there to kind of help along this plan because Nelson Peltz wanted to know what the succession plan was. So we know that Bob Iger is done at the end of 2026. He's 73 years old. He came back because the succession plan, the first time he went through it while he was CEO from 2005 to 2020, didn't go as well as they hoped. They brought in Bob Chapek from the theme park division, kept it internal, and they had some struggles. Granted, it was along the backdrop of COVID, but they had other problems with the movies and the theme parks. So Iger came back like Howard Schultz did at Starbucks to help right the ship. Now, when he came back, the stock was trading at $86 in November of 2021 when he was named. It's trading at $97 now. We haven't seen the tectonic shift that shareholders were hoping to see.
Yeah.
And that is, what's going to lead us to how are they going to go about picking the next person.
And Nelson Peltz has gone back and forth, when he was obviously making a lot of threats and really had his nose in things. But then he started to say that Bob Iger was doing some of the things that he had hoped, and so he was going to back off. Yep. The question is now, people want clarity. Market does not like uncertainty. It's well off the 123 high now. It's at $96. And the CEO search is underway. Who do we speculate could be the next CEO?
Well, we all speculate it's going to be an internal hire. We don't think they're going to go the Starbucks route and hire like the CEO from Chipotle, Brian Nichol, who came in. That stock went up 25%. We may hear chatter about that. Maybe they'll look like, hey, who's at Netflix that's available? I don't think they're going to go that route. Bob Iger has gone internal. James Gorman has gone internal in his process before. There are three names that pop up from three different divisions. You have TV, you have Dana Walden. She's been there since 2019. She came from Fox. Then you have two names that have been pretty much Disney lifers. From the theme park side, you have Josh D'Amaro. He's been there since 1998. We've gone theme park once. Will we go theme park again? That'll be interesting. And then from the media side, the movie side, the Lucasfilms and the Marvel content that they have there, we have Alan Bergman. So those are the three names. He's been there since 1996. So those are your front runners. There are a few other internal names. You know, someone from ESPN is being looked at. But it's going to be interesting. Do they focus internally, or do they make this a bigger search and look at some external names? Because I'm sure they're going to get some interesting resumes as this process goes along. And then watch earnings on the 14th of November. This will be the first time maybe they address this in the call, how the succession plan is going, what direction they're going into. But right now, investors aren't happy. The stock is up 8% year to date. The S&P 500 is up 23%. It's 21% off its March 21 highs when Nelson Peltz was involved. So there's a lot of room to turn around this stock. This is the first step, hopefully, in that turnaround.
Yeah, so I mean, at this point now, would you recommend buying this stock, or what do people say about whether or not to buy this stock?
Well, I think we have established a floor in the stock. The stock price has been underperforming the market, but a risk-reward setup now, knowing that we've got the right people, I feel the right people in place to go through the succession plan that is going to be done thoroughly. They're not just rushing and naming someone along. This is something Iger was on a podcast with Kelly Ripa last week, and he said, I'm obsessed with the search for the next successor. So they are going to do this methodically. Hopefully they do it right. As far as a risk-reward setup, I think it's going to take some time for this stock to come back. But this is optimistic, and I think it's a good entry point if you have patience and a longer-term horizon.
You know, we think of Disney, we think of theme parks, we think of streaming, we think of the cruises, and so much more under the umbrella. When you think about the revenue streams of Disney, any thoughts on any of that?
Yeah, well,
I mean, ticket prices are expensive. I know that.
The theme parks, my daughter was just there. I heard all about it. Venmo was very active that week. She was in Disney. But yes, the movie business has been competitive. The streaming business, extremely competitive. So they need someone that's going to come in and going to thrive. Do they have the people in place to do so? That is the question. They're going to, ask those questions internally to see if they do. But it's been a very challenging landscape. They got through COVID. Now we're, trajectory looks up, and we'll see how it goes.
Who's this guy?
This year-long search. It gives those people that are internally in these positions time to really focus on how they want to improve their, individual divisions, and then what their, future optimistic outlook is for Disney as a whole.
Mission statement.
It's going to be fun to watch. And like I said, this is going to be a movie itself.
You noted the earnings that are due out soon in mid-November, November 14th, and you do have UBS saying that they expect a rise of 33% year over year for fiscal fourth quarter earnings. Part of the drivers, and I'm sure you can comment and probably agree, ramping profitability and direct-to-consumer, stable parks, launching a flagship ESPN, similar headwinds in linear. When I think of launch a flagship ESPN, I'm not 100% sure what they mean by that. But
Sports.
The landscape's tough and competitive.
It is, and with James Gorman, I know in his days at Morgan Stanley, especially towards the end, a few deals there to help the business grow. It wouldn't shock me to see Disney kicking the tires on some of its competitors. Maybe a deal could come in place to help grow some of those businesses that have not been. But overall, it's more of a wait and see, and it's going to be a lot of fun. And internally, I can't imagine the stress that's being caused on some of these employees as they go through this process.
It's interesting too, because as we talk about the landscape, I didn't realize that everybody's trying to figure out, you have bundles and whatever, and even Apple TV now is going to be available on Amazon Prime. Apple TV will join Prime Video's collection of an add-on. I mean, you know, they have to figure it out. Pretty soon we're going to be back to the cable.
Yeah, it seems that way. What's old is new again, and
but we'll continue to watch that. Guggenheim has a price target right now. They have a buy rating which they maintain. Walt Disney 110 from 140, so they did cut back on that. It's at 96 today. Thank you for the details.
You're welcome.
Jay Woods, great to see you. Glad you're here from Freedom Capital Markets. Coming up next, the disruptors. George Sillis is standing by. He'll take a look at GitLab. Needham upgrading the stock to a buy. He'll explain all the details. We'll also have an example trade for us. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360 live on the floor of the New York Stock Exchange. I'm Nicole Petalides. Glad you're with us. We're looking at the developing story of Boeing, which is up 2.7% today. And the very latest on the strike developments, let's bring in Caroline Woods, senior markets correspondent here on Schwab Network. So maybe something's brewing.
Yeah, there's an potential end in sight for that 33,000 machinists that are on strike. They'll vote this week on a tentative agreement that could end the strike, which has been going on for a month. It's, of course, halted production of some of Boeing's planes, and it's costing the company a ton of money, according to estimates. The updated proposal that they're currently reviewing, or that they will be reviewing, includes a 35% wage increase spread over 4 years. Incentive pay, that will be reinstated with a guaranteed minimum annual payout of 4%. The company will match 100% for 401ks of the first 8% contributed, alongside a 4% automatic company contribution. There's a one-time $5,000 contribution to each of Boeing's 401ks, and then there's also a one-time ratification bonus of $7,000. The machinists have already rejected 2 offers at this point, including one that called for a 30% pay raise. So this is now 35% increase over 4 years. A majority must vote in order to approve for the deal for it to pass. But the fact that they're considering it seems like maybe that's a positive sign. If you take a look at stock price action, Boeing shares up more than 3% right now. So Wall Street appears optimistic. Also important to know, Boeing reports earnings
on Wednesday. And, you know, there's been a lot of headlines.
I wonder how
from
this
Boeing
will factor in.
You know,
Really?
right, and how much of the bad news is already priced in at these levels, and we already know Boeing has, you know, had some pre-announcements. They've, of course, laid off, or they're laying off 17,000 workers. They filed some paperwork to raise up to $25 billion in stock and debt-like securities to try to, you know, avoid junk status in terms of their credit rating. So they've been taking a lot of steps. So. You know, earnings will be another catalyst on Wednesday, but right now it's kicking off the week on a positive note.
Look, the vote is not guaranteed by the employees. You know, it's an updated offer, but the employees, it's all about this vote. The language sort of reads like maybe, because they say the company and union leadership agreed to tentative labor deal. You know, I wonder if the language seems a little different than the last round. Do you think that they're more likely to get the vote this round? Any way to tell?
Well, just based on what the stock is doing, it seems more likely than it was before. I mean, before it didn't even seem like there was an end in sight because they couldn't come to any agreement. So I think that 35% wage increase, you know, the sweeten, they're not getting the pension that they really wanted with this new deal. But I mean, we have to wait and see because the majority has to vote yes. But the fact that they're even willing to, you know, negotiate this particular deal means that it must be good enough to at least do that.
All right, let's see what happens. Caroline Woods, thank you. Look there at Boeing at 1:59 today. Let's turn our attention over to the disruptors. George Sillis is with us, senior markets correspondent here, taking a look at GitLab. And we saw Needham upgrading this stock to a buy this morning. Some of your thoughts on the language, why they're making these moves?
Well, I think the market is really starting to develop for GitLab and GitHub, which was actually bought by Microsoft. And these are a couple of development software platforms that are open source. They help essentially programmers and software developers build, develop, and actually deploy and operate software on their platform. It's cloud-based, and effectively it's been a very popular technology for sharing code and, of course, displaying open source product and development. So I think if you look at Needham's call, they're actually increasing their price target to $70. They had a hold rating versus a buy rating now. We actually see very promising top-line sales growth for the business. It was around 28% based on the trailing 4 quarters. They're actually seeing about 30% or incremental increases in revenues, but also incremental increases in margins for this particular name, which is actually still unprofitable on a consistent basis, but the guidance for the next 4 quarters is for a full year of profitability for GitLab. And it's still growing around 30%. Their open source platform is becoming more popular. They're integrating artificial intelligence alongside the developers. There's over 30 million developers that actually use this platform. And like I said, this market is actually contracted to 2 major players, which GitHub is owned by Microsoft. So with that said, that should actually be incremental for the margins for this business, but also for the Microsoft competitor as well.
Yeah, understood. So they have a $70 target. How would you go about an example trade today, George?
So if you look at the chart, it's actually trading quite well. It's had a couple of tests of the 200-day moving average. You go back to July and even in September, it seemed to have found resistance at 200, but it actually is breaking above it. So what I'm going to do in this case is I'm going to structure a bullish to neutral trade using that 200 period moving average as a benchmark support now, which is around $55. So what I'm going to do is I'm going to go out to November with about 28 days to expiration. I'm going to sell very simply a cash secured put at the $55 strike. And earlier today, you could have harvested about $2.50 a share or $250 a contract. So essentially, the objective here is for the stock to stay above 55 between now and expiration. $2.50 relative to the strike price.
GTLB.
Yield to strike price, and that's pretty good in the next few weeks or so. If you do place this trade, you have to be willing and able to take ownership of the stock at 55 if you're assigned the shares, but your cost basis is 52.50. So what I'm doing is I'm looking at the momentum, which is positive, the technicals, which are now starting to turn, especially with the price above the 200-day moving average. But the market's been a little jittery, so I don't necessarily think the stock can't retest that 200-period moving average. But in the meantime, the premium on this option will erode and essentially to zero if the stock stays above 55 by expiration.
So had an overweight and a $70 target recently as well. Thank you. Good luck there as our disruptor GitLab today. George.
Yeah, George.
Coming up next, our 360 round, we'll dive into those Mag 7
GTLB.
stocks, because we've seen some earnings coming in for some of the tech giants. What do we need to know on the group going forward? We'll be right back.
Georgie, Georgie, Georgie. He knows a lot of stuff.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round, and we take a look here at the Mag 7. And Quentin Tatro is joining us, Managing Director at Jewel Financial. And you think some of these names, it's all baked in. We got to be careful. The exception may be Tesla. What's the big picture? Why baked in? So you're a little maybe tepid or cautious here?
Yeah, first of all, Nicole, it's great to be back with you. I always enjoy being on with you. So, I mean, listen, these stocks have been absolutely fantastic, have propelled the market to these heights we haven't seen ever, and they've been wonderful. But there's a common theme among a majority of these, and that is they are now fairly significantly overvalued by a variety of metrics. The most simple would just be simply looking at forward multiples compared to
I tried to
growth
tell
rates.
them.
And these companies have
Nobody would listen to
historically
me.
been this way. So I know there's many out there that are going, okay, what's new? But they've been this way, and then they beat significantly, raise guidance above anyone's expectations, and in the rear view mirror typically look undervalued. We don't see that anymore. We see these companies at stretched valuations coming into an environment where they're trading at all-time highs, most of them, and if there's any hint of even in-line expectations or in-line guidance, we believe it sets up for a sell the news reaction. So when you bake all that into the cake, we're just not a fan of sticking with or adding to Mag 7 exposure here.
Okay, joining our conversation, Kevin Riley, Managing Partner, Exponential Investment Partners. How do you feel about the Mag 7? Is it a theme across all of them, or is it a sort of a mixed bag?
Well, for most of them, we tend to disagree with each other. I think they are a good long-term buy. Sure, some of their PEs are a little high. Microsoft's PE is still very high, despite the fact that it's come down from 460 to call it 415 or something like that. So on a charting basis, that one looks pretty good. The one we would try and avoid is Tesla here. It's just not looking so great. The stock dropped $20 after that reveal at Warner Brothers 10 days ago or so, whenever it was. Maybe sell some puts on Tesla at 220, so it seems to have support down in that range. But we like the others except for Tesla.
This is some panel because you're totally on different sides. Quintatro thinks the group may be overvalued, and Kevin's saying, well, I think they're good buys long term with the exception of Tesla. Quintatro, the only one you really may like here is Tesla. So Quint, why Tesla, why now? Let's have a conversation, make the answers short, and we can go back and forth a little bit.
Yeah, I'll say the first one, side valuation, is political risk. In the Mag 7, the only one, in our opinion, that has the upside potential with a Trump win is Tesla. Every other company, I think, would face significant challenges with the tariffs. Tesla and Elon on the campaign trail now, we don't feel that a Trump win is baked in here at all. And it is trading 40 times forward earnings, so I don't disagree with the rich valuation. But we also think that they are firing on all cylinders, no pun intended. We think deliveries and manufacturing there has been fantastic of late. And ultimately, we do believe in this robo-taxi news, and we think it'll be powerful.
All right, and Kevin, which names do you like in the Mag 7 then? I mean, if you had to do maybe 1, 2, 3 or your top favorites.
Well, of course, NVIDIA would be the number one thing. Apple, if you just want to buy it and hold it forever, you can't go wrong with that thing. It's got a beautiful chart. Microsoft has really come down quite a bit. I think that'd probably be our number 3 pick in the group right now, but definitely number 1 would be NVIDIA.
So why aren't you saying buy and hold Quintatro for the long term when the AI revolution is here?
Because we feel like there's other areas in the AI revolution that are now going to see the pin action. We've seen that with some of the energy names in the nuclear space, and we think that's just begun. And at the end of the day, a stock gets too rich for the valuation, and the expectations get baked in. And when they disappoint, these stocks take the elevator down. And personally, I've had a really great run in these areas, and I don't want to give that back.
Do you feel like you changed, Quint, because you used to like the group and now you're more cautious?
Yeah, I mean, we've been, opportunistic when the valuations come in line. I mean, the last time I sat with you, or 2 times before, I was on the floor with you when they were giving these names away, throw Alphabet into the mix. They were unbelievable opportunities then to start 2022, now, or 23. Now, ultimately, here we are 2 years later. People can't get enough of them, and I'm definitely backing away.
Yeah. What kind of numbers do you think we could see? I mean,
Need a
we
little
always
bit
talk
more.
about $4 trillion. Which company's going to hit $4 trillion first, Kevin? With NVIDIA, let's say, right now trading at a level of 141. You mentioned Apple, too, also has been a winner, and that right now is trading at 236. How much upside do they have?
Well, NVIDIA is now trading back at all-time highs from its previous run-up in June. So who knows? I mean, it just depends on what happens in the future, and that's so hard to predict. So we don't like to get into the game of trying to predict price targets. Sure, I mean, all of them probably have at least 10% upside from here. Obviously, a lot of it's going to have to do with the election and how the economy goes going forward. I saw Goldman Sachs came out today and was predicting only a 3% annual gain for the next 10 years in the market, which I don't know what the logic is there. But we don't get into the business of predicting price targets, but probably a good 10% on all of them would be my guess if I had to come up with something.
Yeah, thank you both so much. Kevin Riley, Quintatro, good luck there at the Mag 7. I'm Nicole Penelides. Thanks for being with us here on Trading 360. I'll see you at 2 o'clock for the watch list. Fast Market is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great.
That's a good question.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at
I don't. I'm Asian.
Good at trading.
I have a trading system that I've used for over 10 years.
It comes
now, and
natural.
It's almost second nature to me.
Do you think that this is potentially a human superpower?
I know that Jim Howard. He's a handsome young man.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up?
No, no, I haven't.
The old guard is saying, away, off with their head.
God.
It's controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
The Doom and Gloom channel.
Set the cues.
Steve, how can you be on this thing?
No more than 5% in any one stock, no more than
Oh
20%
God,
in any one
dude.
sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab
Woo!
Network. Thanks for tuning in.
Pulling out all the hardware today. Pulling out the big hardware. I was going to ask him would he repeat that, what he just said, but he'd probably get mad at me. Remove join. Boom.
Here into earnings ahead of tomorrow's opening bell, and GE Aerospace, which has rallied 90% in 2024 to a new all-time high. And then, like Folio, break down consumer sentiment data in General Motors. The automaker's stock has rallied about 10% so far just this month, and they report quarterly results ahead of the opening bell tomorrow. Now let's take a look at the major indices, which are off a session lows, but still red across the board. The S&P 500 off about 0.4%. The Dow Industrials off nearly 300 points. NASDAQ leading on the upside, but still in the red by about 0.15%. And getting hit pretty hard here today is the small caps. They had a good week last week. They were up over 1.8%.
They were.
Even up 1.4% in today's session, and I'm guessing that has something to do with rising yields. But to help me break down the market action, let's bring in my co-host, and that's Kevin Hinks. Kevin, a little bit of a break from record highs in the Dow, S&P.
We did bounce off the QQQ.
Straight of gains
double bottom
for the major indices there, including the NASDAQ. But a little bit of a pullback. I think those higher yields are starting to come into play here, where hey, maybe not everything is all
what kind of
good
winter
because
we're going to
yields
have.
going up, stocks going up. That's worked out for the last few weeks, but now taking a little bit of a break.
So on Friday, as we often do on the
Oh,
Schwab
no.
Network on a Friday, you look to the next week. Right? And when we look to the next week, it really set up like a micro week.
Don't you
right?
forget
Kinda light
about
on
Friday
economic
from
data,
Monday?
Durable goods on Friday, not a ton
Starts a
of
new week.
top tier economic data. So it looked like a week where, with 111 names in the S&P coming out, 11 NASDAQ, 7 Dow, it looked like a microeconomic week. And just when we take our eye off it, here comes the macro.
How dare
to
you.
remind us that the macro can move the market as well. And yields that we weren't concerned about when it was 3.8 to 4, now it's 4.17, and we're starting to worry about it. And the dollar, look at the chart of the U.S. dollar and how much it's run.
Yeah.
You know, when it was coming off its lows and firming up, the market kind of liked it. I don't know if it likes it now. And so, like I said, the market can go up with rising yields, just not spiking yields. And today and the last week feels like more of a spike than a gradual up. Look at that move in the U.S. dollar.
Yeah.
That is not for the meek right there.
No.
And it's got to start affecting multinationals and overall exposure.
Yeah, and I think you make a great point. It's the velocity of the move.
Yes.
The velocity of yields rising, the velocity of the dollar going higher. If it's a gradual increase, hey, that probably means that the economy is doing well, stocks can do well in that type of environment. But now we're getting to those levels where, hey, now it's parabolic.
Right.
And they're getting overbought on technical levels and stuff like that. So maybe creating some...
And again, if we settle here, market will get, the market feels like it's getting a little nervous. It'll get less nervous if we settle in at 415 maybe and hold there for a little while. But they certainly don't like when yields spike like this. I mean, it's just not, it's not a comfortable feel for longs in this market. And though they're not killing the market, and the NASDAQ's down 1/8%, and S&P's down about 3/8%. It's not a big down day, but it feels heavy.
It does feel heavy here. And we're off at session lows. Right. But let's expand this conversation, bring our next guest in. It's going to be Alex Coffey, Senior Equity Contributor here on the network. Alex, give me your take here because we're down, but at the same time, I feel like even though we're down, we were down over 0.5%, the S&P at one point, they're ready to buy dips. And that's been the mantra, since the Fed cut rates, and since the beginning of, October, that down week that we had, they're buying every dip. Is this going to be any different?
Yeah, it's a really good question, right? There's still uncertainty out there geopolitically. We're going to have the election coming up. We know that there's uncertainty surrounding things, but there's always uncertainty in the markets. That's why the idea is that kind of climbing that wall of worry. When you look at some of the things that were uncertainties 3-4 months ago, let's call it midsummer, when you saw the market peak out the first time and then sell off, it was much more concerns around economic growth and the trajectory of the economy. A lot of those uncertainties have actually started to dissipate a little bit. So you see this spike in yields and why that might be worrisome on the surface, especially when you think, okay, well, if yields are higher, like that's not great for risk assets. There are kind of different reasons yields spike, and the reasons right now are largely for good reasons. So I look at this and say, there's always going to be back and forth, kind of choppy markets. The majority of the time, the market kind of trades in ranges and jumps around. But outside the noise, there's not a lot holding this market back at the moment. Now that can change any notice. You can have uncertainties geopolitically that flare back up. You can have some sort of uncertainty or something happen with the U.S. election that could bring, market volatility. You could have big names that are going to be reporting earnings over the next few weeks disappoint and change that message, of course. But right now, there's a lot of good feelings surrounding the market. The reason yields are going higher for good reasons for the economy. And so that's actually a recipe for dip buying. And you can understand why market participants are coming into this. You guys were talking about the velocity of the moves in treasuries, though. If you look at the MOVE index, or if you just looked at bond market volatility generally, that's, of course, an index for it, quantifies exactly what you guys are saying. Look at that spike. That's saying, hey, the movement of bonds is accelerating. And that's what Kevin's really highlighted, which is it's not really where they're at, it's how quickly they're going from one place to the next and how quickly that's moving around. That's what this chart's showing.
Yep. Kind of good, reflective that, hey, especially with the markets at all-time highs, you get velocity moves like that, it's going to negatively impact it at some point, but like I said, and like Alex said, there's dip buyers out there on every little pullback, and this is a little pullback.
And there's the next subplot of what we're talking
Right.
about is all this is going on with market at all-time highs ahead of, and a looming up to large.
The SPXs. I took one, got out of it, and got back in it, so I'm back to even right now. I mean, I'm not even, I'm red. Market's not too happy.
So unless it's like all of them kind of come out and say the same thing, like the consumer's not buying things,
Right.
or we're really having trouble, keeping up with the waging, whatever it might be. I don't even want to put things out because I don't know what they would say. Like the market has looked through those things with rose-colored glasses and saying, hey, that's isolated to those companies, unless it's Meta, Nvidia, Apple, AMD.
Yep.
Alphabet, Amazon, all coming out and saying negative things. Just from a math standpoint, like the market probably can take a few of these names in stride. It's when it starts to compile and snowball into something bigger that it can't. And then you have weeks like you had that first week in September or the first week in August. And so unless you get, the snowball rolling down the mountain with some negativity, you feel like you have to defer to the trend, which has been generally upside for the markets at the moment. But one of the things you guys both highlighted is, this week is going to be maybe more micro focused. The only macro thing I think that you can maybe underscore that's been different is you're going to have a lot of Fed speakers to kick off this week. That seems to be the one place where maybe data and markets aren't really jiving, which is, are the Fed speakers going to walk back, increased easing for the rest of this year with all the developments over the last few weeks? Perhaps, but again, that would be for good reason. So it might hurt equities a little bit, but is it really something to worry about long term if you're not cutting because you don't need to?
Right. And expectations of no cut in November up to 15%, 85%. So it's a
creeper.
It is a creeper. That's a great way to put it. But Kevin, you look at, it's hard to take the markets down completely, like where we might get a 1% move to the downside. When Nvidia's up 2.5%,
Exactly. Apple's
up 0.5%. The two biggest companies by market cap are higher. Boeing's
in the Dow. It's up $5 on relatively marginally good news there, but the stock's so beat up. A little bit of a relief rally in Boeing, but yeah, I mean, you're right. Remember, check NASDAQ futures, check E-minis, check Nvidia, right? That's how you start every
Check
day.
Apple, right.
Yeah, exactly. So these are the names that are driving the market, and more good news out of Nvidia means they're not going to hurt them that much.
Right. And then you've got Netflix is still relatively flat. Google, Alphabet relatively flat also, but we're seeing some weakness in Microsoft, a little bit in Meta, but nothing out of the ordinary there. Alex, when you look at that, what names are you focused on that could actually trigger us this weekend as far as earnings goes? Because I always look at like outliers, and in weeks like this, I'll look at Texas Instruments because they supply chips to everybody.
I was going to say Lam Research, so same kind of thought process.
Same thing. ServiceNow on maybe the cloud-based industry that could caught some. Tesla.
2 more airlines.
I think it
Two more
depends
airlines.
where you're invested.
Yeah.
So if I was invested, let's say, in consumer discretionary names or retail-centric names, maybe a name like Deckers would be sort of a bellwether for that particular industry.
Consumer spending.
It's just been such a strong brand. And what we've seen is while consumer spending maybe across the board has been uneven, the strong brands have done well. So Nike might be struggling, but you look at something like Hoka or On, they've done well. And so looking at Deckers as the parent company of Hoka, I believe it is, you look there to see, hey, are the winners still winners?
Yeah.
So that I think is a sleeper. You mentioned Tesla. Tesla from a actual number standpoint, one way or another, I don't think influences the market, but from like a sentiment gut check, similar to Netflix last week, these are always the 2 first big high flyers that we hear from. So I think that Tesla can have an impact there, but it's been disappointing just leading into this because of maybe the disappointment from the We Robot event. And you look at that, I don't know that Tesla has it this week in terms of taking the market down. I would not say that Tesla's worrisome from that standpoint, but maybe it can juice the market if they bounce back.
On the downside, I don't see the connection. Maybe it affects the markets a little bit. On the upside, I think that actually helps equities. But Kevin, you got like a Lockheed Martin, RTX, all-time highs in the defense sector. NOC, General Dynamics in that space, doing really well. You got Coke this week, Verizon. I mean, you've got a little bit of everything.
I think 20% of the S&P.
Yeah.
I mean, it's going to move the market in some way. It may be like 1,000 paper cuts, or 111, I guess in this case, 111 paper cuts, but it's going to move the overall market. I mean, the market will get an overall picture from a group of names that are going to drive it this week. So, yeah, I think there's a chance for some movement. It's not going to come from economic data. Can it come from
Lines were long.
maybe? But probably not.
Right.
I think it'll come from overall earnings and what that does to the macro indicators. I think, remember, every now and then we make the mistake of taking our eyes off the macro indicators and ignoring them. Because, market's going up when yields and dollar going up. Well, yeah, okay. Just keep watching, and eventually it catches the attention of the market.
So far, too, guys, the early attitude of this earnings season is not some robust, growth in terms of general revenue. It's margin expansion.
Right.
So we keep hearing about all these strikes and wage increases. Well, companies are navigating costs a lot better than they were a couple of years ago when they were somewhat blindsided. You look at just surprise. So beat rate, basically. Sales beat rate or revenue beat rate is 55 or so percent so far through about.
That's not good compared to historicals.
Historical, exactly, but through about 15% of the S&P 500 names. However, when you look at earnings, it's 75, 76%. So they're doing better than expected in terms of managing costs. Now, revenue, it's still growing, but it's not growing at the same rate earnings are.
Yep, I think, and especially with the S&P at this forward valuation of about 22. Rich markets at this point, but if the margins are expansion, that's not a bad thing to happen.
The case for higher valuations in the S&P is that this one's different.
Right.
AI is going to take this to new valuations. That's what people are saying. Hard, that's a tough one to sell, but you never know. I mean, the market can stay here or go higher for a while, and then this earnings season is going to, it's like high bar, low bar within the same S&P 500.
And to Kevin's point, too, this is where it's so important to define yourself and your goals and your plans and what you're doing. If you're a long-term investor, valuations can be scary at times and make a really big difference. But if you're just trading what's in front of you, something Kevin talks about all the time, stocks can stay expensive and cheap for a long, long time.
Yep. Been through that in our trading careers a little bit, Kev.
Still have emotional and financial scars.
Emotional damage. All right, guys, let's take a quick break. When we come back, we're going to kick it off with some more earnings names in the industrial side. 3M, that stock's at over 2-year highs into earnings tomorrow ahead of the bell. Bars high on this one. Stick around.
Okie dokie. Stick around, he says. Doo-doo.
every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Stand up for a second. I'll be right back.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking earnings this week, and 3M is on the radar for earnings tomorrow. It's at a 2.5-year highs at this point. The owner of Scotch Tape, Post-it notes, doing well. Bar's getting high here. Let's bring in Caroline Wood, senior markets correspondent here on the network. Caroline, give me your take here, because it seemed like, they had all these headwinds, whether it was earplugs to the military, some other things where they're, basically had to set aside a bunch of money last year, but it seems to be righting the ship as far as the stock price goes.
Yeah, certainly the case. If you take a look, year to date up almost 50%, and over the past 1 year up about 86%. So not a name that we talk about all of that often, but has been certainly a quiet winner this year and over the past year, despite overcoming, or as it overcomes quite a few of those headwinds. It's gone through quite a few changes as well. Earlier this year, it spun off its healthcare division. It significantly cut its dividend, and if you remember, late in the summer when it reported earnings, it surprised to the upside and has really been gradually, it surged following that report. Shares were up more than 20% following that report, and it's just kind of trended higher since then. Now, over the summer, they did boost their full-year outlook to a range of $7 to $7.30 per share. That was up from an earlier forecast of $6.80 to $7.30. So we'll see what they have to say tomorrow in terms of outlook when they report before the bell. For the third quarter, adjusted EPS is expected to come in at $1.93 on revenue of $6.1 billion. So those are really the key numbers to look for. Of course, they also have been, there's new management at the helm. Over the summer, announced a new CFO, and then in May, new CEO William Brown took over, and his top priority, he says, is to increase sales and reinvigorate the 3M innovation machine. Says the simple fact is our products are aging, and as the company has really shifted resources to exit forever chemicals and focus on supply chain efficiencies, it kind of was at the expense of innovation. So we know that William Brown is focused on innovation, capital deployment, and that seems to be kind of reinvigorating investor interest in this name. It's a highly cyclical name, and also interest rate cuts are expected to be a positive catalyst for 3M as well. I was taking a look at a Jefferies note from not too long ago saying that we expect 3M to be able to report more positive consumer demand 6 to 9 months after the Fed crosses 100 basis points of rate cuts. This would suggest a better order book in the second half of 2025 and heading into 2026. So a little bit further out, but interest rates expected to be a positive catalyst. But shares under a bit of pressure today, down about 0.5%, down about 1.6% this month. But given those hefty year-to-date gains, I'd say the bar is pretty high for 3M heading into this report.
Jimmy don't like.
Caroline, this is one of those things that Tom and I talk about a lot on the show. You look at the 1-year chart, it looks pretty like they're having a really nice year, but if you look at the 3-year chart, it's quite a V on that 3-year chart. So this is a company that's kind of in recovery mode, as you know, and they're doing, the new CEO sounds like he brings a lot of hope. He's got a lot of aspirational plans for the company. The dividend is a fair amount. As you mentioned that they lowered it before. It looks like they're putting out all the fires and getting through a lot of the problems and getting back to making money. But Caroline, is there anything really sexy about 3M? What is the draw
The mask.
to bring traders into this name? Is there anything in the future,
The
anything in the
mask are real
pipeline,
sexy.
any reason that we should look at this as just an aging industrial name?
Anything sexy about 3M? Well, I do love Post-its and command strips, so I mean, there's that. But no, I think that you know, it's certainly no longer cheap based on the fact that it's seen this impressive, you know, run higher. So it's not necessarily that, you know, it's a value play at these levels, but I think that a lot of the optimism comes from the fact that when they reported there was growth and that there's, you know, potentially more growth given the focus on innovation from William Brown. So I think that, you know, that's certainly reason why the stock has run to where it is at this point. We have seen a lot of price target adjustments heading into this report, likely analysts playing catch up. But if you take a look, it's not necessarily the price targets that have been adjusted aren't necessarily higher than where the stock is currently trading. RBC just raised to 99 from 95. You can see here 3M's at 134.50, so they obviously have an underperform rating. Mizuho raised to 146 with a neutral rating, so that implies you know, not a whole lot of upside from here. JP Morgan and Wolf, though, both in the buy camp, raised to 160 and 158 respectively. If you take a look at the median price target, it's 144.50, so about $10 higher than where it currently trades. But analysts are pretty split on this name. Not a lot of bears. There are only 2 sell ratings, but there are 9 buys and 8 holds. So, you know, it's hard to say in terms of, you know, which way they'll go after earnings. I think that, you know, clearly the focus has been on the innovation component and, you know, potential M&A and, you know, getting back to growth. But, you know, based on how far it's run, you know, I think that expectations are pretty high for this name. If you take a look, the highest price target on the street is 162, which would imply quite a bit of upside. The lowest is 99. So, you know, it's kind of take your pick in terms of which camp you're in when you take a look at the analyst breakdown.
Yeah. Are you a Post-it note person, Caroline?
I am. I still love a Post-it note. And honestly, I'm a renter. So I love command hooks and strips as well because I can't actually, you know, drill holes in the walls. So everything is hanging on a command hook in my apartment. And I have to say, they've gotten pretty fancy and they're pretty good. Every once in a while, one comes crashing down, but they work pretty well.
Yeah, we'll have to wait and see. You mentioned the bar is pretty high on this one, even though you're supposed to see a decrease of nearly 27% in revenue from a year ago.
And they have some debt, too.
Yeah, and remember they spun off Solventum, and that was a big driver of their revenue. So they had to spin that off, even though there was a lot of debt there that they pushed off to the side. All right, great breakdown for us. Thanks to Caroline Wood, Senior Markets Correspondent here. Alex, let's bring you back in here on this discussion because when I look at charts like this, yeah, Kevin said, bring out the 3-year chart. This stock was trading over $155 3 years ago. We're trading about 134.5 right now, but that being said, last earnings, the stock jumped 23% on those better than expected results, but they said China sales are supposed to be weak. Organic sales, I think, in the guidance is probably going to be key for this company moving forward.
Yeah, so what doesn't, I guess, jive with me, and again, this is why it's important to say, you know, valuations and things can all be, you know, kind of a conversation for the longer term, less so the shorter term. Seeing that chart over the last year, seeing how it responded to earnings last time, you wouldn't have thought, oh, earnings declined by double digits last quarter and revenue declined by 27% last quarter. Oh, and by the way, it's expected to do worse this quarter and just as bad the following quarter. This is a turnaround story that isn't supposed to kick into gear until the middle of next year. And so you start looking at that and say, you have an opportunity in a stock that is at its recent highs, had a really, really nice year, and doesn't really have a story to support that. Now, the counterpoint would be there's a turnaround expected next year. They're going to probably talk about that. And of course, the stock has struggled on a longer term time frame. But what I looked at was, hey, you had a couple straight quarters of better than expected results, and you have a stock that's still trading near its recent highs. Perhaps over-optimism might be reflected in the stock price for a story that isn't quite there yet, and looked for a little bit of a bounce backwards around earnings after 2 straight jumps around these earnings events. So I looked at a bearish strategy.
All right, so option market's pricing in about a plus or minus $10 move according to the option market at this point. That would take you down to maybe 125 on the downside, or maybe 145 on the upside. Break down your example trade here for us.
Yep, so using those numbers, keeping that in mind, right now the stock just below 135. If it does disappoint, perhaps you even see an outperformance to the downside given its recent performance as well. So what I looked at was buying a put diagonal, going out to November 1st, buying the 125 put. This would essentially be if it just performed as expected, sort of the at the money move. So moves down 10, it gets you to 125 or so. And then I skewed it slightly with the diagonal as opposed to the traditional calendar, just because, well, what if it just completely plummets if it's disappointing because of the recent outperformance? That protects you from that, outlier move to the downside. Selling the 122 put in this Friday's expiration. So just tilting that risk profile on its axis a little bit to reduce and remove actually the downside outlier risk. And most importantly, I wanted this example trade to reflect around $100 in risk, and so with a $1 debit, that's exactly what it does.
All right, break this down. 11 days expiration by the November 1st weekly 125 strike put. In the near term, October 25th, options that expire in 4 days. Sell the 122 put, $3 wide, bearish put diagonal. You're paying roughly about $1 for it. So there's your risk, $100. Break even's about 125 because there's still a lot of option premium in that short 122 strike that's going to go out worthless if the stock remains above 122. But Kevin, this is pretty, you're risking 1 to make an additional 2, so it's pretty good risk-reward ratio. But the key with this type of strategy is you need that move lower below maybe the 125 strike.
Yeah, but this is a trade we do a lot on the call side when we're bullish. This is just the bearish version of that. Going out to November 1st, buying the 125 call, going into the expiration. I'm 125 put.
Yep.
See, it's not normal for me to talk about put. And then going into the event week this week and selling the 122 puts. And here's what Alex did that I think is interesting.
What'd you do,
and
Alex?
It's a great discussion topic. He looked at the expected move, and that's where his long strike is,
right.
The 125 strike, right? Because if he goes to 125, the 125 puts are going to hold money because they're out another 11 days.
Right.
And the short 122 puts are probably going to, a very low number very fast.
Vol crush will contract.
And you're still, if it does the expected move, you're still, $3 out of the money on the 122 put. So it's a reasonable debit, but you need a move. Right? And, you need that move on the downside. You can turn it into a vertical if you extend duration into next week, but you're looking for a move. This is, make no mistake, a bearish play.
Well, this is the last thing I'd emphasize that is it's super customizable. Right. You just kind of walk through maybe how you could get to those strikes, but if you're bullish, you could essentially take the exact same logic, flip it on its side, look at the calls. The debit will probably be a little bit different. Maybe the strikes have to be moved around a little bit, but you can still set it up that way too.
145, 148 on the call side.
Yep, that's the way to look at it.
Mirror opposite.
If you're more bullish on this name, I think you're going to get another 20% pop in the shares like they did
As you talk about it, it had a nice little pop.
Put diagonal here, out of the money to the downside. That's why it's so inexpensive compared to maybe other ones that we look at. You've got some assignment risk on that short option also over the next 4 days in the expiration. Thanks to Alex Coffey, senior equity contributor here on the network, for breaking down markets and 3M with us. We're coming up after the break. Andy Swan from MyFolio, he's going to take a look at sentiment data. General Motors, the automaker stock, is up nearly 10% so far this month, into which quarterly report tomorrow ahead of the opening bell. Stick around.
Love her.
Wrap up the trading day with me, Oliver Rennick.
KSCP.
Coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop.
What the hell happened here?
And analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs.
That's horrible.
With nearly endless customization. And track market trends with up-to-date news and insights.
5 days, it's up 100 and some percent. This is KSCP. Huh.
Neil, how's my favorite client?
Where's Neil?
Question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need.
You slow
Tell me you
running
know this.
toss.
Schwab. Have a choice in how you invest with Schwab.
I have not had no sleep at all
Welcome back to Fast Market here on the Schwab Network. It's
at
time for our
all
hashtag
last night.
segment
I
for
feel
that.
like going
Bring in
to
our
bed
next guest.
right
It's gonna be
now.
Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Happy Monday.
Happy Monday. We're talking GM. It's had a pretty good run so far this year, up 35%. So it's bounced back. You widen it out to a 3-year chart. Doesn't look as good, but it's been pretty choppy lately. What kind of data do you guys have on GM, one of the legacy automakers, where it could be a good quarter, it could be a bad quarter? I'm kind of curious to see what type of sales they've got.
Yeah, I would say Likefolio data is showing surprisingly good indicators on GM. They've had 8 consecutive quarters of earnings outperformance. And really for us, the key is looking at, GM's web traffic, because this is where a lot of people are doing their research on their next car. So they may not necessarily be in the purchasing phase of things, but they're at least starting to take a look around to research the car that they saw that their friend has, etc. And GM's web traffic up 20% year over year, really was a very positive surprise for us at Likefolio. When you see that Ford is down, Tesla's only up 5%, that kind of outperformance by GM really very strong. A lot of that has to do with their EV strategy. GM has done a very good job of setting itself
Market
apart,
says we're bearish.
potentially picking up some of the pieces that Tesla may have dropped by launching the Cybertruck instead of something a little bit more traditional, because GM's really focusing its EV efforts on larger electric vehicles. The Chevy Silverado, the Hummer is very popular as an electric vehicle. And so I think they've created, or at least stepped into a pretty nice niche there in the race for second place in the EV market. GM is really coming on strong. So their traditional engines and cars look to be doing very well. Web traffic is up significantly and accelerating over the last month. Pretty much all the indicators we have for GM, I think, gives them at least plausible deniability to go out to the street and say, look, things are looking pretty good as we head into this fourth quarter. There may be some macro headwinds headed our way, but as a brand and as a product lineup, we're feeling pretty good about how consumers are reacting to our offerings.
Yep.
Andy, the chart on GM looks really good. They're putting out a lot of good news. My question is this a hybrid story? Do they have the right mix maybe of, because they still have internal combustion engines, and if EVs are starting to max out or soften, are people going to start to look at, do I want to go internal combustion or maybe some type of hybrid which fits these? And the case, remember, because we have had warnings from Volkswagen, Stellantis, BMW. They've always kind of warned about lower numbers. What is GM doing right? Is it hybrid, or is it just they're they're starting to catch up to everybody.
Yeah, I think they're starting to catch up, and they have, a
that's
nice
a low blow.
breadth of offerings. So, with the manufacturing capabilities that GM has, this is a company that puts out 700,000 cars per quarter. So, EVs hitting 70,000 of that in a year is a small number, but there isn't the EV kind of fatigue that people think is out there. The EV market continues to grow. I do think that hybrid is potentially a very good mix well into the future. I think that's a great solution for most people. But GM can pretty much go any direction with this, and they've built a really solid consumer following. They've got really nice consumer happiness ratings for most of their product lineup, which others don't. And so I think they're in the driver's seat as far as, having that broad market penetration, having that broad market manufacturing ability to really go where the customer wants, and are building out the expertise to do it in multiple avenues. And I really love that strategy of, if it's going to be an EV, let's let Tesla have the Teslas. They dropped the ball on the Cybertruck in a lot of ways. Cool. Let's build the big EVs for the world, and I think there is a significant demand there. So it's a pretty good strategic decision by GM as well.
Yeah, and Andy, I want to get your earnings score on this one going into earnings, but I think more than anything, this is about the consumer, and this is not only domestically but globally, because GM sells a lot of cars overseas. Is that the key to a lot of these automakers' success? Because to be honest with you, over the last year, over the last few months, $50 a share has been a real ceiling for this stock in the near term. And if the consumer breaks at all, is that cause a concern for this stock in a lot of the automakers?
Yeah, absolutely. And what you mentioned, the other thing that could trip us up are, we have a bullish score on GM going into earnings. We think that they have all the right reasons to have a positive outlook going forward and good numbers for the past quarter. But there's always China out there, which we don't have visibility into, and which could really trip this up. And in addition to that, if the company wants to continue to stay somewhat conservative about their outlook, that might be prudent given the macro headwinds that are on the way. But I will say, from a consumer research perspective, which is what Likefolio tries to focus on, customers are really liking the product lineup at GM. More and more people are researching these cars, indicating future purchase decisions. So we think that GM is winning among the automakers, among the non-Tesla automakers, a bigger and bigger market share, especially into the future. So we think if it can break through those highs, the stock could really run. That's the other side of having kind of a ceiling on a stock, is a lot of times when you get through that, a big run can happen. So the way we'd like to position ourselves going into this is, we think they do well. If it can break to new highs, then it could really run. We'd like to benefit in an asymmetric way to the upside and protect ourselves with defined risk to the downside. You guys are so good at creating those types of trades, we'll let you do that. But that's the way we see this, as kind of a home run type of swing on a generally boring company.
All right, great data, great stuff as always. And the stock hasn't broken above that $50.50 level since basically 2.5 years ago also. Yeah. So a little bit of a resistance. All right, great stuff, Andy. Have a great day.
Thank you, you too.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data for us. I just looked at the shorter term chart, and that $50 a share level.
It's a big number.
Retail sales have been okay. We get some auto sales numbers and the inflationary data points too, and it doesn't seem like it's exploding.
No, it doesn't.
But hybrids are still doing really well, and EVs, they pull back their investment in EVs.
Yeah, it's tricky, right? And I don't feel comfortable going against the Likefolio data, but what I did was, it's got to go through a new all-time high for the paper money trade that I put on here to lose money. And so here's what it is, Tom. I went in to this week, October 25th, sell the 51.53 call vertical. Okay? There's one trade that is high probability and risk defined. Take that credit by the 47 put calendar. We do this a lot. It's kind of a little more complex of a trade. 2 individual trades combined to make a complex trade. Sell the 51.53, call vertical, buy the 47, the 1 week put calendar, 20-cent credit is where it's trading, Tom. So if nothing happens, if it doesn't make it to $51 and through that, you're profitable on this trade.
Yep, let's break this down. This complex four-legged spread, Kevin mentioned in the October 25th weekly cycle, expires in 4 days. Sell the 51 call, buy the 53 call. And then in that same October 25th weekly options that expire in 4 days, sell the 47 put, buy that same strike put, the 47 put, in the November 1st weekly cycles that expires in 11 days. So buy to put calendar that's financed by the short call vertical. You can see here from the risk profile, my break even 51.20. So even if the stock doesn't do anything, even if it moves higher up to 51, you can still be profitable on this type of trade. And because you're collecting an initial 20-cent credit on it, anything below that break even at 51.20 is going to be profitability on this. Now you've got some risk, and that's above the 53 level. You max out in risk on this one. The 20 cents minus the $2 width of the short call vertical, so about $180 in risk to the upside above. That's above 53 on this one. You got some assignment risk on that short 47 strike put going into expiration over the next 4 days. But go ahead, Kevin.
Your risk is $180. The margin on this total spread, 4 sides, is $200. Right. So this is one of those instances where a small to medium account could easily put this on, and you would have enough capital. It's only $200 margin, and you actually collect money on this trade. So the risk is only $180, so which allows, now you could do more of them, but it's not a big premium name. So if you ever notice that we tighten the strikes up a little bit, that's because at a low premium you have to play with smaller numbers, but you could do bigger volumes of smaller numbers.
And I think the key is the apex of profitability at or near that 47 strike, where you put the long put calendar on in that strike, but anything below 51.20 is going to be profitability. All right, let's take another quick break. And then when we come back, we're going to take a look at another industrial name that's been doing really well this year, GE Aerospace. That stock continues to rise to all-time highs into their earnings, also ahead of the open tomorrow. Stick around, we're coming right back.
Bacon. Oh.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Fast Market here on the Schwab Network. Before we take a look at GE Aerospace, let's get a market update. We've got stocks still in the red, led by the small caps to the downside, but the S&P 500, the benchmark down 0.4%, the Dow off about 0.75%, over 300 points, so weakening there. The NASDAQ 100 off about 0.2%, leading, as I mentioned, to the downside. The Russell 2000 down 1.5% as yields continue to rise. We've got that 10-year yield at 4.175. And then take a look at crude oil, still around that $70 a barrel level, up nearly 2%. Gold hit a new all-time high during today's session, despite that rising dollar that we're seeing there at the bottom. Dollar getting close to 104 level, and the VIX up about 5%. So coming off those lows that we saw last Friday as stocks rallied to all-time highs. So a bunch of asset classes to keep an eye on here. But now let's bring in our next guest. That's going to be George Tillis, Senior Markets Contributor here on the network. George, we're talking GE Aerospace. This has just been a huge winner since they've completed their dispersion into GE Healthcare and GE Verona. Now you've got the aircraft engine maker rallying to all-time highs into earnings.
Yeah, this has been a remarkable spinoff. I mean, the company obviously split off into three major divisions, and now we're talking about GE Aerospace, which effectively really has two divisions: their commercial, engine services division, as well as their defense and propulsion technology, which includes their, core commercial jet engines that are used for Boeing and also Airbus, as well as other commercial aircraft manufacturers like Bombardier out of Canada. And so forth. But this is, like I said, this has been a remarkable turnaround, a very successful breakup of a conglomerate. And from a GE Aerospace standpoint, this company is a standalone business now, like I said, that is generating a lot more higher margin services from MROs, maintenance, repair, operations. If you look at last quarter, the company actually reported sequential growth, 16% increases in service revenue, even though their core unit revenue, in other words, their engine revenue, was down about 11%, mostly due to Boeing, which again is having their own idiosyncratic issues, which is creating a logjam of jet engines and, of course, parts that go to Boeing from General Electric. But nonetheless, the company is really focused on maintenance and service, and it's a higher margin business. And in fact, if you look at gross margins for the total company compared to last year, again, X the other two companies, because GE Aerospace has only been separate since April, so this will be the second consecutive quarter as a separate company. But their margins are about 600 basis points higher than their 5-year average on gross margins. That's net income margin, by the way. The gross margins are only higher by 50 basis points. So they're generating a lot more profits, a lot more profit growth, as well as top-line sales, which are only expected to grow around 9%. But their earnings growth, even on a forward basis, comparing the end of this year, fiscal year 24 to 2025, they're expected to earn an additional $1 on $4.24 this year, so $5.24 next year, which is about a 23% increase. So ideally speaking, it's in a nice, all solid uptrend, and they're generating more profits. And just quickly, let me add, they are expecting to show a contraction sequential now quarter over quarter in earnings at $1.13 versus $1.20 last quarter, but their sales this quarter are expected to be slightly higher at $9.38 billion versus last quarter's $9.09 billion. The reason I'm comparing sequential quarter over quarter numbers is this is only the second quarter in which it's been a separate company.
George, this was the plan all along, right? When GE split up, was to get these highly profitable market-leading companies and get them on their own, not weighed down by healthcare and the other parts of GE. So this is not a real shock to people that this part of GE, which was always one of its strengths, is flourishing in this new environment despite supply chain problems and issues with getting some of their parts. But so, George, how do we look at this going forward? Suddenly, it isn't cheap anymore. But this is a clear leader, along with probably Rolls-Royce is the other big engine maker. I mean, this is a leader in basically a duopoly of a business. So their future looks really strong.
It does, and if you look at the breakdown of sales, 50% of the sales come from the commercial division, and the maintenance, the MRO component has been growing. And in fact, they're deploying lots of engineers and mechanics to continue to service these parts and, of course, all this hardware going forward. I think the other thing is the aerospace and defense component of the business. That's another thing. If you look at that whole group, they've been moving to the upside. Now, without getting politics involved, irrespective of who's in the office, they're going to spend more on defense just because typically the United States spends more on defense than they do on interest on the debt. That wasn't the case last year, by the way. We spent more on interest on the debt than defense. So either interest on the debt has to come down or defense spending has to rise. And so I suggest defense spending is going to be a huge boom for these industrials, particularly GE, aerospace, because of the defense business.
Yeah, those aftermarket services, maintenance, repair, spare parts, that's the high margin part of their business. They keep on signing up more. They got the backlogs both at Airbus and Boeing, some issues with Boeing, but yeah, you got to watch that higher margin
By the way,
business.
in an interesting little side story, that's good for GM too.
Yeah.
Right? GM, that's how they make a lot of their money, is parts and service and all the other things.
Yeah. All right. Great stuff. Great backdrop for us. Appreciate it. That's George Tillis, Senior Markets Correspondent here. Kevin, I looked at the expected move to the option markets price, and only about $8 either way. That's not like massive on a, I get it. Some of the implied volatility is gone because the stock's up 89% so far this year, just below all-time highs. So I looked at something relatively, not simple, but it lays out and lines up with that maybe downside move here. So I looked at a put calendar here to the downside that's inexpensive, right? So I'm going out to the November 1st weekly, really short-term positioning, 11 days to expiration. Buy the 182.5 strike put. That's about $10 out of the money to the downside, about that one standard deviation. Then I'm going to sell that same strike in the October 25th weekly options that expire in 4 days. You're paying roughly a 60-cent debit for this 1 week wide put calendar to the downside, with break-evens about 175 on the downside, about 190 on the upside. So you still have a nice wide range, Kev, but this is relatively inexpensive for 1 week wide, but you definitely do need that move down, and you don't need a 2 standard deviation move to the downside or any move to the upside. Otherwise, this one doesn't work out well.
182.5 strike is where you did relatively inexpensive debit for a calendar spread like this. The expected move is $8, which gets you to about 184. This takes you about $1.50 lower than that. So anything in that range, and you're sitting pretty nice with this trade. So I just think that when you look at something like this, and the first thing you read in any article, stock's not cheap. Valuation's high. So just like a lot of these companies that we've been covering so far, good news isn't good enough sometimes. It can be good news like American Express, right? Good news, anything slight, and the stock could back off on even good earnings.
Yep, even good earnings, even good guidance. American Express raised their guidance, but it sold off a little bit post-earnings due to the fact that it was fully valued and maybe some profit taking. Got some assignment risk on that short put, but we mentioned the range that you have to be profitable on this one. You're basically, it's inexpensive because you're buying about a 41% implied volatility on aggregate in the November 1st options, selling about a 56%. So that's why the price of this calendar is cheaper than it normally would be, because you have that volatility dispersion. So keep that in mind also on the downside put calendar in GE. That's going to do it for us today here on Fast Market, but make sure you stick around right here on the Schwab Network. Next Gen Investing is coming up.
This election season, stay out of the muck and the mudslinging with Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Alongside Alex Coffey, and after we saw the major markets post their 6th week of gains, we're seeing some retreatment here today, led by the Russell, which was actually our performer of the week last week, Alex. So we saw some of this rotation into a lot of more value names, I would say, and also led by some earnings moves. So as we go into this week, I was joking, it's like the Dow week of earnings. There's some big names, like more of that mid-tier, so not like a ton of the Mag 7, but Tesla does report this week, I guess.
I believe it's also at least the second
gotta do better than
consecutive
that.
week now that we've given back some gains to start the week. So we start behind the 8 ball a little bit, but even now you look at where the market traded down to, it's already cut those losses in half when you look at the S&P 500 and then some. So again, opportunities abound for those who are looking at this market, still see opportunity to increase risk into weakness. As we saw the S&P 500 futures trade down to 58.65. They're already pushing 58.90 here just a few hours later. So you can see that bounce back in the markets as things unfold here, largely led by strength in the NASDAQ. So weakness in the Russell makes sense when you see the move that we've seen in yields, Jenny, but those big powerhouse indices, the NASDAQ, the S&P, just continue to show why they've been outperformers for years.
It's true, yeah, and I will say, even though, we're giving back a lot of that, I feel like this is typically how we've started this week, so that's a good way to jog our memory.
Only down 5 of the NASDAQ now.
True, I mean, it's not even like that significantly down, of a lower day, as we are seeing NVIDIA actually probably being a huge reason we're seeing the markets actually propped up. NVIDIA's up 2.5%, but as always on the show, we will kick things off with upvote and downvote. We will chart and trade our upvoted names. FOMO today, we are talking Pulte Group ahead of their earnings due out tomorrow morning, a name that is just about 3% off its all-time high, and the home building space continues to be one that impresses me, frankly, given the overall interest rate situation, although obviously becoming more and more favorable as interest rates are expected to continue to lower. But we'll also be looking at Disney with their update as far as their CEO succession plan goes. Of course, Bob Iger is only here for a bit longer, and they do have some plans for hopefully his replacement. We'll break down later on. We will also be looking at Kenvue, which is up about 6.5% today after we did see some interest from a major activist investor, Starboard, which typically doesn't involve themselves in this type of world. So seeing it as a positive bid for this company, which is moving in reaction to.
How long has Bob Iger been back?
I believe it's like 2 years now at this point.
Has it even been that much of a positive? I mean, it's been an up and down story at best. And so when you look at it, maybe it is time to turn the page there at Disney, and we'll see where things go. So that'll be a fun combo we'll have later on. But let's do upvote, downvote, not endorsements, not recommendations. To the world of social media we go when we look at some of these names, some of the biggest players in the space, some new entrants as well. Starting with Alphabet. Now, I don't know that it's oftentimes thought of in the world of social media, but I would argue the world of YouTube and its ties to influencers and the new age of content makes this, if not the most important social media name. It's certainly in that top few, maybe second only to Meta when you start thinking about the reach from a digital ad standpoint and the power that this platform brings creators. When you look at Alphabet today, it's actually one of the few names that is green on the session. Only about 30 NASDAQ names are higher. Well, Alphabet's one of them.
I know, and I will say, I completely agree. I actually think this is an underlooked name as a social media stock, because social media is one of the largest social media companies in its own right. It's also
big
like
orders
its own
going in.
platform almost, because there's so many ways now on YouTube you could be a various creator. I mean, I think to be an influencer, it was almost like the original ways influencers were made was they'd go and do these YouTube series. So
to be an early adopter.
I know.
And man, it's so funny because when we were kids, we would make videos, and I feel like lots of kids did things like that, and you'd make them, you post them for your friends and stuff, but it never really turned into anything. But those who saw the vision and monetized it and were early adapters, I mean, we're talking millions, if not hundreds of millions in some of these cases. So really, really impressive. But what you're saying too, I think highlights the other key thing with this, and I'll let you get through some of the stories too. But it's so hard to bucket these mega cap companies. You can't say it's a social media company because that's limiting. It's not just it is partially a social media company, but it's also a huge digital advertising company. It's still a place now where you can watch NFL games. And again, that isn't even touching on the fact that it's a cloud company and all these other things too.
I know, and to me, this is like the most formidable competitor to Netflix as far as like streaming is concerned, and we don't even hardly talk about them in terms of streaming because they're
definitely for the eyeballs.
Definitely for the eyeballs. Definitely from like a sports viewership standpoint, everyone knows that YouTube TV is one of the best ways. I mean, I've said it before, to watch football really in terms of the NFL, but Alphabet as well as Fortnite maker Epic Games did confirm to The Verge that the judge James Donato did grant the search giant a temporary administrative stay on November 1st to drastically change, or to stay on a November 1st deadline to drastically change, of course, its Android App Store rules. Now, as a result, Google might not have to open up its Play Store for years if it appears the jury verdict did turn into the epic legal battle, according to this report. So the one exception to say, however, is that the fact that starting November 1st, it will continue to see that overall it's prohibited from making deals with carriers or device makers that obviously do offer some competitions. This is interesting because obviously this is one small component of their business. As we do know, their search engine of their business has been under fire recently, given the DOJ probe and basically claiming that they're monopolizing the search engine space, which if you look at some of the statistics on the search engine market, they definitely are dominant. But what that looks like is anyone's guess. We do have earnings from them, though, Tuesday, October 29th, after the closing bell.
Yeah, I think the investigations, the antitrust allegations, etc., it's all double-edged, right? You're only going to be accused of that because you're extraordinarily successful at something. But you're also only really going to be accused of stuff like that when there's a little bit of truth at the very least to some of it. And so it's tough. It's hard to quantify at the moment, but we've seen throughout recent history, when there is resolution, when there is settlements, oftentimes that's been opportunity in some of these names. So we'll see how those stories develop. Another name that is absolutely no stranger to regulatory scrutiny is the next name on our list, that of course being Meta Platforms, formerly known as Facebook. parent company, Instagram, WhatsApp, and of course Facebook as well. Weakness recently in this stock after it's been one of the strongest performing mega cap companies going back the last few years.
It has, and I will say, yeah, especially given the Mag 7 and some of the pullback we've seen in these stocks, I know that we are slightly lower here in real time, but this is a name that's still been able to hang on to a 62% rally this year. It's only pulled back about 5% from its 52-week highs, so actually the next best performer in the Mag 7 just behind NVIDIA. So Lumen Technologies did see a nice pop after the company did announce it's partnering with Meta to significantly increase Meta's network capacity and help drive its AI ambitions. Lumen's partnership offers Meta's enhanced flexibility with a secure on-demand bandwidth, supporting its complex computing requirements and enabling it to serve billions daily. That's per the press release we saw from these companies. So Lumen did say its private connectivity fabric enables long-term network capacity for Meta's AI. As we know from the last quarter, Meta is shelling out a good deal on CapEx to, continue to build out AI. So also did see Morgan Stanley raise its price target to $600 a share from $575 with an overweight rating. And this name is very much loved by the street that covers it. 61 buys, 6 holds, 2 underperforms, and no outright sells. The average price target right now is 601, so that does imply some upside from where we are currently trading here.
And I think that implies, not quite, 602.95 the all-time high. So I can say maybe just inches to a new all-time high, but right around 600 is that all-time high, about 603. When you think of Meta, though, and you think about where its role in AI is, Jenny, it's hard not to say this is one of the names that can kind of early on show real, tangible, improvement from AI, from an efficiency standpoint, from an ad placement standpoint, or even when you look at sort of how Reels operates and how it can kind of glue you to the screen using the algorithms to continue to put content in front of you that keeps you on the screen. And more time on the screen is more times potentially to see an ad. So AI is a huge part of the story for Meta. It's a lot of money that they're spending on it, though, so it better be something that can deliver potentially down the line.
I disagree with you, Alex.
Or, of course, just general returns from ad penetration and else wise with that particular content that they're putting in front of us. But let's talk kind of the new age. I guess in terms of publicly traded companies, these are more of the new age companies, not anywhere near the scale and operations of the first two. But the first one here of our list of 2 is Reddit. The one that has the least amount of publicly traded history of this group, not even a full year yet. Its first publicly traded day was back in, it looks like, March, Jenny. So not a full year even under our belt, but largely a successful public offering.
It has been. I'd say it's also been on a pretty nice run. Coinciding with our next name, but we all look just at Reddit here, which is up 21% on a month-to-date basis. Deutsche Bank reiterating its buy rating on shares, saying it's bullish on Reddit ahead of its earnings later this month. Those earnings are expected actually Tuesday, October 29th. So we have that to look forward to just next week. But they said that the overhang from lockups expiration is now behind them. And from a fundamental perspective, they think the stock is set up well heading into the print with healthy digital ad sentiment despite some brand support from data licensing deals. So B. Riley is also another one that raised its price target today to $87 a share from $75 with a buy rating. This name, again, newer to the public market, so not as many analysts cover it, but there's 11 buys and 5 holds. No underperforms, 1 lone sell. So average price target right now actually implies some downside. That's around $72 a share, but this name definitely does skew to more the neutral to bullish camp from the sell-side analysts here, so that's encouraging at least.
Yeah, it's something, too, that just objectively has a core, sticky user base. And the more they can figure out ways to monetize that user base, the better for this. We've seen it, there's been success stories in social media or just places where people go frequently, and there's been ones that have struggled to monetize. Twitter, when it was a publicly traded company, historically struggled to monetize its users. Snap has historically struggled to monetize its users, and Meta, of course, along with Pinterest, has actually been quite successful at it, and then they have varying degrees of course, getting eyeballs on those screens and on those platforms. We'll see where Reddit ultimately finds itself, down a little bit today. Last one on our list is an interesting one. A lot going on here that's sort of outside the world of fundamentals. This, of course, Trump Media and Technology Group, DJT, formerly DWAC. Of course, for those who have followed this story over the years, Jenny. Now, recently, not only in betting markets, where you can kind of see it in like polls, you can kind of see it in general probabilities, assessments of early voting, vote by mail, that the former president does seem to have established himself as at least the odds-on favorite, but it's not a certainty by any stretch. But as things stand right now, it does seem that the available information suggests a greater likelihood of a Donald Trump presidency at the moment. So
well,
it
really
makes sense, I guess, that we've seen it come off the mat. This is a bastion of volatility, though, Jenny. You know what the implied volatility for this company is? 310%. That is not only just astronomical, it's one of the biggest that I've ever seen.
It's also up 92% this month. I've been pushing to talk about this name because I'm so amazed at the volatility. I mean, forget about like the story of just like in terms of like a trading vehicle. I think this is absolutely fascinating. I mean, the outsized volume we see every day, the swings, again, it's risen 90% plus this month. So I think it's worth mentioning. Of course, it's not meant to be a political conversation because we will not dive too much into that. But I do think some of the momentum we've seen is, to Alex's point, some more favorability, of course, to the former president, Donald Trump. Obviously, just like the last time we looked at this, Dave, I think we were seeing some more polls that were favoring Kamala Harris. And it's all about what site you look at, where you get your, of course, data from. But we did see a site called 538 that shows now percentage chance of Donald Trump winning around 52%, meaning he's taken the lead, which is a lot of why we're seeing, of course, a nice run. But also, I do think it's more about volatility than like the overall looming presidential election. This name has continued to swing widely. It's almost like a short squeeze at this point. Also, there was some news that Trump Media and Technology announced they'll be successfully launching this app for iOS mobile devices and Apple TV. It's called Truth Plus. It offers this TV programming that focuses on news, entertainment, faith-based content, weather, documentaries, children's content, and more. But of course, that will be for video on demand. That's also partially the news. But again, I think the volatility is more of the story. Less the presidential election, less Trump plus.
There's a little bit of both, right? First off, how many names can you say the 1 month historical volatility annualized is 133%? And that underperforms the implied volatility by not only a wide margin, by less than half. So just to show the amount of volatility in this is extreme, but it does kind of make sense. If you not even trying to value the company, but the sentiment around it can make sense, right? Because if this is the primary medium or choice from a social platform that the former president wants to interact with people, if he's president, there's some reason to pay attention to it. However, if he's not the president, there's less reason to pay attention to it, right? So it's extremely binary. Like, it does feel like whether or not he wins is like the ultimate earnings event for this company. And take that risk for what you will, but I think it's fascinating just from an intellectual
Very interesting.
Okay, and that is 100% true. And not to say I didn't mean that the election doesn't matter at all. Of course, it matters hugely, but I guess I'm just pricing in almost the fact that if he won, and if he doesn't, then
right. Well, even then, what is it worth is still another question, and where can it go? I mean, you could literally put a dollar of what it could be worth, on paper fundamentally, and it can trade at a vastly different price than that because that's what stocks do. They tend to display, and they do that. So one to watch, maybe find an interest in, but maybe not for all, just given the volatility. And there's a lot of names that fall into that camp. DJT may be just the latest.
The ultimate earnings bet, I couldn't agree more. So we will be looking more at our names that have some more stability, let's say, in the overall markets here. We'll be looking at Meta as well as Alphabet, both ahead of their earnings next week. Stick around, Next Gen Investing. I'll be right back.
Watching the tape. Oh.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chartmaster segment, and joining me is the Chartmaster himself, Rick Ducat, to help us break down the technicals on 2 of our Mag 7 names, actually Alphabet and Meta. So Alphabet is the slight winner of the 2. It's up 0.3% here. So Rick, walk us through what you're seeing from a technical front.
Alphabet and Meta, 2 little mom and pop companies no one's heard of, right? Okay, so anyway, we look at this one, we can see that the gradual or general trajectory is upward here. You can see our white trend line extending across those lows. From those 52-week lows that were almost about a year ago at this point, we're up about 36% from there. You can also see that we did top out over here, 191.75, before we kind of gave back a good portion of those gains. We had a gap down here on earnings, and oftentimes a significant gap or earnings event, that's oftentimes a reasonable place to start your trend lines or analysis in general here. So we can see now that we do have this downward sloping trajectory here. We touched against that a few times here, and it's kind of counteracting our longer term upward sloping white trend line here. Now this blue trend line here, starting with these lows, that is an interesting thing to me as well, because we did connect these subsequent lows, but we are kind of breaking through it today. Not necessarily a big collapse or any kind of big, fall, but we are slipping below our 2 moving averages, our yellow 21-day and orange 63-day exponential moving averages at the same time. So we had a bit of a confluence here that looked important, and we are, not really able to hang on quite at this point here. One other thing I would point out is possibly looking like a reverse head and shoulders type pattern here. We've got our neckline, our red line here where we've topped out repeatedly, 168.5 or so, shoulder, head, shoulder, and this would be a more bullish setup here if we were to get a nice breakout above that red line here. That would be kind of what the bulls would be looking for, but just pointing out something I saw in terms of a pattern there.
Yeah, so as far as that overall RSI here and the strength of this recent trend, what are you seeing?
Sure, when we look at RSI, our measure of momentum, what we see is that we have managed to make our way out of that oversold area that we hit during that same point I had just mentioned previously, the beginning of our blue trend line going upward there. But now it's looking like we are, just like we are having our price situation develop. The RSI, we are breaking below our green trend line there. Our red trend line is still in play, currently fighting to stay above that 50 midline that separates bullish and bearish momentum here. So what the bulls would want to see would be for the RSI to follow suit with price kind of reasserting itself and breaking above some of these resistance areas here and we would want to see RSI stay above that 50 midline and break that red trend line. So what the bears would want would be for RSI to continue to weaken and slip below that 50 midline here. So kind of an inflection point that we're at right now. Not really clear which way things are going to break here. Should be an interesting to watch as we progress through this day.
Especially as we progress closer and closer to, of course, their earnings event, which has been, I will say, Alphabet has been one of my favorite to watch on earnings. It gives a great read into so many aspects of tech. I think it's become more and more interesting. But on that note, as we do go into their earnings next Tuesday after the market closes, what are we watching as far as some key levels of support and resistance?
Sure. And when we look, at the current situation that we're facing here, there's some pretty clear points to the upside and the downside that traders may want to take into account here. First, like I said, to the upside, repeated ceiling here at our red line, right around 168.50. The more times a resistance or support area is touched by price and holds up, the more significant it then becomes here. So if we were to invalidate our downward sloping white trend line, that comes in near about 166 or so. 168.50 would be the next potential stop. And then right here we had this high point and a couple of subsequent high areas around there near maybe 174.70 or so around that point. To the downside, we've got our green line here. That was a gap here, roughly a low there, a couple more times there. 156.50 or so, that would be a supportive area to keep an eye on. And we've got our purple 250 two-day EMA just below that here. But where we are right now, a key juncture here, the bulls would really want to hang on to this area as we head into the close.
Okay, yeah, lots to think about here. And of course, one of our low Mag 7 names that's actually hanging on to a modest gain outside of course, Apple and NVIDIA. But now when we think about trading this same, Alex, walk us through your thinking here.
Yeah, Rick laid out two levels on the chart from a resistance standpoint. First was around 168.5 and the second around 175. Those were two areas that I keyed in on. A couple things to add to it. We got earnings next week, so we're in kind of that no man's land where the earnings are very close, but they're not quite yet. And so what I decided with this trade is establishing something that an investor could hold through earnings that they had the confidence to, or not, but it does capture the event within the time horizon. What I looked at was a bullish call diagonal spread focusing on those two levels.
No man's land.
Firstly, buying the November 8th 167.5 call. So that's just below that first resistance point that Rick talked about. Secondly, say you see it getting to that level and perhaps even breaking through, but then running into its second level of resistance at 175 or right around there, that's the level that we're selling the call of November 1st at 175. So looking for a breakthrough that first level, but then maybe running into resistance at that second level. Whole package done for a 275 debit, so that would be the risk on this trade. But most critically here, Jenny, you can see because of how it's structured, $7.50 wide, debit only being 275, there's no theoretical upside risk, but it is a bullish strategy that needs a move higher over the next few weeks for this to be have a chance, let's say, at being profitable.
Okay, yeah, and shift gears here now and look at, of course, Meta Platforms. Meta also has earnings next week, so we have that major catalyst to look forward to here, but Meta has also been one to watch. I mean, a point of strength on a year-over-year and year-to-date basis, up over 60% year-to-date, Rick. So walk us through this technical picture for Meta Platforms.
Yeah, and when we look at this one, the chart's a little bit more simple for our purposes here. We have our channel here, connecting these two lows, duplicated it, put it across the highs. That's about where we topped out in terms of our intraday highs there.
Not much to go on today.
So. Now, giving back a little bit of the gains here, trending lower, and in jeopardy of slipping below our yellow 21-day exponential moving average.
Sliding away.
Our 21-day EMA.
That cats are back.
Changing from positive to negative as well here. So that's another sign that you don't want to see if you're bullish here. That's a sign of possible, trend reversal here. So not a lot of other noteworthy developments recently. Mostly just kind of sticking within the boundaries of this channel here with the high point at our previously mentioned red line. And this green line here, we topped out here a couple times here, and we have since risen above it, so that would be another key area to watch to the downside.
Okay, and as far as some of the recent, price activity we've seen, I know we've pulled back and we're still slightly from all-time highs, but still been a really strong chart. So as far as the resiliency here, what do you see when it comes to momentum and RSI?
Absolutely. For a stock like Meta to more than double during the past year, that's really crazy to think about. And when we look at RSI, we can see that our green trend line going across these lows, we're coming close to possibly slipping below it here. We do have a downward sloping red trend line in play here currently, but we still remain above our upward trend line, and we are still above the 50 midline here. So, maybe we faltered a little bit here, but we haven't kind of broken down quite yet. And price hasn't really been breaking below any key areas that we can see so far. Nothing really crazy is happening just yet here. I'd be curious to see if there's any big surprises before earnings. Usually things kind of calm down as you head into an event risk situation like that here. So there are some things to watch out for in terms of the RSI. Look for either of those trend lines to be invalidated. But for right now, nothing major to report.
Yeah, so it's far as some levels, again, I mentioned they have earnings October 30th after the closing bell. What are we watching as far as some key price levels? Of course, Meta, a name that's risen 105% off its 52-week lows here.
Yeah, really tremendous increase there for this particular company here. And as I said, you know, the bulls would really want to hold on to that yellow 21-day EMA. It's more of a bearish sign that we're starting to slip below it today here. Once again, green line, this area lines up very well with our orange 63-day EMA, as well as our short-term white trend line that makes up the bottom portion of our channel. So another major confluence of potential support right around that area, 543, 544. That's about the point to be watching there. To the upside, the old high, 602.95. Then we would have the upper boundary of our channel, maybe around 630 or so. Plus one standard deviation channel comes in at 660. That would be quite a lift there, but you know, just based on this particular study, one standard deviation above our blue linear regression line, that's where the potential resistance might come in at this point in time here. And that's another thing to consider. Linear regression line, our idea of fair value, our line of best fit, right here near 581, another near-term source of potential resistance to overcome.
Yeah, so a lot to consider here. Obviously, Meta making a move to the downside today, but great breakdown and appreciate it as always, Rick DeCat, our chart masters. Now, when we trade this name, Alex, another name that I do think has been very fun to watch. We joke it was Mark Zuckerberg's year of efficiency, but that's really rolled in over into this year with little signs of that waiting. So what are we watching now as we go into their earnings?
Yeah, we do have that earnings kind of danger zone on the calendar as they're scheduled for the 30th, which is in the next couple weeks here. So what I looked at again was a trade that will capture that event within its time horizon. But of course, some optionality if a trader did something like this, that they could make that decision before earnings, whether or not they wanted to continue to hold that, you know, barring market conditions, availability, liquidity, etc. But what I looked at here was a skewed put butterfly. So a little bit more complex strategy than what we looked at in Alphabet, but one that is perhaps a little bit higher probability than what we looked at in Alphabet as well. So what I looked at here, to be precise, was buying one of the 555 puts, selling two of the 550 puts, and then defining the risk below by buying one of the 535 puts. So what you'll notice is it's a $15 wide credit spread, 550 to 535, compared to a $5 wide debit spread, 555 to 550. So that's why I said skewed put butterfly, not just put butterfly here in this case. Now, because it's skewed, and because it's skewed to the credit spread side, you actually can do the whole package for a credit. So in this case, somewhere around a $3 credit was where it was prior to the show. That's going to set up a situation where the break even theoretically would be all the way down at 542, and then also it would lead to a situation where anything where all these options were out of the money, so above 555, you simply would keep that credit. Best case scenario would be a move right to 550, where this could expand to as much as $800 in profit theoretically. But most importantly, it is risk defined, and that risk is capped out below 535. So if there's some catastrophic move, be it around earnings or something else in the next couple weeks in Meta, you can't lose more than the 700 theoretical max loss associated with this trade. High probability though, Jenny, 542 is the break even. That's quite a bit below, $30 below the current share price. So we're talking something like, you know, let's call it 7-8% or so below where we're currently at. So quite a bit down there when you're looking at where this could be.
Yeah, and I will say, the game admits making a modest move lower, of course, to start off today, but we'll have to see where we turn out this week, as it does feel like earnings events are a catalyst, but also this name trades with lots of volatility on a regular basis. So we'll leave it there for our Chartmaster segment. Now coming up next, time to talk Polte Group, which is making a also pretty significant move to the downside today. We're down about 2.7% here, but remains up 40.5% on the year as we go into earnings tomorrow before the market opens.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
It's not time for FOMO, and so now we are discussing all things Pulte Group ahead of earnings. Reports due out tomorrow morning. So joining me now to discuss more is Caroline Wood, Senior Markets Correspondent for the network. And Caroline, great to have you here. So we of course have those earnings out tomorrow. This name has been a relatively strong performer. I mean, we're just about 1%, or excuse me, now 3% off of those highs. But walk us through what the street is expecting before those earnings.
Hey there, Jenny. Yes, we are seeing Pulte Group under pressure today ahead of earnings tomorrow. But if you take a look at the rest of the home builders, they're under pressure as well. So not necessarily specific to Pulte, but shares are down almost 3% today. D.R. Horton, Toll Brothers down, and Lennar down more than 3% as well. So Pulte has had an impressive run up, as you said. Shares are up about 40% year to date, 108% over the past 1 year. So expectations could be pretty high for this name. That bar could be pretty high. When Pulte last reported, they said, as we sit here at the midpoint of 2024,
Very
they say that it's
interesting.
shaping up to be a very good year for Pulte. So we'll see what they have to say in terms of commentary about the rest of the year. The stock has only moved higher really since then. Adjusted EPS is expected to be around $3.10 on revenue of $4.26 billion, as you can see there. And other key metrics that we'll be looking for, backlog, that's expected to come in around 12,428, valued at about $7.7 billion. Net new orders of just over 7,000, around 7,077, valued at $3.93 billion. Also, we'll pay close attention to margins because when it last reported, gross
For
margins
Civil
actually
War,
increased by
I
30
will
basis points
grow
to around
cannabis on my
29.9%,
property.
partially helped by a decrease in incentives. We know home builders
Make
have to give
moonshine.
incentives like mortgage rate buydowns to try to offset those higher mortgage rates, but Pulte actually said that they had offered less when they last reported, which helped boost margins. That being said, the CEO
Grab Caroline. Tell her to come with me.
said that previously. He maintained it when they last reported. So really, which indicates that they'll likely continue offering some sort of incentives to sell homes. In terms of other sort of commentary I'll be looking for, of course, the Fed cutting rates will be a key focus, I think, probably on the earnings call. Previously, Brian Marshall had said, while interest rate movements can impact short-term home buying demand, long-term market dynamics continue to benefit from a structural shortage of homes caused by years of underbuilding. But now that the Fed is actually cutting rates, he'll likely address that as well, likely being a tailwind, because previously he had said to the degree that the Fed actually cuts interest rates in the coming months, I think that will provide a powerful tailwind both financially and psychologically as we enter 2025. I think the big question, though, is how much of those Fed interest rate cuts
Yeah, how much?
should be coming, even though the expectation is that they'll be more gradual now, is already priced in with shares up more than 40% or
Oh.
year to date. So a lot to look forward to. This will be tomorrow.
AMD
With that,
new
again,
high.
Shares under pressure ahead of that report.
Yeah, and it's seemingly that the longer end of the interest rate curve, your 10 years, your 30 years, which are going to be closer related to, of course, mortgage rates, are actually going the other way now, back over 4%. So we'll see if that develops. One thing that I found kind of interesting, and it might just be the markets they're operating in, they're not really at the same price point as the Lennars, the D.R. Hortons, or the KB Homes. They're a little bit more expensive, so maybe mid-range, because they're certainly not a Toll Brothers, which is pushing $1 million for those houses. They're kind of in no man's land there. How do analysts feel about Pulte, though, altogether?
You know, I was taking a look at Pulte versus some of the other names that you mentioned. Pulte's according to the National Association of Home Builders, it's the third biggest home builder. Analysts are very split on the name. 50% buy, 50% hold. So no sells. The median price target is $144.50. So that's basically in line with where it's currently trading. Actually, as you can see,
Coin 160.
cents under where it's currently trading. So we might have to have some analysts price target adjustments or possibly some re-ratings. If you take a look at some of the other names, the biggest home builder, D.R. Horton, which is up 24% year to date, 54% buy, Lennar 52% hold, so technically the majority in the hold camp, although there are 43%
During
buy.
KSCP and went all the way to 20 bucks.
Has the most amount of buys, but still 63% of analysts in the buy camp versus 26% in the hold and 11% in the sell. I mean, Toll Brothers, I think it's important to note, is that 50% year to date and 125% over the past year. So that's been really the top performer, and as you said, the top price point as well. So analysts pretty split on this name. I did see a note out of Bank of America not too long ago saying in our view,
coin can drop again.
Stronger than the improvement in underlying fundamentals as investors look through near-term weakness to a 2025 recovery fueled by lower mortgage rates and pent-up demand. So definitely more cautious approach heading into this report, but there's not like a clear bullish or certainly not bearish sentiment, but it seems like they're definitely split between kind of staying on the sidelines given the run-up or think that there's some more room to run.
Yeah, and I have to imagine also we've heard from these home
Yeah, I saw it.
this idea where those were deferring their home purchases
KSCP,
with the expectation for lower
God.
rates, which now I think there is still more and more credence to be getting those lower interest rates. I know they've already been reduced, but I do understand that way of thinking of like trying to find the best deal, especially because as we know, it's a very tight market right now as far as supply.
I almost want to short it.
To get go ahead.
Sorry, Jenny. Sorry to interrupt. But and to Alex's point, the fact that we've been seeing rates kind of tick back higher could also kind of cause some fear of, oh no, I have to get in now or I have to buy now before, because they're going back up. So it could kind of make some psychological, decisions a little bit faster. But, all things to consider. But, on the whole, we know that rates should be coming down, which would benefit the home builders of the world. It's just
no options.
Have they already, priced that in at these levels?
Yeah, that's a great point too. So we'll leave it there. Great insight as always, Caroline Wood, Senior Markets Correspondent for the network. And so Pulte Group, I agree with her that there's a bit of a mixed picture here. I think there's relatively good expectations just given that the stocks run up, but this is one of the first of the home builder, if not the first to report. So they also have some pretty big shoes to fill as a result.
They do. It does seem that the market's fairly well tuned in this particular industry and sector as to how the performance will be. You don't often see a ton of volatility. Doesn't mean that there can't be. So we looked at a risk-defined strategy. One thing that I've noticed over the last couple years in this particular name,
what's that?
The 1 month exponential moving average, so your 21-day, let's say, exponential moving average, has served as a pretty significant price level, both as a resistance point at times and a support point at times. So right now it's above that level, and that level is around 142. So what I looked at was, say it acts as a support point again in the event of disappointment. We use that for the anchor of our strategy, which in this case is a short put vertical at that 142 strike. Define the risk by buying the 140 strike, all of it expiring this week, a true earnings strategy. And look at that, collecting about exactly 1/3 the width of the strike. So risking 133 with a chance to make $67. 140, 133 is the break even below that potential support point. And, of course, risk defined in the event that it does make a larger than expected move. Of course, max profit if it stays above 142, that support level holds, or even the stock moves higher. and of course all of this expiring at the end of the week. About a 2-to-1 risk reward, so sort of in that loose guideline wheelhouse that we use, Jenny, for these credit spreads that we look at.
Yeah, and we'll have to see, of course, how earnings end up shaping up because we're up 40% on the year, of course, 106% over the last 12 months. So an outperformer in that time frame, and of course, just on a year-to-date basis. But we'll leave it there.
Yeah.
For all things FOMO. Now coming up next, time to talk another story of the day.
Leave it there.
Disney, with of course. It's Bob Iger, CEO, perhaps departing, and well, who's going to take over? They also did
Bye-bye, Bob.
leadership shakeup as far as their chairman. So we'll discuss more. Disney shares down about
What scam you got away with?
News.
Dow Jones down 320. Oh my gosh.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk all things Disney, of course, with Iger's successor being expected to be named by October, about 2026, excuse me. So we have some time there, but this, of course, comes in the back of news that they do some shakeup in their overall leadership. Alex, to me, this is a story that matters the day you get it, that it typically, I feel like, loses ground. This isn't like a fundamental shift in Disney, but I do think interesting to hear that Bob Iger is, of course, planning to exit it in the near term.
Yeah, they say early 2026, right? So, I mean, we're in 2024.
I guess not really near term at all, yeah?
I mean, it's near term in the sense of, the grand scheme of Disney as a business, but the markets at times seem to be worried about what's happening tomorrow, what's happening in the next month. And so I think the important thing for Disney investors is that this is going to be something that's relatively transparent. It's not going to be abrupt. And so it's going to be something that hopefully doesn't, shake things up too much. Now, one could argue that although initially there was excitement about Mr. Iger's return to Disney when that happened a few years ago, not much to show for it unless something changes over the next year and a half.
Yeah, and I will say that I know that, of course, Bob Chapek was handpicked by Iger. He was fired back in November of 2022 after a pretty turbulent tenure that lasted less than 3 years. So there is the thinking that now Iger, after returning to the job,
did a horrible job, Bob Iger.
Can actually stick, and I think that that's all for us all because, of course, as we know, Bob Iger coming back into the helm of the company hasn't exactly been like the savior. I will also say, to Disney's credit, it's been a difficult environment for a lot of this streaming
Bob Iger
business, as well as its parks business, as well as the fact that it has a pretty big tourism exposure, and the fact that they're also exposed to like merchandise, discretionary spend. All of this we talk about basically the consumer coming back on right now. But Disney's also tapped James Gorman to replace Mark Parker as the company's next chairman, effective in January. That's at least that's a more midterm, at least, change in the company that we can sort of work through. It does come as the company, of course, does plan to lay that succession of Bob Iger. But all things considered, Disney has its own turbulence it has to work through, and I think that right now, just seeing some sort of moderation in its business, where it feels like every earnings event right now is somewhat of an unknown. I think that you need to get into a more stable place if you're Disney.
We just had a 10-year chart of the stock pulled up, and it does put in perspective kind of the roller coaster ride that's been Disney shares over that last decade of trading. One thing I would note is this is sort of what Disney was prior to the pandemic, which is a company that sort of oscillated between about $85 a share and let's call it $115, $120 on the upside. Of course, it's basically at the same place that it was to kick off 2015 right now. All that said, I'm not going to discount, of course, the fact that there is a dividend paid and there would be, a little bit more total return to show for that. But the two exceptions where volatility really picked up were the pandemic, which makes sense, right? They have a lot of money tied into theme parks. Theme parks were shut down. There was a lot of uncertainty. There was a lot of volatility. But then when things got really exciting to the upside, it was that launch of Disney Plus and the excitement around streaming also makes sense, because when you look at a name like Netflix, for example, over this same time frame, it's some 15, 16 times higher over that 10-year stretch. So Netflix, the king of streaming, really was returning a ton of value to shareholders through stock price appreciation. It makes sense that, hey, a company that had a long-standing role within content launches its own streaming. That excitement around it led to a lot of upside, and really uncharacteristic upside for a name like Disney. Now, since then, some disappointment, other things, shakeups, of course, from a leadership and execution standpoint have led to sort of giving back those gains. But it made sense, I think, at the time, why the market was excited about Disney Plus, maybe less so excited.
Absolutely, and I will say I have been watching a lot of Hulu recently, but it hasn't exactly led to any, I am the constant right now balance of trying not to have a million subscription services, and we know from Netflix last week they're planning on eventually raising some of their higher.
You got a little double top here on Spy.
The more price increases, the more it makes you say, well, it's difficult right now for a company like Disney to not only have one streaming service, but many that they're trying to compete with for a very small piece of that very, very right now, I'd say, cutthroat market. But we'll leave it there for our Disney discussion. Now, coming up last but not least, we'll talk all things Kenvue, which is seeing a pretty nice session today as a result of some activist investor interest in the overall companies. We'll dive more into that story with George Tillis coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day.
What are they doing here, man?
Ready to go. I'm Kevin Hayes. Catch
Kevin?
me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It is time for Under 30, and today we discuss a name I don't believe we've discussed before, at least not intentionally. That's Kenvue, of course, parent company of popular consumer brands that I think we've all heard of, from Tylenol to Motrin to Benadryl and many, many others. Joining us now to discuss more is George Tillis, Senior Markets Correspondent for the Schwab Network. George, this was a spin-off that I think kind of happened in the backdrop, in the background, and I think Kenvue has kind of gone overlooked, to use another one of your segments here for you, but a stock that has a lot of familiar brands.
Yeah, very much so. I mean, these are essentially a collection of premier brands, everything from, like you mentioned, Tylenol, Band-Aid, when it comes down to wound care, Listerine for other healthcare names that you're probably familiar with. But anyhow, this company was spun off in 2023. Was actually an IPO spin-off from Johnson & Johnson. So it's essentially a collection of the premier consumer brands. And there's a lot of things going on. Obviously, the stock is doing well today. The stock has been higher over the last year by about 17 or so percent. And one of the things about this spinoff was it's all about essentially unlocking value. I talked about General Electric earlier with the guys on Fast Market. The breakup of that company into three different divisions or three different companies was tremendously successful. So I think J&J was trying to do a similar type of thing. In other words, spinning off some of the more unprofitable areas of its business, unlocking the valuation multiple for its pharmaceutical business. And again, it did that by spinning off KView as a separate company. But one of the things that's been going on is, even though it was spun off into its core components, which includes things like skincare, health, and beauty, as well as essentials, and when it comes down to things like medical care or medicines, there's other talks about now spinning off the beauty segment of its business. And this is essentially what Starboard Value, which is an activist management fund, has taken a pretty significant stake in the company, and they're actually trying to shake up the company once again to spin off their skin and healthcare business, because they're actually seeing more value potentially to be unlocked here, considering if you look at that portion of the business, it's generating about 27% of total sales, but it's actually not necessarily as profitable as his other divisions, because it's only generated about 16% of EBITDA for the entire business. So it's a story about a spin-off and potentially another spin-off, a separate company or division, another skincare business, which again, shareholders are appreciating as the stock is moving up nicely today.
Yeah, so George, I mean, anytime I hear this activist investor, to me this is a sign of a company that is frankly needing some help. So, I mean, should we take this as like a vote of confidence, or perhaps signs that now that, I mean, basically since the spin-off, this company is in need of like that next catalyst of growth, or I mean, like shoring up its financials, frankly?
Well, so it's a good question. So what happens typically in these spin-offs is, parent companies or larger companies will spin off a smaller company with debt. What I see here is not necessarily a debt problem, even though if you look at the debt on the balance sheet, it's about $8.5 billion, but there's $42 billion in equity. So it's right sized. I mean, the problem for KView is it's not a growth company, and if you consider the other thing, the brands are well established. They're brands we recognize and trust and have faith in. But there's also a tremendous amount of private label brands, particularly in skincare and beauty, that is now out competing, these legacy brands. And I think that's a problem that Starboard is looking at, and essentially that is now encumbering the expansion of the multiple for the other businesses, which is their essential health business and their core health business, which includes Tylenol and so forth. So there's a potential for more value to be unlocked here, but as the stock price has been rising, particularly in the last few months, it's not just today, it's moving higher. Obviously, the market has got some impulse or insight into this activist investor move. The forward multiple is expanding. And so what I see here is the company, if you look at the forward revenue estimates, they're about 3%. The forward earnings growth is around 7%. And right now, based on 2024's earnings, the stock is trading around 19 times earnings. So typically, if a stock is, selling product, the revenue growth rate and the earnings growth rate are both in the single digits, you may see stocks trade at low double-digit multiples, let's say between 11 and 13. And right now, it's trading at 19. So it's trading essentially like there's value to be unlocked here. So I can't say exactly how much more room there is in this potential move, but nonetheless, I can see that the price of the stock is moving contingent upon more value being unlocked, and it could be based upon this activist move by Starboard.
Makes a lot of sense. I would also add, too, perhaps just negative correlation to Treasury market, or positive correlation to the Treasury market negative correlation to yields, as well as perhaps risk-off positioning, given the strong consumer
Good point.
signal, that it is. Thanks to George Tillis, as always, senior markets correspondent for the Schwab Network. Jenny, making a little bit of a comeback here. You got NASDAQ in the green.
I know, and finally we got some price activity that was favorable throughout our hour, of course, being on air here. It's nice to see that we're closing at least in the green as far as the NASDAQ is concerned. That'll do it for Next Gen Investing, of course, for this Monday. Coming up next, we have the Watch List with Nicole Petalides.
Nicole.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
I don't know.
Election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best
Too
traders
funny.
I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Do you think so?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
No.
Commercial. The old guard is saying,
Please.
away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market.
Market Overtime on the Schwab Network. Thanks for tuning in.
It's so funny. Excuse me. Woo! Not a good day today at all. I think it go down probably was the worst month of my year.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides, 2 p.m. Eastern Time. Welcome here to live to the New York Stock Exchange.
I'm waiting.
You're with us. Markets are under some pressure, but we have a big show for you today. Steve Forbes is here. Editor-in-Chief of Forbes Media will be joining me right here in the chair.
Oh,
next to me.
yeah?
We'll discuss everything, the U.S. economy, the election,
Steve Forbes himself?
decision, and more. I just had a great chat with him moments ago.
What'd you
can
talk
check that
about?
out, too, on my Instagram. The presidential election rapidly approaching with Election Day, November 5th.
Watch his
We'll dive
eyes.
into investment plays on either candidate winning. Our panel standing by to discuss big tech's latest obsession.
Make sure you warn him about
Our
that.
panel will talk about all about rising adaptation and energy sources, some of the obstacles that companies may face in adopting nuclear power. So there you have it. That's the big show and a lot more other things throughout the hour. 2 hours left in the trading day. Here's a look at the numbers. After 6 weeks of gains, you are seeing down arrows, except for the NASDAQ trying to give it a go. S&P's down 1/4%. The Dow's down 3/4%. The Russell down 1.5%. And oil and gold are both to the upside. Oil's at right now 77 barrel, up $1.55. 27.36 for gold, which has been hitting highs up almost $7. The VIX takes a breather. It's still below 20, 18.15. 7, and Bitcoin 67,415. Dollar 103.79. So there you have it.
There you have it.
Picture the setup and a big week ahead. Of course, Kevin Hanks, host of Fast Market, is with us. We've been talking a lot about Disney. Obviously, big news there today. The market liked some of the news, so let's hear what you're thinking here and what you're watching when it comes to Disney.
Hey, Nicole. Yeah, Disney down about 1% on news today that James Gorman will replace Mark Parker as the next chairman, effective in January. And that also lays the groundwork to name a successor to Bob Iger. Now, here's where it gets a little interesting, Nicole. They're talking about early 2026. The market was thinking, and they were guided that this decision would be made in 2025. So, as you know, in November of 2022, Bob Iger's hand-picked replacement, Bob Chapek, was relieved of his duties. Right now, there's 4 people that report to Bob Iger: the chairman of ESPN, the chairman of Disney Experiences, and then there's 2 co-chairmen of Disney Entertainment. Those are all the people interviewing with the succession committee to be the next CEO.
That's
but
exactly
like I said,
what I
I think
thought.
the market wanted this to be done in 2025. It looks like it's going to be pushed out now till 2026. Disney down a little over 1%, Nicole.
Yeah, understood. It had been higher earlier today. On the earlier show was up about 1%, so has lost that momentum and has joined the rest of the market with the down arrow too. So a lot of interpretation now, right, about what will happen. They have to wait till 2026. UPS, a downgrade at Barclays.
Yeah, UPS and FedEx on the downside today, with Barclays downgrading UPS to underweight from equal weight with an unchanged price target of $120. Remember, they have earnings out later this week, so a little preemptive strike here has UPS down about 3% as we get to midday. The company's near-term earnings could be pressured by a still weak parcel demand backdrop, but long-term pressures from Amazon, by the way, that's not down on this news, and non-union FedEx, which is down along with UPS on this news. So this is interesting news going into their earnings. You know, they also talk about the the dividend being kind of stale. The dividend on UPS is almost 5%, Nicole. So it's not like it's a inexpensive dividend to begin with, but you know, UPS still reeling from the labor negotiations they had probably 18 months to 2 years ago. So this stock still has remained under pressure, coming out with earnings this week and a downgrade by Barclays, Nicole.
Right, understood. You know, that's the big picture here. Thank you so much, Kevin Hanks.
Yeah.
Appreciate it. Let's talk more about the market. Jeffrey Small's with us, president of Arbor Financial. Thank you so much for being with us. So tell us some of your thoughts on the market right now, ahead of the election, obviously ahead of the Fed move. Some of your thoughts.
Well, we're up 22% year to date. It's been an epic year so far, a great run. You know, looks like we're transitioning definitely into a soft landing versus a hard landing as we see inflation start to tick up along with employment. And so I think we're in a position now where it's going to be very difficult for the Fed to keep lowering rates based on the numbers that we're looking at, Nicole. And so I think at some point, though, the market is going to have to swallow that pill, because a lot of this growth has been based on what's going on with the Fed. And so if the Fed's not going to lower rates, I'd look for a pullback.
Right, understood. How concerned are you about inflation?
You know, I'm really concerned about inflation. I think the real inflationary number is always much higher than a CPI because it doesn't include energy or medicine. and food costs. And we know what those are. And so the only way those get controlled is if we have peace on this planet. We don't see that happening right now. And so inflation is going to be a killer with rates, which means rates are going to be higher for longer. The Fed will not lower rates. Inflationary indicators and economic indicators are saying that we are really kind of stuck or we're rising again.
When we
sad.
think about things that can drive this market, everybody keeps talking
Sad
about the
but
AI
true.
revolution, and a lot of your stock picks here are related to that, right? I mean, I know you have Meta, Amazon, Nvidia, Tesla. Are you a big fan of the AI revolution?
I really am. Tech is not dead. When everybody says to get out of something, then that's the time to get into it. That's kind of like a Buffettism. But, the broader market prediction, Nicole, as you know, is that, we're going to see 15% earnings growth across the board next year. The other 495 unmagnificent stocks are going to increase their bottom line. We saw that last week. We saw banks and financials outperform 73% beat. And so that story is going to continue. And so, we've got a thriving economy. That soft landing technically is already here. And so how can the Fed lower rates at this time? I don't know. But why aren't the other tech stocks going to grow at 15% year over year? Of course they are. And so there's no reason not to own those at this time. And they may outperform everybody else, again, in terms of their bottom line. And so you definitely want to make that a core part of your portfolio.
Yeah. I mean, when you think about these picks like Meta, Amazon, Nvidia, and Tesla, are you waiting for pullbacks on these names, or would you buy them today?
Well, I think definitely Meta's a buy today. They're taking a little bit of shot here. I think the average analyst calls 660 in 12 months on Meta. Definitely a buyer of Tesla at this stage, as well as Amazon. Their growth story is still intact, and they're slowly creeping back up toward their all-time high again. And so, they're the clear leader in the e-commerce space. They've got a ton of free cash flow. Meta's got the hugest footprints across the globe in terms of controlling the economic mode out there with 3.5 billion users. I mean, they got 75% of the internet advertising domestically here they control. And so you definitely want to own these players. They're going to keep growing year over year, 15, 20%, I think is an expected rate of growth going forward, even if we see the economy take a harder landing than the soft landing that apparently is here. But again, soft landing is not bad news for the tech companies. It is bad news if the Fed doesn't lower rates for the 40% of the Russell small cap stocks that don't even make any money, Nicole.
As we look at some of the jobs numbers and what's going on in our economy, how are you feeling about the economy?
Well, I'm feeling really good about the economy, but I feel that the market is priced to perfection to a certain degree, so you've got to be very careful at this stage. If one major tech player or one major component decided to have a bad quarter, it could trigger a sell-off. I expect at least a 3 to 5% sell-off if the Fed says, look, we're done raising rates for this year. So it's going to be interesting to see what they do next.
And then when I think about what the Fed should do and the cuts that are likely coming, there are some folks who just say the Fed should pause and stop making moves and, stay where they are. What do you think the Fed should be doing now, this year, and next year?
Well, I think the Fed waited too long to not lower rates. They probably should have lowered rates earlier, but a 50 basis point cut looks like an election give, even though the economic data barely justified their state of operations. And so going forward, I think the Fed is at the same mercy that we're at. They don't have a crystal ball. They don't always get it right, but they're at the mercy of the economic data. And so, should the Fed lower rates right now in October? No, I believe they should take a pass, Nicole, to answer your question. They should not lower rates in October and reevaluate in November.
Yeah, and would you avoid anything right now in the market?
I think the entire market, since it's correlated, is really subject to what the Fed trend is going to be. And so, there's lots of things that are all-time highs. 3/4 of the market's at an all-time high, Nicole. And so, is it time to take some profits? No, but it's probably to have some defensive measures in place just in case.
All right, Jeffrey Small, thank you so much. President, Arbor Financial, great to see you. Appreciate it.
Thank you.
Coming up next, Options Corner. Tom White standing by. I'll give us a highlight unusual options activity from the day and how investors are looking to trade on recent news of Boeing, Procter & Gamble, and Starbucks. Stay with us.
Okie dokie.
Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, welcome back to the watch list. We are glad you are with us. Time for Options Corner. We want to analyze unusual options trades that we're seeing throughout the day. We welcome in Tom White, Fast Market host there, and Schwab Network expert. Thank you, Tom White, for being with us. We have a lot to discuss throughout this hour. Of course, Boeing, we have a lot of news pertaining to the Machinists Union, and maybe now is the time for those over 30,000 folks. It seems that they have a tentative plan, and they need to vote on that. And that's helping the stock today, right? And you found a trade that goes along with that.
Yeah, not surprising. We're starting to see some bullish flows on the call side in here in Boeing. Stock's still down nearly 40% so far this year, so it still needs to make up a lot of ground. But this is a good start for the new CEO, Kelly Ortberg, that came over from Raytheon. And I think one of the key points in here is, when they initially said no to the 30% wage increase from the last offer from the company to the union, they basically just wiped it away and said no. So now coming back, 35% wage gains over the next 4 years. They added $5,000 to their pension plans, a $7,000 one-time bonus as part of this package. Now the key thing is, the union who was fighting for the workers basically stepped away after this, and they said, okay, we'll accept this, and then didn't really say anything to the machinists at the time, and just said, hey, you guys vote on it. It's in your court now. So kind of stepping away, the head of the union kind of stepping away. Now, they're also starting to explore asset sales. They already sold one of their military digital receiver technology to Thales over in the EU, wireless equipment used by intelligence services. They sold that arm to Europe. So they're already exploring sales of maybe underperforming assets to kind of shore up their balance sheet, along with those over $25 billion worth of not stimulus, but capital raising that they're doing here. So a lot on the table. Still, they're not out of the woods, but they've got a massive backlog. They need to get these workers back. We'll find out more on Wednesday. They report earnings in the morning, the votes later on in the afternoon, so we'll get some more. But I think traders are setting up for some potential upside here over the next month or so, because I saw some buyers of calls in the November 15th monthly cycle. So just 25 days to expiration. Trader bought over 7,000 of the 180 strike calls. So these are far out of the money to the upside. Paid an average debit of about $1.80 on those, just under $1.80. So that break even 181.78 over the next 25 days. That's about 13% above the current share price. So you're going to need to see some more days like today for this trader to get above that break even where he starts making money. Haven't been above that 181 level, Nicole, since early August. Call volume about double normal daily average volume, which isn't surprising. We've seen this stock pretty volatile over the last several weeks since the strike started. So yeah, people piling in and buying calls in here with the expectations that maybe this thing's over and Boeing shares can right themselves.
All right, thank you for that, Tom. Can we move on and talk about Procter & Gamble?
No.
Obviously, a big one there. Some of your thoughts on the bullish trade that you found?
Tell her no.
Yeah, stock's up about 15% this year. It just hit all-time highs last month of nearly $178. It's pulled back here a little bit. Now, they had decent earnings last Friday. They beat on EPS, missed us slightly on revenue, but gave guidance for fiscal year 25 that came in basically in line. They saw organic growth slow over in China, like pretty massively. So that's been an outlier for this company, as domestically those margins are increasing and organic sales have also stabilized to moving higher a little bit. Inside that guidance, they expect China to kind of right itself. They'll start to improve over there, but that was definitely a thorn in the side of this report. They see a few more quarters until returning to growth in China. North American organic sales were up 4% in Q1 versus up 7% last year during that same quarter, but holding volume share in most regions. I think a lot of people were piling into Procter & Gamble and a lot of the other staples names just based on interest rates were falling. Yields on these staples pretty robust, but I did see some bullish call activity in here on the December options out in the December 180 strike calls. Trader bought over 8,000 of those for an average debit of 83 cents. So that break even for this trader where they start profiting is just below that 181 level over the next 60 days. So they're giving themselves a little bit of duration in this position. That's about 7% above the current share price of Procter & Gamble today. So bullish activity on a down day for Procter & Gamble. Not surprising that somebody thinks that we're going to visit all-time highs here over the next couple months into the end of the year.
All right. Last but not least, and it says how there's been a lot of options trading activity around Starbucks. Of course, we had Brian Nichols came over to run this name, right, from very successful Chipotle. You're looking here, and right now we are seeing the stock, you know, it had that big drop in the last earnings and a big gap up on the right after the last set of earnings. So, and of course the news on a new CEO. What do you think people are talking about? But right now we're seeing the bearish trade that you found, right?
Yeah, maybe a little bit of protection. You mentioned that big pop that we saw after they announced hiring of Brian Nichols away from Chipotle. His successes on the Yum brand side with Taco Bell and Chipotle was the reason that they're paying him a lot of money to come over. One of the key things I think that investors are going to have to figure out on that earnings call on the 30th of this month is details. They want details on how he's going to change things. Now, he talked about moving back to what Starbucks does best, that coffee culture. They're going to do less promotions, kind of expand their offerings on their mobile app, but do a lot less promotions because they still think that they're not going to lose customers, that this is a premium product and their margins they can keep high. He did say he's not going to waste any time getting into the ring, providing an update on his job, promising the company to get back to its roots as a premium coffee house where people gather. And we've had some price target hikes recently, BTIG and some others going into this earnings event. But I'd be surprised if he gives a really thick clarity here on their path forward. But that being said, if you can see some short-term improvement, that might help the shares. But I think after that pop initially, now it's a show-me type of story, and I think that's what this trader's setting up for as far as unusual option activity. And this was out in the December cycle also, so 2 months to expiration on this one. Traders were buying 20,000 of the 85 strike puts, far out of the money to the downside. Paid an average debit of about $1.15 on those. So that break even just under $84 a share over the next 2 months. That's about 13% below the current share price in Starbucks. Put volume is about double normal daily average volume that we've seen over the last 5 trading sessions. So I'm not sure, Nicole, if this is a speculative position to the downside or maybe it's somebody that owns a ton of shares and just wants to hedge that. But pretty big positioning here into the end of the year to the downside in Starbucks.
Tom White, thank you for all of these in Options Corner today. Really appreciate all your help in evaluation of some of these big options trades that you're following. Real trades, folks. Thank you, Tom White.
Thanks.
Good to see you. Coming up, the presidential election rapidly approaching. It's getting very close, folks, just over 10 days away, right? Election day, November 5th. So we'll focus on potential movers based on either candidate winning. What should you buy? What should you maybe sell? Stay with us. We have the details.
There goes the megaphone.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access. even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Knock, knock. Number one broker.
There.
Number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hincks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Big knife there.
How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. The presidential election is just weeks away. And now, what about your portfolio? Is there anything you want to watch more carefully? Maybe some positioning you may want to do. We'll dive right into that. Our next guest here with us, Jeff Zananeri, is with us, independent day trader, former portfolio manager at Merrill Lynch, Bear Stearns. Glad you are here. Thank you for being here.
It's great to be here.
How are you feeling about the market right now, today? Have you been feeling confident or more nervous?
A little bit of nervous. I mean, we have the election in 2 weeks, but it's kind of like
a little bit.
People have fallen asleep on the fact that we've had some shaky election results in the last couple of cycles. It's been pretty volatile, right? So it's going to be a big catalyst. It's going to be a big event, and I think it could move certain sectors. Maybe not the entire market, but there's certain stocks and sectors that I'm looking at.
Now, I mean, without letting us know too much about which way you may be leaning, I know you have ideas if each candidate were to win, right? Vice President Harris, former President Trump. So let's go through that a little bit. Is it almost simplified? I mean, is it almost like easy to see which names may do better than others?
Well, that's where you have to kind of think a little bit sometimes outside of the box. And I have a couple of like mainstream ideas. So for instance, if Trump wins, I think that crypto is going to keep going. I think Bitcoin could easily go to 100,000, and Coinbase, which is the largest crypto exchange, would be probably the biggest benefactor of that. Last time, Bitcoin was over 70,000. Coinbase was almost $100 higher. So if my case that Trump wins or we get a Republican Congress plays out, I think you could see Bitcoin over 100K, and I think you could see Coinbase 50 to 100% higher.
Wow.
Yeah.
Yeah.
What about all
those other coins that go along with it. I mean, we think about Ethereum and Solana and Dogecoin. You know what I mean?
No,
I know what you mean, baby.
Mainstream, and I think that's why Coinbase is a nice way to play it because it's a listed equity, it's a public company, it's a big company, and the most compliant one by U.S. standards. So
has it been you're as an independent day trader? Have you found it more difficult, less difficult to make money? I mean, do you trade Bitcoin and such, Coinbase and such?
I trade stocks and I trade options. I'm not fully. I'm a a little bit older, so I haven't fully embraced like the
Who is
the
this
smaller
guy?
coins and the NFTs. I haven't gone that far. I do own Bitcoin, the main one, but
I'm Get
I
enough.
like to trade actively in stocks and options.
Yeah. On the other hand, if Harris were to win,
How'd you get on
it's
here?
a different play.
Yeah, so I think if Harris wins, I think it's going to be a little bit more of the same. And if you look at what's breaking out now, gold is breaking out.
Right.
And my thesis is really simple on that. Harris has a huge spending platform that she wants to put in.
She sure does.
It's no secret that it's a little bit inflationary, and gold does really well with inflation. And there's also a risk premium, geopolitical risk premium, to I think the Harris candidate's presidency that gets priced into gold also.
So, I mean, gold right now is at 2,700 plus at new highs.
Yeah.
Where does gold go?
I think you have 30% upside if she wins.
Wow.
I mean, if you have
That's a big move.
The smallest odds scenario for the election results would be a Harris victory plus Democrats taking Congress. That happens, you have a super inflationary trade coming.
I see. So it's
In my
like
opinion.
the inflation hedge, the concerns, maybe always like a safe haven.
That's
too,
right.
Right. And then when it comes to you have Raytheon, Lockheed
This is a unique one.
Palantir. That's in the Trump category, but you have it in a different way.
I have it in a different way because traditionally people think the Republicans are the candidates of the defense sector, because strong military, which is true. But what we've had is instability in the world, which if you look at RTX's chart, it's up 50% this year. It's historically expensive based on its own P, it's around 23. And so the idea is that, and Trump's saying this, when I come into office, these wars should not have happened. I'm going to try to broker peace. So the idea being that maybe the defense budget for all these foreign wars start to get shrunk a little bit. And so maybe the gravy train's not rolling as hot as it was. And I think that could be bearish for the defense if Trump wins. So that's I like trades that people don't exactly see coming.
Yeah.
You know what I'm saying?
Yeah.
That
No word on oil. What do you think about oil?
Oil's in a range. Oil's trading between like $65 and $80 a barrel. There's a geopolitical risk, Middle Eastern risk premium that's always there. But China's got a weak economy. The U.S. economy is kind of good, but not great. Always teetering, right? So the demand for oil's not high. I'd rather play different things than oil.
Because and also both of them are sort of focusing on oil in their own way. In which presidential candidate to you may do better for the economy?
I think Trump. I'm showing my cards.
Right.
I'm showing my cards. Now the stock.
Okay, but what would be some of the policies that you think may help?
Oh, there's a variety of things that, I mean, it's not so much his policies as the policies that I've heard from her that are kind of concerning to a lot of people. For instance, taxing unrealized gains, which is kind of insane. I heard Mark Cuban came out yesterday, and he's been, kind of a big proponent of her. And he says, hey, if she goes out and she wants to tax unrealized capital gains, I will campaign against her.
We're getting to the 200 here.
That's not good for stocks.
Okay,
that's not
so
good
that's
for the economy.
definitely probably not going to fly.
I don't
Ain't gonna
think inflation
happen.
is good for the economy. I think that's still a risk to the economy,
Buddy.
to the upside for the economy. And I think she's.
I'm watching the SPX here as we approach the lending, what do you call it? Lending strip of 5842.42. Jim, is that you? Yes, it is. 5842.41 now. Okay, get ready. 58.50s. Give me 125. I got one. Bam. I got one. 1 at 125. Oh, no, no. You can't do that. Mm-hmm. God darn. Oh, 160. $165. Could make a business decision right here. $125. Oh, there we go. Break it. $95. Well, that was cold. Come on. I sat there and looked at it. Oh, dee doo dee doo. What you got to say, Nicole? Platitudes.
Author of Inflation, What It Is.
Oh, it's that guy.
Steve Forbes also entered the Republican primaries for president in the United States 96, 2000. Tell us about the current economy. Were you an independent at one point and then a Republican? You have to clarify that if we got that wrong. But the big picture.
Well, in terms of politics, I've always been a Republican.
Right.
Where in the spectrum changes over time, but always the
Always on the Republican ticket. I heard that gentleman talk about independent, and that's why I questioned it in the last second. Tell me a little bit about where you think we are now, because we've been talking about the jobs report. You say I like to take those with a grain of salt. You don't necessarily believe are we in a good place, great place, terrible place?
No, we're in it's the equivalent of walking pneumonia. Not enough to put you in bed, but not very healthy for the future.
Oh.
Still very dependent on government spending.
Right.
Still very dependent on just health care, which has got its own huge problems. We have a Federal Reserve that still, after 3,000 years, doesn't understand inflation. So you put that together, and an uncertain election, so things are kind of dicey.
I don't want to go back in time, but I got to go back in time. 4 years ago in the Trump administration, how would you have described that prior to COVID? The months going into COVID.
The record is clear. The economy was moving ahead. He was the first president to take deregulation as seriously as he did, which was a huge tax cut for businesses. He made sure the Federal Reserve behaved itself when they started to get out of line trying to raise interest rates too much. So, and then you look at what he did in terms of getting out of the Paris Accord, which was a dreadful thing. Put aside what you think of climate change.
Right.
That was not the answer.
Right.
He understood Iran. He understood China. So overall,
okay.
So no pneumonia there.
No pneumonia there.
You felt
until
like
COVID
was it an economy on steroids?
No, but it was a growing economy and
Yeah.
starting to get a real head of steam.
So at this point now, we know you lean to this. You are on the Republican side of things. You now would favor much of the same: deregulation, lower taxes, right?
Yeah. Well, if taxes
What
are a
about you,
price of a
Nicole?
burden, and if you raise the price of good things like productive work, risk-taking success, you're going to get less of them. It's very clear. And any of her proposals, just take the most ridiculous one, taxing unrealized capital gains. She
You gotta
says
be
it's
kidding
only for
me.
the rich. But where does the money come from? It's not, most wealth is not in cash. So they're going to have to sell assets.
Right.
And what is that going to do to the stock market when you have literally each year hundreds of billions of dollars of forced sales of equities? It's a disaster. All her proposals are destroying capital rather than creating capital. What they don't understand is if you don't have investment, you don't have a productive economy.
Are you concerned that businesses are feeling very nervous, maybe even might even say we're not even going to do our main business here in the United States of America? We may even move some of it out?
Well, the question is, where do you go in this crazy world today?
Right, true.
And so that's why you may get paralysis or just what you might call a capital strike, rather than money being put to work productively.
Could we go into a recession? Would we have higher inflation?
Well, depending on if she won, what she
Yeah.
did, and what the Federal Reserve did, you'd have economic turbulence. I don't know what the economic theologians would call it, but you're going to have a pretty bad economy, one that is way below its potential, and that's bad because we have a troubled world today. And the blunt truth is, if the U.S. is in trouble, the world is in trouble.
That's right.
You know, I don't want to be scare tactics, but you know, if the U.S. is in trouble, if our inflation could be high, if we have slower economy, wars continue going on, right? Is that a scenario that's
Well,
plausible?
what we see with the Biden administration and with the Obama administration was they love diplomacy, but they don't realize diplomacy is not effective if you don't have a strong economy and military strength. Every budget that Biden has proposed has been real cuts in the military at a time when China's building up. For the first time in over 100 years, we have a foreign country with more warships than the United States. That's not a good position to be in.
Certainly not. We just finished discussing election plays, and when you think about investing, right? Our last guest was saying if Trump were to win, he would be looking to Bitcoin, Coinbase. Those would be some areas that he would like, because Trump has made it known that he's favoring that at this point. So attended some of those events. Would you agree with that? Would you buy into Bitcoin or Coinbase if it seems like Trump's going to be elected?
I'm not into cryptocurrencies.
Right.
If you want a real currency, it has to have a stable value.
Right.
That's one thing the Federal Reserve doesn't understand, the
Then
way
we
you
have to
fight
get
inflation.
the US dollar,
you
right.
have to have a stable dollar. And so in terms of the economy, if Trump does get in, we get control of both houses, and we don't get in tariff wars, but actually reduce trade barriers, then I think we will move ahead, and the world will be encouraged. One of the things about the U.S. is if we get it right, as Reagan did in the 1980s, when he put in his tax cuts, within a few years, 50 countries followed suit. So it was a virtuous circle.
And then, look, it means good times, good feeling, good hope. The market moves to rise. Is that the vibe?
Well, the first year of a new president, you always get a market either treading water or moving down a little bit, sort of the buy on the rumor and selling the news. And so after the election, I think you would see the market zoom up and then pause a little bit. But don't try to time the market. See if what the fundamentals are. And one of the things that they're going to have to tackle is the Federal Reserve, which still believes prosperity causes inflation. No, bad monetary policy causes inflation.
How bad is the monetary policy right now?
It's not good.
Getting worse?
Well, you look at the gold price. That's a signal of lack of faith in the dollar. In the foreign exchange markets, the dollar's not as strong as it should be. So the Federal Reserve doesn't understand that. So they're looking at data that is useless. And what never gets asked, and I hope Trump asks it when he gets in office again, is why should the Federal Reserve be controlling interest rates? That is a form of rent control. We know in real estate, rent control doesn't work. It messes up the market. Interest rate control is a form of rent control. They used to call borrowing money, renting the money. So they're engaged in rent control, and the idea that they can guide the economy is preposterous.
It's been a touchy topic, because usually the Federal Reserve, this group was independent of, so monetary policy,
it's fine to be independent if you know what you're doing, but if you don't know what you're doing, then you have to have a fundamental examination. Their models are wrong. Their forecasts are usually wrong. They've engaged in some bad policies. So if you're looking at the world the wrong way, you should be called to account. Remember, the Federal Reserve is not part of the Constitution. It's a creature of Congress.
When you think about the moves the Fed has done at this point now, the Fed is likely to cut rates again, November, December next year. Should the Fed be cutting rates? Your thoughts and why?
They should get out of the rate-setting business because they're always going to be behind the curve or doing something wrong. And when you look at what's happening to commodity prices, especially when you look at what's happening in the gold price, that signals markets don't have faith in terms of the integrity of the dollar, and that spells trouble in the future. So the Fed is looking at the wrong things, using the wrong tools. Where did they ever get the idea that interest rates are the best way to control the economy?
And we saw the BRICS nations trying to put together their own currency, right? Are you worried about that? Quickly, just
no.
That's U.S. dollar is the reserve currency around the world.
Even if by default, even if it's not managed well, it's managed better than any other currency in the world.
So look, you're not looking at Bitcoin and things like that. When you think about our old school investing, do you like the Mag 7? Do you like the AI revolution? What kind of names are you leaning towards? As far as is it the dividend payers? What kind of names would you tell?
Well, dividend payers are always very fashionable now, thankfully, because you at least get cash.
Right.
But what you have to remember is if you have inflation, the indexes are not adjusted for inflation. So you look at a country like Brazil, which has had bouts of inflation in the past, the market indexes look pretty good. When you adjust them for inflation, not so good.
Not so good.
1970 is an example of that. So in terms of
good
industries, you should always look at healthcare.
Not so good.
That's going to be going through a revolution. both in, I think you're going to see rising in the next generation if the government doesn't muck it up, is the rise of a consumer market in healthcare, which will profoundly change the complexion of the industry.
If the government doesn't muck it up.
The future, look at an institution like the Surgery Center of Oklahoma. They don't take insurance. You pay in advance. And the prices are posted online. So if the procedure, you do something in the shoulder or whatever, if it's above a posted price, they eat it, not you.
I see.
And because they run a lean operation, all their surgeons are board certified.
Right.
Their prices are about a third to fourth of what traditional hospitals charge.
Right. Well, if the Democrats are to win, they're going to take over healthcare more.
And wreck it. What they'll wreck is research and development. And we're on the cusp of some great things in cancer and, and the like.
All right. Well, thank you for being on today, and we'll continue to watch how this election plays out.
I can handle him there, honey.
Good to see you.
Thanks for
around the
being here.
campfire.
Keep the faith. We'll get through this.
Well, either way, we're great Americans and always cheering for the USA. Steve Forbes with us. Thank you so much.
Thank you.
Of Forbes Media. Thank you. Still ahead, we bring in our panel to discuss big tech's new obsession, nuclear power.
Would have seemed nice to see these go up a couple bucks.
Reactors to power
Break it.
data centers. Let's talk about that next.
I need more. About even now. 112.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need.
Right now I got two of these
Tell me
here.
you know this.
5850s at 112.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab.
Bum, bum, bum.
Elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. Time to focus on nuclear power, big tech's latest obsession. Jason Britton's with us, President, CIO, Reflection Asset Management. Paul Powers, CEO at FISNA. Thank you both for being here. Paul, I'll start with you. You know, a lot of talk about nuclear. It used to be a taboo word. Now it's back in a big way. Is it the right way? What do you think is happening here?
NLR.
Well, the interest in nuclear is actually just the extension of the interest around AI.
NLR. Oh, a little installment here. Something go nuclear on me.
So, are we going in the right direction? Of course, some safety concerns that we have to consider.
What you need is breakups.
Jason, same thing. Your thoughts on where nuclear power is headed now that it's no longer taboo the way it was?
So I think it's interesting, Nicole, to think about how some of the players, especially Microsoft and Amazon, are looking at this somewhat differently, right? So Microsoft is looking at this in the large scale, reinvigorating 3 Mile Island or parts thereof, a large project a lot of folks remember from the 70s, where a lot of the other things
We have 8 minutes to power hour.
Small module reactors. So they're talking about smaller facilities, still big power production for the footprint, but something that really is unique and we haven't seen before. So it's a yes and, in my opinion.
Understood. Jason, let me just
I don't
follow up with
understand.
that because there's been so much talk about how to do this. You know, we think about the big companies that are building their own reactors, right? You think about Google and Amazon and some of these names that are moving
I understand.
forward. Is this the wave of the future? How fast can this all happen?
So that's a great point, right there. Just because nuclear power has been around for a really long time and it does tend to be cleaner, it does tend to have, zero carbon emissions. It still takes a significant amount of time, even if you're building a smaller facility, to bring something online. I think most of the estimates are 2030 to 2035. What you're really seeing is the pressure that these big tech names have put themselves under by not only creating this enormous demand based on the need for computing power, but then also all of their green energy pledges. Right, all of those, we intend to be carbon neutral or net zero by 2030. And it's really those two events butting heads that I think is making them look at nuclear power so seriously.
6 more
A lot
minutes.
of folks are looking to invest in nuclear power. They think it's the way to go with so much happening, all these big companies investing, data centers and the like. Are there headwinds here, Paul, that you're focusing on, or what could be in the way of this?
Yep.
There are definitely going to be regulatory headwinds that you're going to run into in this process, right? But I think that that's something that can be fairly easily overcome, and I think we can achieve a really reliable, efficient, and powerful source of energy production by investing in nuclear. The problem with the other methods isn't so much that they're it's not that it's not just the nuclear is cleaner, it's also that it's more powerful, it's more efficient than a lot of the other power sources that we have at the moment. And so I think that we're going to find that this is almost a sort of an inevitable bit of the evolution that we're going to see in the future with more and more AI consumption and the GPUs driving a lot more energy demand.
Yeah, I know you're you want to stress the importance of ensuring the extreme safety that's needed with all of this and how it all plays out. That is a concern, right? As we think about that, Jason?
Absolutely. I mean, you have two kinds of concerns there, right? One is the actual physical security of the plant itself from, tamper and potential acts of terrorism. And then the other is just the clean and efficient running of the facility and making sure that you're properly disposing of and storing the waste. I think both of those things are always going to be in the mind of every town council and every group that approves a permit. I think they're going to be easier to get around when we're not doing it at utility size scale, like a lot of the other ones. As I said, we're talking about SMRs. So to Paul's point, big output, small footprint. And there's another piece to this that I think that's worth mentioning, and that's when you start talking about wind and solar, you're talking about the need for storage, right? Because those things are not as reliable or consistent power sources. So you're talking about batteries. And you talk about batteries, you're going to talk about mining and rare earth metals. The nuclear side of the equation reduces that demand significantly, and I think is actually good for national security interests in the United States, considering where most of those rare earth metals come from.
Right. Well, Constellation's up, but Constellation
Each
up over 100%. Vistra's up 235% this year. The group has been doing incredibly well. Do you both, thumbs up? You think they'll continue to do well here? Anybody? Just a thumbs up or down if you're interested. Yep. You think so, huh? Okay. All right, Jason Britt, Paul Powers, thank you both very, very much. I just wanted to get some of those names in there too. Really appreciate it. Good to see you both. Thanks for joining us here on the Watch List, friends. I'm Nicole Petalides. Download our free Schwab Network app. It's available in the Apple App Store 24/7, schwabnetwork.com. I'll see you tomorrow. Market on Close of All.
Bye.
Is next.
Nice talking to you.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
We are now approaching Power Hour in 3 minutes.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market
No breaks.
is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot
Market's not happy.
used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in. Welcome to Market on Close. I'm Oliver Rennick. We got about an hour left in the session here. Stocks under some pressure to start the week. Equities getting hit a little bit with the Russell down about 1.5%. S&P's been pretty much within about 0.5% from the unchanged line all day, so not too bad here. Down 40 bips. S&P's, NASDAQ slightly red, only by 14 basis points. Nothing too concerning there, but definitely a little bit of a misstep by the small caps after another kind of failed breakout to the 2,300 level. Got good momentum behind it though. Seems like today bond market might be starting to factor in a little bit. That's the biggest move of the session. Big move in rates. 10-year futures down 60 bips. 10-year yield up closer to 4.2 now. And really moving through the high from earlier this month. Also moving through the line on the chart that I've been watching pretty carefully. So a little bit more of a macro story today. A reason? Not much. Pretty calm in terms of the economic data flow. Really nothing. And this week too, also pretty quiet. Fed speakers, but a few data points. Earnings that are very stock specific. Some continuation from last week's themes and some stuff we talked about this morning, like the airlines. But this is pretty much a bond story, and without a lot of fresh news flow for it, kind of looks like bonds might be going a little AWOL here. We'll see if equities can take it in stride one day. Doesn't necessarily mean that the relationship is breaking between stocks and bonds, but this is the line that was the highlight of my risk radar last week, and it is breaking. So, of course, you can draw lines of varying thickness, but this one's pretty clear in terms of just the range that we had been chopping around in the 10-year, around that 4-1 for the last 2 weeks. Now it's broken out. You can see really taking back a lot of the lost ground, basically around the Fed cut, a huge bond rally going into the 50 basis point expectation, and then the execution of that 50 bips, creating a very different type of environment. We've come now full circle, rates moving higher with the impetus of the Fed 50 bips being the bottom in the chart for yields. So now we see how the rest of the market deals with that. Generally, stocks have liked yields going up for the right reasons, but without any news flow, without any data, see bonds keep selling off. Suggests that this could be getting a little bit more intense. Bitcoin down about 2%. Another long-term line there that was broken. We're coming back to retest it. May not necessarily be a problem until we get back below it, which is kind of at like 66 right now, but essentially we're consolidating after a breakout. Pretty big move for Bitcoin over the last 2 weeks. So something else to watch. It's really going to be a technical story, I think, this week without a lot of big fundamental stuff on the calendar. Now, looking at the stocks breakdown today, it's generally pretty weak in the stuff that is related to rates, whether it's real estate, it's down. If it's some of the more sensitive areas of the market, like the regional banks, they're getting hit too. Whether or not crypto is going to be involved in that kind of category of rate-sensitive assets, don't think that's particularly obvious at this juncture. What is pretty obvious, though, is that there are certain types of yield curves that are better for certain companies than others, and so when you get flattening of the yield curve, and that's what we're getting here, when you're removing the possibility of deep cuts from the Fed, that's what happens. Yield curve starts to get crunched a little bit. Regionals down 2.5%, and we get a pretty big drop in the small caps too. All that generally fits together pretty well in the category of rate-sensitive assets, or at least those that do like either yield curve expansion or some support from the rates market for their balance sheet. And that's kind of the story of the regionals and the commercial real estate. Similar though for the Russell. All these things look technically very similar, whether it's regional banks, whether it's small caps, and that is this higher lows but no higher highs, the ascending triangle, if you will. It looked like maybe we were trying to break that last week for the Russell. Of course, now you call that into question a tad and you come right back down, but kind of similar to how that Bitcoin chart broke out and now you come back to test it. One could argue something similar here. So it's certainly not a reason to panic, but it is finally now, after weeks of a very positive correlation between yields and stocks, a reminder that too quick of moves or perhaps breakout moves in bonds can complicate the situation a little bit. Here's one thing that you can rely on though, that is NVIDIA. With the tech trade holding on firm, NVIDIA making highs, it's pretty much the best thing the market's got going for it today. It's hard to be too concerned with NVIDIA making records, which it is just below 142, and the overall NASDAQ barely changed. The tech story remains intact. Joining me here in studio, Jay Horn, host of Next Gen Investing, and Kevin Hanks, host of Fast Market. For a look at the session underway here, we've been wondering for weeks, Kev, when stocks might start to care about bonds, and I'm not saying they do today because S&Ps are only down 0.5%, NASDAQ's a little changed, but the Russell, some of the other stuff definitely seems like it's paying attention.
Yeah, I think it's we've been discussing this throughout the day. I think the markets are a little uneasy with the rate of the pace of how rates are climbing. A little bit, feeling a little spiky in terms of some of the rates.
And no news.
People uneasy. Well, right, which even enhances it. Why are they going, why are bonds selling off so hard? So that with the dollar, that with crude oil, VIX and gold all higher today. You're right though, in terms of percentage moves for the market, other than the Russell, it's a flesh wound. It's
Yeah.
not a big damage to the market all, but it did kind of stop the momentum of making new highs and put the market a little on its back foot, but nothing to be concerned about. I mean, this is not a crisis, and if yields were to stall here and stay range bound from this level, I think the market would get less uncomfortable over time. But at least for this move, this is not out of the realm of possibility that the markets would get a little nervous.
Yeah, and it's one thing if it happens when you've got a great jobs report or something that
event.
Exactly. This is more just kind of like, all right, positioning unwind, market going a little bit AWOL on bonds because it's a pretty big move. Treasury's down 60 bips now. All right, so the Russell pays the price for it essentially, but it also hasn't moved since the morning. Let's talk some stuff that is moving here. I mean, we got highs in NVIDIA too, so that kind of also puts a little bit of a floor on the market.
Yep,
this morning we talked
sure did,
Boeing, which
didn't it?
lifted off. We also talked Kenvue with the activist stakes. There's a lot of stock-specific stuff happening up there. Another sector we talked about this morning, Jenny, were the airlines. And even though they're lower on the session by a little bit, a pretty big move in Spirit, now that it's $2, I guess it's subject to big moves.
I mean, facing for its best day apparently on record here today. So,
Yeah.
I mean, that's something. Spirit now
Full 75 cents higher.
a full 75 cents, yeah, which I think is actually a much better way to frame a 51% jump because, I mean, it is 75 cents at this point, but the budget airline finally has some good news, and I think that this is being very well received. I mean, we're seeing this is in reference to, of course, the fact that this name has been seeing massive fallout as a result of its failed merger. So now finally at least seeing some optimism. The deadline for its refinance of around $1.1 billion in debt has been pushed back from Monday to late December. They said this in an 8K filing at the close of trading on Friday. If it can't refinance, though, the credit card processing agreement won't be extended until next year. The budget carrier has also said in that filing that back last week that it borrowed the entire available amount of $300 million under a revolving credit facility. So as of Friday's close, the stock was down 91% this year, obviously seeing a revival today. But again, the deadline extension could provide at least the carrier a little bit more breathing room and what has been seen as at least some short-term love for the name. I think, thank goodness. But we talked about the outperformance of United. Delta didn't see the same love on the back of its earnings United did, but now I feel like there's like the two-horse race in the airline space. So will the rest of the airlines see these same demands follow suit, or will we see some clear pricing wars? Because right now I do think United, Delta have the pricing flexibility that American, Southwest really don't. Spirit is also no exception there, but I put them in somewhat of their own camp because of their far lower cost of their fares.
Yeah, and after we saw the stock almost disappear, and a lot of people talking about bankruptcy, I think it is comforting to the whole general sector that it's perhaps stabilizing. We've got Southwest earnings coming up. We've also got American. I think this could be a really important group this week, Kevin, because they've all got good momentum behind them. And at a time where the economic data continue to surprise, and crude oil's low, it seems like they generally have a lot of things going on.
Boom, baby.
The one you're going to watch is Southwest, because they've been kind of under attack lately and underperforming and a real fall from grace. Remember, they used to be considered like the niche, where they had their own little sector.
Well, that was like post-COVID, the domestic revenge travel
They were
trade.
like the pandemic darling also.
Then they had the Christmas holiday disaster.
That's because all their flights were going to places that were like open spaces, like out west, and low prices. It was like the COVID revenge trade.
So it'll
58, 50s.
I know.
They've got some news. So we'll see. But American's the one with just as big in many ways as United, but a different balance sheet than United. So let's see how it reacts as they continue to try to get their balance sheet better.
Yeah. All right. So Southwest we watch, American we watch. Boeing also firming up today too. I mean, there are some things to be hopeful here about for the overall travel space and the industry. So I think those are important to watch. But I mean, Spirit it's got like a little meme side to it. Dave Portnoy was really into it for a while, and people. I mean, it's only $2.
Ching ching.
Yeah, people tend to speculate on the super cheap stuff.
I do think today's a bit of a short squeeze, yes, because I think a decent amount of the stock is sold short.
Ching,
so then anytime you have a squeeze like this, I mean, the shares go up and then they just keep going up. I also think that anytime there's speculation of bankruptcy, you
I
tend
got
to see
you
the
at
same,
60.
interest. So I mean, we saw the same thing with what was it,
I
Conair?
got you at 70.
Not to say that this is more companies because they're not at all, but I do feel like you tend to see this when there's like bankruptcy rumors, which isn't always a death sentence. I mean, look at Hertz; they came back from bankruptcy stronger than ever.
Right
But
now.
I do feel like ever since we heard rumors that they're going concern as a company, we've seen this like meme-like quality. Speaking of meme-like,
This
though,
could be a spot.
DAT has been a really interesting name to watch over the last month. I'm not going to go too much into that, but hey, the volatility on that name is outstandingly high.
I have
so
6.
It's an interesting one to watch.
Yeah, true. All right. Well, hey, we're at highs. Bitcoin's trying to break out. Kind of looks like maybe we could memify this market again, but that might get harder if rates are blowing out. That kind of seems like the message of the day, Kev.
Well, we had a little situation here.
As volatile, and I think your opening monologue of your, if we look at where the 10-year bond was, just basically 3 months ago, it was around 4.25%. And when the Fed announced their dot plot projections at the end of September, it rallied all the way to about 360, 365. And now we're back at like 4.1% or something, 4%. That's a tremendous movement in the bond market. And if you're buying individual ETFs or funds and you're not buying individual bonds, you can get whipsawed trying to chase the yield. So, and what do we mean?
What happened here?
We came off the longest inversion of the bond market ever, meaning short-term bonds like 2-year bonds were yielding more than long-term bonds like the 10-year bond. And historically, that's always led to recession. And amazingly, we now have a slightly positive sloping curve without recession. So, and when the front end of the yield curve comes down and you get a positively sloping curve, as we've discussed in the past, that's really good for banks. But it's also
what's
really
the 5850s going for?
Because now, if you're a high dividend paying
for
stock,
today,
you have to compete with investors buying short-term bonds for income.
So when do you think maybe a reversal becomes a problem? Because to your point, some of that.
Too soon. Oh, yeah. Now they're.
So
here we go.
We've had obviously a big shift away from the problematic 2022 bonds selling off, stocks selling off. It seems like banks have enjoyed the various steepeners that we've had, even as rates have plateaued or calmed down. But on a day like today, when there's no news, there's no economic data behind it, and treasuries just start falling apart, I mean, that starts to look more kind of like the problematic version of the bond market.
The only potential news that I could possibly read into what's driving traders today is that there was some slightly hawkish or positive comments, for lack of a better term, from a Fed governor that said the economy is doing pretty well, which then sort of unwinds the thought process that the Fed is putting forth a very dramatic rate cut program from now until the end of 2025. And I think rates are going to be more closer to 4% by the end of 2025.
97 cents.
3.25. So, and that's my own personal belief. So, because the economy is doing pretty well. So, you have those types of comments, and now traders who put on a bet, or the Fed
we're now at $3.90, $3
more aggressively than once thought, starts unwinding that trade a bit. And remember, Oliver, when we get to a positively sloping curve and the front end, short end yields come down,
320.
Good for, like we said, banks and dividend paying stocks and utilities. And what are all of those? They're classic value stock plays. So what we've seen over the past 3 months or so has been a rotation, or taking some off the top from growth and into value, which has expanded the breadth of the market. That's why you've seen things like REITs perform well, financials, utilities. The only classic value play that hasn't done well has been energy, but that's because it has its own, issues going on. So you have a more broader-based market at the expense of growth, and I think what has led that has been the movement of the yield curve.
Well said. And I think it was
Ching, ching.
you were looking for today in that Fed reference, as he did say that the cuts might have to come a little bit more slowly than expected, for good reasons, though. Our economic data have been meeting expectations. John, in terms of value, you've got a few ways to play that. Tell me about the small cap value ETF that you like.
Yeah, again, this idea of broadening the breadth of the market, and the whole world has been concentrated, and I mean that, the whole world has been concentrated in one play. That's been large cap, U.S., domestic, tech, and then you add on the Mag 7, right? That whole play has been the most dominant trade over the past 7 years now, and everything else has kind of been pushed to the wayside. Now, going back to that theme of I think we're going to be in a positively sloping curve, and I think the market is going to expand its breadth. Small caps will be a beneficiary of that. The valuation gap of small caps to large cap has been enormous. And if we are out of recession, or if we don't, I should say, if we don't fall into recession, that's very good for small caps, which is always fearful of that. And small caps in general, their indices have a higher concentration to banks and financials. So if the yield curve goes positively sloped and you have a better spread environment for banks to make money, VBR, the Vanguard Small Cap Value ETF, I think is a double-pronged play on that. You get the rally in small caps balanced by or added by the potential rally or continued rally in financials.
I think it's a good way to think about getting exposure to the factors that you want. It's basically it's filtering by factors within a market cap spectrum, obviously, of the small to mid cap. So you accomplish a lot there. You kind of kill a lot of birds with one stone.
Well, I think, Oliver, that's been one of the misnomers, or one of the things that gets lost in the shuffle when you look at ETFs.
There are unique bars all over Austin.
If you look at what styles have done better, or if you look at domestic versus international, you have to lift up the hood to look at what are the components of that ETF. So we know U.S. and the S&P 500 is dominated by technology, and rightfully so, because those companies have grown enormously in their cash flow, and they deserve to a degree the multiple they have received. But if you look overseas, or you look international, and you look at the indices of maybe small caps or mid cap, and you lift up the hood, they are not dominated by tech. So the underperformance could be just a construction of just a makeup of how the ETF is constructed, not necessarily because that sector is unfavorable versus others. And that's where I think there's value to be had.
You're wrong.
The chart is looking pretty good right now. It looks distinctly better than the actual small cap index that we use a lot. The
You're
Russell
wrong.
2000, which continues to kind of struggle at the same level in the high 22s, 23s, whereas when you put that value tilt on it like this fund does, you get better outperformance and performance lately. John, you got a bond play for us too. SHYG, shorter term, high yield. That sounds like a pretty confident view on the economy.
Yeah, I mean, again, conceptually, same thing with the VBR. The assumption here is that we're not going into recession, and if we don't go into recession, high yield bonds should hold up well. And if you're fearful of the movement of interest rates, particularly on longer dated bonds, you own short duration high yield bonds. So you have higher conviction in the near term on the cash flows of the credit that's in this, and what's within that ETF is going to mature within the next 1 to 5 years. So if your short-term outlook is fairly favorable, here you're picking up 6.7% type yield for owning a bond ETF that is short in terms of duration. So you're not, taking on a lot of longer-term credit risk and or a spread difference between where the U.S. 10-year is, right? So think about it. If a U.S. 10-year bond is now yielding a little over 4%, what should a 10-year high-yield bond yield? Probably significantly more, because you're taking on interest rate risk and credit risk. Here, we're pulling everything short, and we're picking up 6.7% yield. And with the 2-year U.S. Treasury yielding 3.9%, here's almost 300 basis points north of that. Now, you're not going to compare treasuries to high yield on a credit standpoint, but if you are looking for income, here's a place to play.
Okay, great stuff. Like the analysis, like the actionable ideas too. Thank you, John.
Thanks for having me on.
Got it. Portfolio manager, Tocqueville Asset Management. Good stuff. John Petrides there with a cross asset look with some ideas. When we come back, let's get stock specific. Got some fun earnings this week. General Motors next to Tesla. We'll look at the charts with Garrett Soloway, with a few others sprinkled in there too. Coming up next.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the
Doom,
Schwab.
doom.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome back to Market on Close. Let's get technical. Let's talk some trading ideas. Garrett Soloway is Chief Market Strategist of Verified Investing. Garrett, afternoon. Let's talk some earnings. How you doing, sir?
I'm good. How are you?
I'm getting psyched. We got some fun names. This isn't like the juiciest week, but
210.
Tesla's always fun. And GM right next to it. They're very different companies, and they're very similar companies in some way. Let's talk Tesla first here. What's your expectation? What do you think of the chart?
Yeah, so interestingly enough, it's trading within this wedge pattern. And wedge patterns tell us that there's been a lot of price chop sideways, and it's kind of narrowing tighter and tighter and tighter. And when you break out of a wedge, it's either explosive to the upside or the downside. So as a technician, I look at kind of the shorter term price action to see what's going on. And as we know, we saw a dip recently on the robo-taxi unveiling, a little bit of disappointment, and it's trading in what we would refer to as a bear flag. Sideways chop, which is telling you buyers are meeting sellers and there's kind of a void of price action. That tells us the probability favors a downside move on earnings, and if you break that that upsloping trend line, you're likely going to see a move down towards 205 to 200.
Okay, so right now we're holding it, but if, then we get into some trouble. So what's interesting is that it seems if we break to the downside, then you open up that trap door in a pretty big way. But even if we stay within this pattern that you've got,
That's
there's some pretty big
235.
upside too, potentially, even just to stay in the pattern. So should we just be like trading vol on this, or is that risky with Tesla where there's pretty much high implied vol all the time?
Yeah, and I think that's the biggest risk here is that there's that high volatility potential. For instance, if let's just say they do surprise and the bear flag doesn't play out, the upside is to about 239, which would be basically the gap fill from when it dropped on that robo-taxi unveiling, really where the bear flag started. So it is a risky play here. There's no doubt about it. Probability slightly favors that downside move. Personally, am I going to jump in on this? I'm going to stay on the sidelines. I don't like that much risk. Like you're saying, it is very, very risky. But again, it would favor the downside based on pure probability.
Okay. Okay, I like that description. Now, GM, which actually is inferior in its car fundamentals when it comes to like margins and stuff, at least it's a very straightforward company, and the market seems to like that more than trying to figure out robo-taxi timelines and such. But it hasn't been able to crack this $50 level. Gareth, what's up with that?
Yeah, and you're right. That's been a great resistance level. It aligns perfectly with this even number on GM. And I would continue to look for that to be major resistance. And as long as it doesn't get through that level, you would favor that downside to that lower trend line that you can see on the screen there, which would be right around that $44, $45 zone. So again, this would favor the downside here. We can see that in general, GM's performed relatively well compared to some of the other automakers like Ford. But the question is, can that continue? And we're going to see later this week whether or not they have the numbers to back up the recent move up, which again, it's gone from about $26 a share that was back in November of 2023. So basically 1 year ago, it's almost doubled. In fact, it has doubled in price, but they're going to have to back it up. And right here, you have to respect resistance until proven otherwise. So as long as it stays below 50, it's a sell short here.
Okay. And then it's kind of in some ways like the Tesla chart, but instead of a downtrend kind of being the dominant situation, you've got more of an uptrend. So are you in the same way that if Tesla, slips out of it, we break out big to the downside? If GM does get through 50, is it worth chasing for a breakout?
I actually think it is. In that situation, it would be a multi-hit breakout. So you can see how many times you hit that upper trend line there. What that tells us is that if it finally gets through, it's almost like a jailbreak where everything just rushes through that open, like a dam breaking, all the water rushes through, and you'd likely see a move up. My guess is towards 55 to the upside. So again, in this situation, if you did go short, you would want to use a tight stop there. If it gets above 50, you stop out, take a small loss, and you look for that move to the upside, maybe even flipping it around into a long trade.
Okay. And I guess in some ways, Tesla still has got those higher lows, so you should be careful. Maybe not technically a downtrend, but just more kind of stuck on the upside.
Yeah, and one of the tricky things with Tesla too is that you have the earnings report, and then you also have any comments from Elon Musk that can come afterwards. So if you get a move on earnings, and then he decides to say something very engaging to the audience, the investor audience, it could totally change the after hours. And so as you were saying, Tesla definitely carries a lot more risk. If I'm a trader of Tesla in general, I'm doing smaller share size because it's a much larger volatile move that should be expected.
Okay. This week on earnings, you're also watching T-Mobile. Let's talk about it for a sec. This thing is gone ballistic, and that's after already being a pretty good trade in the last couple of years relative to its competitors.
Randy, we're at 200, we're at the 50.
Or you're going to fade it?
No, this one to me, actually, of all three that we've talked about, this is the one where I would favor the downside the most. And if you look at this volatile move, it is just so engaging to the upside. It's had so much upside. If you even look over the last couple weeks, it's been vertical to the upside. And so these type of moves, essentially what it's doing is investors are pricing in a beat on earnings and revenue and solid guidance. And so it now has to not only beat earnings, basically beat revenue, but also raise guidance. And if it doesn't raise guidance enough, there's this downside sell the news impact, right? So it's very much like Apple debuting a new iPhone. Everyone's expecting so much that it opens the door much, much wider that they might disappoint. And even if they do beat, the price of the stock is already reflecting that, and you'll see us sell the news as well. So I would favor, again, off this 224, 223 level, a move back down to maybe about the 208 level on earnings or the day after earnings.
All right, bold, going after a flyer, taking a shot. I like it. Hey, Garrett, there's tradition. Give me your 40-second Bitcoin take here. Was the breakout real, or are we just testing it still?
So I think the breakout was done to kind of lure people into the long side. Now, as we know, these algos love to mess around with people, so they coaxed people in on the breakout above 68. Now they're going to flush them out back to about 65, and then I think you take that and you buy that 65 pullback. So again, the market is like this, right? It tries to get the most people on one side and then flush them out, and then the most people on the other side. So it's going to make us doubt a pullback or the fact that it was a breakout by pulling back here over the next few days. I think you actually lean into that and buy Bitcoin here for a breakout of the parallel channel. But again, don't be surprised if it flips back to about 65,000 first before that next move up.
All right, fun one. Okay, thanks, Garrett.
Thank you so much.
Chart, 5-minute drill there. Chief Market Strategist and Verified Investing. Let's look at options flows coming up next. Checking out the gamma levels for this week. Shane Skinner joins us from the trader desk for a look at what could be on the table this week if stocks don't break down.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips.
Boy, that looks awful nice.
Themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Randy.
Welcome back to Market On Close. Time for some options. Shane Skinner joins us, manager of trader services at Charles Schwab & Co. That means he's on the trader desk and got his eyes on some flows here. Shane, welcome back.
60, 55, 60 cents.
A little bit, but not too much. I mean, like, did anything really break down today at any of the positioning with this little dip?
No. Today was expected to sort of be a sideways, drop 0.25%, maybe rise 0.25%. We've got a pretty big point of control level today at 58.40. We've been seeing 58.30 to 58.40 is sort of acting as this sticky area where the market seems to be happy staying in for the time being. In terms of the rest of the day going forward, your worst case scenario downside, we might go test that 25 level again. Upside, they might try to take this thing to 70, have a lot of time left. And again, this 58.40, 58.50 level has just been a dog today. I would say we're probably going to stay within, 10, 15 points of this point of control there in the middle, most likely going into the close here.
So a little bit of pinning going on here. Take me through each section that you're looking at here. This is just the 5-day chart, but we're zoomed into Monday, Tuesday, so we're on a 5-minute time frame zoomed in here. Take me through the levels.
Yeah. So right now, today, like we said, those levels we just went over, that's sort of your expected range for the remainder of the day. On the week, We see a pretty solid upside target of 5,900, quite a bit of activity going on there in Friday's expiration. It appears that about 5,800 is sort of your downside as well. I'm leaning towards upside. I don't think anything's going on in the market this week that should spook it. You know, we don't have a ton of earnings.
War.
There's not really much stuff
Election.
going on with the Fed or just sort of at that level. And, you know, as we see here, looking at this other chart, SPX game exposure profile for Bloomberg there, 5840, 5850 seems to be this sweet spot that we've been stuck in all day. So I think that'll hold. This sort of appears to be the point of control level for Friday as well. So don't be surprised if this week we hang out a ton in here, maybe trace down to 5825, 5800. But if that holds, it really seems like your 5,900 is your true upside. 5,800 is a strong support level. If that gives, you might give another 50 down to 5,750 by Friday. But also looking at positioning in VIX this week for Wednesday's expiration, we're not seeing a ton of action to the top side, like past 20-ish. So, you know, 20 to 22 seems to be like where VIX will be contained at this week going into Wednesday to the upside. Downside, it seems like 15 serves as some support. So the profile we've got here with VIX is kind of aligning with the action we're seeing today. You know, like it doesn't seem like VIX is going to do much movement this week, at least going into that Wednesday expiration. To me, that means the next day or two in trading in SPX is probably going to be relatively flat, not a ton of volatility. And then once this VIX expiration ends Wednesday morning, sort of unwinds, opens up, and we'll likely see, you know, Friday's expiration for SPX start to really take hold. And, you know, like we said, that 5,900 level really seems doable by the end of this week. Just, you know, a matter of, are there any major unexpected announcements or news that, you know, sort of shift the landscape at this time?
Really love the visuals here, particularly for VIX too, just because it's been really sticky time, no matter where stocks go. We've been talking about that now for weeks. It backed away from 20, arguably as some of the betting markets solidified around November, but that's very much up for debate. But the move still is only basically from like low 20s, 20 down to 18.5. So it's interesting to see how much open interest is down there. 15. I know there's a good bit as well to the upside too, but like at 20, we've been there, so I could get that. You know, we were there like a week and a half ago. More interesting to me is that there's so much interest down there at 15, where it's people are really trying to position for a little bit of a melt up in price, melt down in vol, it seems.
Right, and so that's where looking at VIX paired with SPX positioning can give you a much better idea on sort of what movement seems, you know, even possible or logical. If you're looking for a move in the S&P that would really mess with the structure of VIX, you probably won't get it. And so using the VIX, we can, in a way, kind of see, okay, what kind of a move is even, you know, possible or likely based on positioning in vol. And then, you know, you turn around and you go look at positioning in SPX, see where we're at relative to, you know, that 5,900 level or the 5,750. And then based on, you know, the movement that would occur to get you to that level, you can see, okay, what effect would that have roughly on the VIX? And so a movement to 5,900 would probably take VIX down towards 15, 16, right? A movement towards 5750, likely, you know, VIX catches a bid and moves up to the 20 to 22 range. So a very useful tool to analyze both together to get a more broader picture of, you know, the S&P itself.
Yeah, okay, I like that. Good stuff, good look there, good perspective. Like the VIX combined with S&P, open interest, helpful for us. Thanks, Shane. Good prep for the week there. Nice work. Coming up, let's talk some more bonds. Let's trade some commodities. Scott Barrett joins us to kick off the week as we look outside equities for some action. Then developing story, consumer stock that's more than 15% off of highs, VFC, with another negative no doubt.
How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends?
All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Let's talk some commodities here. The highlight last week was silver's breakout, gold's continued strength. Scott Bauer joins us from the Trading Academy. Maybe a little bit of a catch with bonds getting wrecked today. Let's set the stage there. Scott, give me your thoughts on what I think is the story of the day on kind of a quiet day, which is the Treasury market selling off.
It should be the story of the day. Look at the 10-year. When we see moves like this, not very often. It is so incredibly volatile. I mean, we're up 60 basis points basically from right before when the Fed, announced that cut. We're up 20 or 25 basis points just over the last week and a half or so, and yet the markets are still hanging in here. So what is the bond market trying to tell us right here? Personally, I think this move higher in yields and the sell-off that we've seen in bonds is happening way too quickly. I mean, if I look at, the odds of the November meeting and what the cut may be, it's still almost a 95% probability of a 25 basis point cut. So yes, 50 might be off the table, but, at least the market is still pricing in a cut in November, most likely a cut in December. So I'm not sure, what is with this move here. Definitely something to watch out for, though.
Yeah, the story today, too, is kind of absent. Not a lot of, catalysts. Maybe some of the commentary from Kashkari. Do you think if that's the case, then other Feds speak if they don't sound hyper-dovish? Could that potentially disrupt some of the expectations for this year's Fed cuts?
It absolutely could, and there's a lot of Fed heads speaking this week. I would take that, a little bit with a grain of salt here. And again, I think this move is way too severe, way too quickly, and I'm fading this move, to be honest with you.
Buying a little TLT, what's the approach?
You are TLT, and then there's another one. There's an ultra bull 20-year called TMF as well. I'm long and bull.
All right, there it is. Okay, so then if we fade the bond move, should we then also assume that some of the other trends lock back in, strengthen gold, and some of the commodity participation we've seen broaden out a bit?
Well, we have seen such a massive disconnect between moves in commodities and moves in the overall market, whether it's the bond market, the equity market. It's really been a head scratcher, and I think that a trend is really difficult to make here, especially with gold, especially with silver, other than by the dip. You and I have talked about this for a while here.
What?
I have not bought into the rallies, but I have talked about buying on any dips here, and I think that is absolutely still in play until that stops. And at some point that will stop, but Oliver, come on, you go back and look in history, and you know this better than anybody. When have you ever seen a rally like we have seen with equities at all-time highs?
Yeah, it's pretty
Never.
impressive. Gold's just been basically unstoppable.
Nobody believes me.
Silver rocking though, getting another 2%. I mean, if anyone thought that move was toast, seems like they got to think again. Are these now going to be in tandem, locked together? You think?
Oh boy,
Nobody
they sure look like
believes
they are.
me.
And these are moves that I don't want to fade, much like I am in the bond market. These are moves I don't want to fade and just want to take advantage right now of any dips. But yeah, they are lockstep. And I think we may get a whole new narrative, though, once the election is over.
Oh, yeah.
Not that the outcome is really going to make that big of a
Big a difference?
quite
That's
frankly,
true.
into where commodities are going to be priced. Not that one platform is really that different from the other, but I think once that uncertainty is behind us, I think we're going to see things moderate quite a bit.
Yep.
Okay. All right. Like it. Think it's a very fair analysis. Like the fade in the yield move, little TLT action, and a little
save.
Yeah, Ultra Bull.
Doesn't
action.
matter.
Thanks, Scott.
He's 100% right.
Oliver, thank you.
Absolutely, Mr. Bauer, CEO, Prosper Trading Academy. Let's get that developing story on the retail side. Another rough session for VF Corp. Negative catalyst watch. Jenny Horn in the newsroom with the analysis from JP Morgan. What are they saying, Jenny?
They're not saying anything optimistic, Oliver. I think you could say it's not much of a surprise when you see something like the headline negative catalyst watch, but earnings do arrive next week. JP Morgan analysts are definitely not optimistic as we go into that print Monday after the closing bell. Now, analysts did place, like I said, shares on a negative catalyst watch, citing downside risk to consensus estimates for the second quarter as well as fiscal 2025. They did also cut their earnings per share estimates for several time frames. The team does rate overall shares at neutral with a price target of around 16. So they did say there's several concerns, including challenges for the top line. Management has clarified that second quarter guide for sequential revenue improvement was relative to 10% in terms of a revenue drop in their first quarter, which was a larger decline than had been previously reported. They also did forecast, or they do forecast, an 8% drop in terms of revenue, which is slightly worse than the 7% drop that the street is right now is pricing in. So there's still these wholesale issues they mentioned actually in their North Face brand, while management did cite some reluctance overall from retail partners to take on inventory risk early as a result of the warmer start to the fall and winter seasons last year. So there's a lot of things you could read negatively about this report. I think it's interesting, frankly, the way the company now is more exposed internationally than it's ever been. Well, North America continues to be a pretty big laggard for their revenue. Actually, they've been doing quite well overseas, but I was trying to figure out what brand is like the weakest spot, and to my dismay, in the last several earnings periods, it's actually been Vans, which is my favorite of all of their brands. So I'm upset to see that Vans has been a point of contracting growth and continues to weigh, honestly, on their overall top line.
Okay, down 8%. This is now after a pretty good run, but when you zoom out, a company that still seems like it's in a world of competitive difficulty over the last 3 years. So I'm kind of sympathetic to the notion of the commentary here that it might be time to kind of reset the situation, because $11 to affect 20 is a pretty big move, and then obviously $80 in 21 down to 11 was a massive one. So it seems like you got a lot of overhead selling pressure that will likely show up. So, all right, thanks for that. Appreciate it. Big decliner on the day. Coming back, we got our Schwab Big Picture panel. We're going to talk about the session and look forward to this week too. Chat a little bit more about what happened in the Treasury market as our highlight of the day. We're also now down 1.5%. The Nasdaq still has a chance to go green, and Nvidia's got a real good day going here, up $4.50 to an all-time high.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Yeah.
All right, time for a big picture discussion. Joining me, Colin Marr is the Director of Fixed Income Strategy at Schwab Center for Financial Research, and Michelle Gibby is Director of International Research at Charles Schwab. Afternoon, guys. Colin, let's knock out the big stuff first. We've been talking bonds this afternoon. What do you make of the sell-off in Treasuries?
Yeah, it's a pretty big move, Oliver, and frankly a bit surprising, because on a day with very little economic data, we got a few comments from Fed officials, but nothing that's too off of what we heard recently about maybe the need to slow down the potential pace of rate cuts, or the idea of taking a more data-dependent approach. But that's in line with our thinking. But to see the moves we've seen has been interesting. The 10-year Treasury yield up almost 10 basis points on a day with very little economic data, a non-Fed meeting. We have to go back to the strong jobs report or Fed meetings before we see things of that magnitude. As we stand here today, though, at almost 4.2% of the 10-year, we've been in the camp that upside is likely limited. If we look at our outlook now and how high can long-term yields go, the premise would need to be that inflation will actually start reaccelerating from here. The growth we're seeing will stay as strong as it is, or maybe even reaccelerate. And we struggle coming up with situations where we get that reacceleration. Even though we got a strong labor market report at the end of September, or for September rather, we struggle to find examples or drivers that are going to see an uptick in activity as opposed to just kind of maintaining while inflation comes down a little bit. So we'll probably see Treasury yields remain choppy for a little bit. Maybe use these opportunities as potential buying opportunities for investors who maybe have been waiting to take advantage. Now they're seeing yields that they haven't seen for the past 2 or 3 months. But we don't think we'll see a sustained uptick in Treasury yields from here.
What might be some of those scenarios that could do that, Colin, as we have reclaimed basically all the lost ground in yields from July going into the Fed cut, the fact that the yields bottomed out with that cut, and then the economic data beating suggests, maybe we should be talking reflation again. Is there a possibility that this goes into another tier of like inflation concern rather than economic reprieve?
When we look at inflation expectations, they're still relatively muted, whether it's survey-based, like the University of Michigan, or market-based in the TIPS market. We're not seeing signs of concern about an uptick in inflation from here. But I think we do need to acknowledge that this cycle has been really interesting, and it's kind of bucked the trends that we would have expected. Going back a couple of years ago when we saw such an aggressive pace of rate hikes, all the things that we thought would have happened didn't really come to fruition. We saw some pockets of weakness here and there, but for the most part, 2 years later, the market or the economy is relatively unscathed. So maybe we need to rethink our assumptions a little bit, and maybe the economy is on much more solid footing than we expected. Maybe that weakening of the labor market that we saw a few months ago is actually in the past, and maybe the labor market strengthens from here, given those revisions we saw to GDP and GDI, given the strong corporate landscape with corporate profits at making new all-time highs pretty much every quarter. Now again, that's not our base case, but I think if you're asking what could lead to that move higher in yields, is that The neutral rate is probably a little bit higher. The level of restriction that we think we're in, given the sharp increase in rate hikes, maybe isn't as restrictive as a lot of people thought. But again, that's not our base case right now. We do think things should moderate a little bit from here.
Michelle, I wonder where the international conversation fits into it, because last week we got another cut from the ECB. It just does seem like there is a case still for dollar strength when every move for our Fed seems to be a much more difficult discussion than most of the other central banks.
Yeah, I would say outside of the U.S., the easing cycle continues to pick up steam. We have the Bank of Canada this week. They'll be we're expected to cut rates for the 4th straight meeting. Potential for a 50 basis point cut is possible. And we had New Zealand cut by 50 basis points this month, and could cut another 50 in November. Sweden said they could cut by 50 at a future meeting, and even some talk the ECB could cut by 50 basis points at an upcoming meeting. So this, faster pace of cuts outside the U.S. and, potentially slower rate cuts in the U.S. Has, resulted in the dollar rising. I think it's a little extended though. So it might just be a near-term move. We could see some volatility. Rising volatility in currencies may not be a good thing though for corporate earnings.
The other thing too I see is that the Japanese yen, for all the talk about its potential, just was swiftly rejected this last month and a half throughout that. So it seems like anytime we start to think that another central bank might be driving the action, it just comes back to the U.S.
It's pretty surprising to see dollar yen at 150 again. I would say that in terms of the Bank of Japan, they have a rate meeting next week on the 31st, and they're probably not going to hike. Inflation actually cooled a little bit.
Things are coming back.
And they also actually have a general election this weekend, and it could be very close. And so there's some concern that potentially that might push out a rate hike to the future.
Okay. Appreciate that perspective like that. Thanks, guys. Colin Martin, Michelle Gibley. Good 1-2 punch there on the action today, and looking at how it fits into the rest of the world. We got a closers panel coming up. We'll talk about 2 things that worked in today's section. One of them showing up in the NASDAQ, that is a 4% rally in NVIDIA. And we'll also look at Boeing too, which managed to find some buyers today.
Oh, it did? Bam! Nice close. Definitely a nice close today. All I had to do is wait all day long, sit here and wait until the end of the day, and then bam, bam, bam. So I appreciate that. After sitting here all day, scalping in and out. Well, okay. Let's have fun tomorrow. A belch.